Right. Good morning. So in the previous session, we have successfully completed the time of supply chapter, and before that, we are done with one more important concept, which was tax invoice, debit, and credit notes. So talking about in the immediately two preceding chapters, the content we have discussed. So when it comes to the tax invoice, debit note, and credit notes chapter, there we have seen as a part of this entire GST system, what are the various important documents which are getting created, and when which document will be issued, what role does each of this document play in the GST ecosystem, so that we have understood. Thereafter, we have started discussing the time of supply chapter. So what is this time of supply chapter is talking about is when the liability to pay the GST arises. When a supply has taken place, associated with that supply, multiple things will happen. On some date we receive payment, on some date we receive invoice, on some date we provide goods or services. So but when actually the liability to pay the GST arises, that's what has been clarified under the chapter time of supply. Now comes the next part, which is going to be input tax credit. ITC, one of the most important chapter. Conceptually also it's going to be very important, and practically also it's going to be very important concept. This is where 90% of the cases are going to be addressed before the GST forums. That could be assessing officer, that could be courts and tribunals. If you look at the GST cases which are going on, or which are currently GST assessments, whatever are happening in this in our country, 90% of the cases will be associated with input tax credits only. So such a important role ITC will play, such an important area where people are trying to commit so many things here. So that's why this concept is going to be very important. Both from the practical perspective, it's going to be very important if you are able to master in this input tax credit, and if you have a intention of practicing in the indirect taxes, that going to be very lucrative area. And exclusively on input tax credit, we have this much bigger modules. We have only talking about input tax credit, we have 500-600 pages of the professional books which are written on input tax credit on various aspects. Just go and visit the website called Taxman. So Taxman is a book, Taxman is a place where we get all the professional books associated with, for us, chartered accountants and all. So just if you go and visit there, in the indirect taxes section, you will find professional modules. Professionally, for your practice, for your practical knowledge and all, we will have different authors who have written different modules on the indirect taxes. In that you will find exclusively some authors who have done extensive work only on the input tax credit, where they have written thousands of pages of the content talking about input tax credit only. So many assessments, many cases, many litigations, everything is revolving around this concept called input tax credit. And we are going to cover various aspects associated with that input tax credit. And as a part of this chapter also, we are going to cover 3 sections of the CGST Act. And those 3 sections which we are going to cover are, one is section number 16, then we have section number 17, and then we have section number 18. So 3 sections we have. What are the 3 sections of the CGST Act which we are going to cover as a part of this chapter? Section number 16, section number 17, and section number 18. So these are 3 sections we are going to cover as a part of this discussion. So we'll try to pick up one section each at a time. We have various subsections, a lot of things we are required to discuss. All that we'll try to cover it. Now, but before that, sir, what exactly is this concept of this input tax credit? What exactly is the concept of input tax credit? So the first time we coined, if you remember the previous discussion, whatever we had, the first time we have coined the term is when we are discussing the chapter Introduction to the GST. So as a part of that introduction to the GST, we have understood some essential characteristics of the GST system in India, where first and foremost character what I have explained for this GST is such a tax where burden is going to be borne by the final consumer. Whoever is the final consumer, he has to face the heat of the taxes. The entire burden of GST has to be on the ultimate consumer, final consumer, whoever is consuming the product, the end user. He has to face the heat of the taxes. Sir, in a transaction chain, this is not something where a person will manufacture something directly, it will reach the consumer, but this entire supply chain in between, so many middlemen will be there. So first we will start with manufacturer. Like I have given you the example, once again I'm taking you back to the example. There will be something called manufacturer who will make the product actually. Then it will come to wholesaler. Thereafter from the wholesaler he will come to the retailer. From the retailer you are going to go and consume. You are going to be the end consumer. This is from the goods perspective. Sir, if a goods has to reach from their origin to the end consumer, it is not just going through one hand, sir. It is changing multiple hands. So many people are associated with that supply chain. But you are saying in this entire supply chain, whoever is the ultimate consumer, he has to face the heat of the taxes. But with these many middlemen involved, how you are going to make sure that will happen? So we can make sure that this is going to happen with a concept called input tax credit, where if you are a person who has purchased some goods, you have purchased some services, you have purchased some capital goods, and you are not the ultimate consumer. Now let me put it this way: if you are also a registered person, if you are also a person registered under GST, so let us say I'm a wholesaler, so I'm purchasing some goods, I'm purchasing some services, I'm purchasing some capital goods. And why I'm purchasing that capital goods is, since I'm a GST registered person, my whole objective of purchasing the goods, my whole objective of purchasing the services, my whole objective of receiving the capital goods is not that I'm going to make ultimate use of it. I'm going to use them in the course of my business, and using that I'm providing some outward supply. So if you are a registered person and you are receiving the goods, you are receiving the services, you are receiving capital goods for making your outward supply, you should not bear the heat of the taxes. Definitely on your inputs you would have paid the GST, but you are not the person who are supposed to bond the amount of, you are supposed to bear the amount of GST. So what GST department has told, okay boss, no issue, whatever input you have paid, whatever input that you have paid on your inwards, all that I am going to give it as a input tax credit. I will give it to you as credit, I will give it back to you. So that mechanism we are going to call it as input tax credit mechanism. So I've already told you how this is going to work out. What did I say? Whatever GST that you have paid on your inputs, that will be given as credit to you. That will be given as what? Credit to you. So we will have a wallet kind of thing. GST department will maintain a wallet, which we generally call it as electronic credit ledger. What do we call it? Electronic credit ledger. So like this, one ledger will be maintained in our name by the GST department. And if we are a registered person and we are not the final consumer, whatever GST that you have paid on our input services and capital goods, so that I can take it as a credit, that they will credit it to my wallet. And what I can use that money for? I can use that money for discharging my output tax liability. Clear everybody? So it is simply like a, let us say some e-commerce, some website has given you one option. Boss, every time you purchase, I will give you some reward points, I will give you some cash back. That cash back will be remaining in your wallet. Next time when you are making the purchase, you can adjust that cash back already, whatever is credited to your account, instead of making the payment from your bank account once again. So like that, GST department has also brought one mechanism. That mechanism we are going to call it as input tax credit. See, but before we understand this input tax credit, we are required to get clear about certain terms. Okay, number one, first one, inputs. First one is what? Inputs. There are three terms actually. One is inputs, input services, and capital goods. These three are the terms which are very frequently used. So one is what? Inputs. Other one is what? Input services. Other one is what? Capital goods. Sir, what is this input? Input means basically whatever goods you are purchasing for your business purposes, apart from plant and machinery, apart from the capital goods. Okay, so let us say for example, if I'm a manufacturer, of computers, mobile devices, etc. Now as a manufacturer, I will purchase raw material. No, let us say for example, I need some chips. I have purchased the chips. I need glass for the purpose of manufacturing. I need some metal. Let us say, for example, I am using some titanium metal. And also, I need some aluminium. I need some other camera lens. So I am a manufacturer of the mobile phones and I'm purchasing all these goods. It's not my machinery or something. So this is what? This is a good. So what is a good? Chips are goods here, glasses are goods here, titanium or steel, that metal is goods here, camera lens is goods here. All that I have purchased. Why? So all that I am going to assemble it in the form of one mobile phone, and that I am going to sell it. So now for this manufacturer, all these things are going to become as inputs. Now from this manufacturer, wholesaler is there. Now what is the business of the wholesaler? He will purchase that goods from manufacturer, and that goods he will resell it. For that goods he will resell it. So now for that wholesaler, whatever mobiles that have been purchased, that will become his inputs. That will become his what? Inputs. So that is what the meaning of inputs. So for manufacturer, raw material could be an input. For a trader, a finished good can be an input. So whatever it is, depending on the nature of the business. Then, sir, what are input services? The services whatever you are receiving for the purpose of your business. Let us say this manufacturer, if he wants to do the manufacturing, he need the services of some design expert. They have recruited some designing company who will do the design of the product. So this company is receiving input services. That design will become input services. They are receiving electrical services. In order to run their factory, they need their electricity. So that becomes their input services. In order to sell their products, they are receiving the services of a digital marketing company who will do their advertising and marketing for them, market their products. That is an input service for them. So all these are input services which are used by the manufacturer in order to make his outward supplies. Similarly, if you take the wholesaler, for this wholesaler, in order to, for example, this wholesaler is running a shop. For that shop, electricity is needed. That is an input service for him. Or for that shop, let us say, for example, for that shop, housekeeping services are required. Retailer store is there, wholesaler store is there. Now that cleaning, security services he want, that becomes an input service for him. So whatever services that you are receiving for your business, that we call it as input services. Then capital goods we have. Sir, what are capital goods? Basically, whatever as we know the definition of the capital goods and all, which we are going to use it for the long run, not for as it is selling it. Okay. So let us say, for example, this manufacturer, he purchased some trucks. He purchased some trucks for the purpose of manufacturing, for the purpose of transportation of the products and all. So now truck is not for the purpose of selling it. So truck is for the purpose of using it in the business for a long run. So now this truck will become a capital good for the manufacturer. Now this wholesaler, in his wholesale store, he is using some computer for the purpose of his business. That computer will become the capital goods for him. Okay. Or this person is using some plant and machinery for the purpose of manufacturing. That plant and machinery will become the capital goods for him. Now let us say, for example, for Ashok Leyland, what will a truck become? Truck will become goods for them. Why? Because Ashok Leyland is into the business of selling trucks only. So it depends. Sir, you said truck is a capital good. No, I did not say truck is always a capital good. I told that truck is a capital goods for a manufacturing company. For a nature, depends on the nature of the business. Okay. So like that, inputs, input services, capital goods. Generally, all these three put together, we are going to call them as inward supplies or input supplies, we call them, which includes inputs also, which includes input services also, which includes capital goods also. Able to understand? So while we have purchased inputs, while we have received input services, while we have purchased the capital goods, on that we would have paid the GST. That we are going to call it as input tax. That we are going to call it as what? Input tax. And whatever tax that we have paid on our inward supplies, if we are taking that as a credit, if we are availing a credit of that, that becomes an input tax credit. That becomes a what? Input tax credit. Able to understand? So when I say input tax credit, that credit could be on inputs, input services, or capital goods. All put together, whatever credit we have, that we are going to call it as input tax credit. Clear, everybody? Able to understand? Right. So now we are going to see, if you are buying some goods and services, you can take input tax credit. That's what I have told. But taking that input tax credit is not that easy. You are required to comply with some various conditions. So what are all the conditions which I am required to fulfill in order to avail that input tax credit? That's what we are going to learn it. And in some cases, I purchase some goods, I purchase some services, I'm using it for my business only, but in some cases ITC will be blocked. I will not be permitted to take ITC. So department told, we will not let you take the input tax credit on certain goods and services, even though you have purchased it in the course of your business, even though you are using it, even though you are not the ultimate consumer, still on some goods, still on some services, we will not let you take the input tax credit. That I call it as blocked credit, I call it. So what is that blocked credit? That provisions we are required to understand it. There are some special circumstances where the government will give you input tax credit, that we are going to learn it as a part of this chapter. So like that, there are various things associated with this concept of input tax credit. All that related discussion we are going to cover as a part of this chapter. So now with that background in discussion, let us go into this topic. Right. So scheme of ITC at a glance, this you can ignore it for the time being now. Why? Because this will talk about various things. So whatever they have told, whatever at a glance they have told, all that glance related things we are going to cover it in the subsequent sections. So leave that scheme at a glance. Why? Because anyhow we are going to have an understanding in a detailed manner. So first we will try to talk about section number 16. So what does section number 16 talk about? Eligibility and conditions for taking input tax credit. Very, very important section. So what is section number 16 talking about? Eligibility and conditions for taking input tax credit. First, so it is going to talk about two aspects. Number one, who is eligible to take the input tax credit? And even in that eligible person also, in order to take the input tax credit, what and all conditions he is required to fulfill? Two things. Number one, who is eligible? But just becoming eligible alone will not be enough. Even after becoming eligible, you are required to comply with some conditions. Then only you will be eligible to take the input tax credit. Let us say who are they? So first, 16 subsection 1, it is talking about eligibility. Sir, who is eligible for taking input tax credit? So they say that registration, or let me read the provision first. They say every registered person is entitled to take input tax credit on inward supply of goods or services, subject to section 49 provisions and conditions or restrictions in these rules. So what they are trying to say, who is eligible? They are saying every registered person. That means condition number 1, eligibility. In order to become eligible, you must be a registered person. So you should have taken the registration under GST Act. Unless and until you are a registered person, you will not become eligible for GST input tax credit. Let us say, for example, there is a FMCG company. Okay, there is a FMCG company, Hindustan Unilever Limited. Okay, so now this is a manufacturer which is manufacturing various FMCG products. Now there are various wholesalers. Wholesalers also will be big people who would have taken the registration. Now let us say, for example, from this wholesaler, various retailers will try to purchase the goods and services. Now some retailers are very big. Let us take supermarkets. These are all very big supermarkets. They have aggregate turnover exceeding the applicable threshold limit. They will take the registration. But if you find even in your local areas also, wherever you stay also, small kirana and general stores will be there. There also FMCG product will be sold, but they will not be registered. So let us say, for example, HUL is a manufacturer. That manufacturer has sold some goods to wholesaler. Now from the wholesaler, a retailer will buy the goods. From the retailer, who will buy the goods? Ultimate end consumer, you will buy the goods. So manufacturer is a registered person, wholesaler is a registered person. He will charge the GST to the wholesaler. Now the wholesaler can take the input tax credit. Why? Because both are registered person. Now from the wholesaler, retailer also will buy the purchase, will do the purchase. Let us say, for example, here the retailer is small kirana store or general store which is located at the corner of your street. Very small shop is there. They are not registered person, no. But still what that retailer has done is he has made some purchases from the wholesaler. Let us say 10,000 rupees of purchase he has made. On that GST of 1800 he has paid, 11,800 rupees he has paid. Now retailer, he is unregistered, he is a small person, he does not exceed his aggregate turnover. But here retailer, he is purchasing the goods. Is he the final consumer? He is not the final consumer. Why he is selling? Why he is purchasing it? In order to make a further supply. So end consumers will visit his store. To them he can purchase. To them he can sell. So now you tell me, here retailer is there. Retailer is also not the end consumer, no. Can he take the input tax credit here? He can't take the input tax credit. Why? Because if he has to take the input tax credit, the essential condition is you should be a registered person. Here logic is very simple. This person is not registered person. Even if he takes the ITC, what he will do with that? He will not be able to avail it. No. Why? Because he is not making any outward supply. What is the whole purpose of taking input tax credit? Whatever GST that you have paid on your purchases, on your inputs, that you can take it as credit for discharging your output tax liability. This person will not have any output tax liability. No. Then what is the purpose of taking the input tax credit? Clear, everyone? So condition number 1, eligibility. Who is eligible for availing input tax credit? Every registered person. If you have taken registration, that itself will make you eligible for availing the input tax credit. So every registered person is entitled to take ITC on all your inward supplies. As I have told, when I say inward supply, it could be inputs also, input services also, capital goods also. Subject to section 49 provisions and conditions or restrictions. What are that conditions and restrictions? We'll see later. Yes, if you are a registered person, if you are eligible, you become eligible to take input tax credit, but subject to some conditions. What are those conditions? That we will see. Try to see it later. And one more thing they say. So every registered person is entitled to take ITC on inward supply of goods or services, but the section does not end there. 16 subsection 1 does not end there. Even it says that on goods or services which are used or intended to be used for business purposes. Every registered person is entitled to take input tax credit on inward supplies, but on those goods or services which are used or intended to be used for the purpose of the business. So what is the second eligibility criteria? You on what you can take input tax credit? On inward supplies, agreed, but on those inward supplies which are either used for the purpose of your business or intended to use for the purpose of your business. Let us say, for example, if I'm a manufacturer, so I purchased some raw material, immediately I used it for the manufacturing it and selling it. So here I am purchasing the raw material with the intention of using it in the course of business. Let us say, for example, I'm a manufacturer, I don't have immediate requirement, but prices of my raw materials are falling. I purchased a huge quantity of the raw material and stored it in my warehouse. Here I did not actually use it, but at the time when I have purchased, what is my intention? My intention is to use them for my business purposes. So actual usage is not required. If you have intention to use, that will be enough. What will be enough? If you have intention to use, that will be enough. Why? Because in some circumstances we can't use it immediately. But what is our intention of procuring that goods, services, or input or capital goods? With the intention of using them in the course or furtherance of the business. So actual usage of using for business purposes will not be required. If you have intention to use, that is more than enough. Clear? So that's what they say. ITC is available on goods or services either which are used or intended to be used for business purposes. If you have intention to use, that will be enough. Intention to use the goods or services for business is sufficient for ITC eligibility. If goods and services are not used for intended business purposes, ITC is disallowed. So which means what will happen is, let us say, as a manufacturer, or let me put it this way, I'm a sari retailer. I purchased some 100 saris. How many saris? I purchased 100 saris. Why I have purchased it? Because I wanted to use them. I wanted to store it in my shop, and whenever the customer comes, I will sell them. So since I have an intention to use them in the course of, I will not sell it immediately. 100 saris, I will not be able to sell it immediately. 100 saris, I have brought it to my store. I have an intention to sell them. So on these 100 saris, initially I will be able to take the input tax credit because I have an intention. But thereafter what happened is, I sold some 98 saris, but 2 saris are left out. What happened is, one day my wife visited my store, she liked that 2 saris and she took it away. Business purposes, not for business purposes. So earlier I have purchased even that 2 saris also. I had an intention to use them for the purpose of my business, but later I did not use it for my business purposes. I used it for my personal purposes. Now what will happen is, whatever ITC you have taken, that might be required to be reversed. That will be disallowed. Able to understand? That all mechanism will try to talk about it later, but initially when you have an intention to use the goods for business purposes, that will be enough. That will allow you to take the input tax credit. But later, if you did not fulfill your intentions, if you used it for something else, if you used it for your personal purposes, then ITC will be disallowed. Whatever has been, if it is already allowed, that will be reversed. Clear? Next, if ITC will be credited to the electronic credit ledger. I told you, electronic credit ledger is nothing but a kind of wallet that the department has created in our name. The moment we are registered, they will create this wallet in our name. They will create this ledger in our name, and whatever ITC that we are taking, that will be credited to what? To our electronic credit ledger. Clear? So summary of 16 subsection 1. Who is eligible to take the input tax credit? Every registered person. On what he can take the input tax credit? On goods, services, on inputs, input services or capital goods which are used or intended to be used for business purposes. On that you can avail on that you become eligible for input tax credit. But this two alone will not be enough. You are required to comply with some conditions also. Sir, I am a registered person. I purchased goods, I received services, or I bought capital goods, sir. Why? With the intention of using the business only, sir. But these two alone will not be enough. Even I am required to comply with various conditions also. All that conditions have been given under 16 subsection 2. Let us try to understand what and all are the conditions which I am required to fulfill. Not just being a registered person, not just purchasing goods, services, or capital goods for using them in the course or for with the intention of business purposes will be enough. In addition to that, I am required to comply with various conditions. Sir, what are that conditions? Let us try to understand one by one. First one. So what they are saying, possession of tax paying document. 16 subsection 2 clause A says that if you are a registered person, if you have received goods or services for your business purposes, but still in order to claim the input tax credit, you need to possess one tax paying document. So as a recipient, you should have in your possession what? Some document which will prove that you have actually made the payment of the taxes, or you are liable to make the payment of the taxes. You should contain some tax paying document. Sir, what could be accepted as a tax paying document? So the list has been given here. ITC can be availed on the basis of any of the following documents. Even if you possess any of these documents, on that basis you can avail input tax credit. So what are the documents which are permitted, which I can hold in order to avail input tax credit? Invoice or revised invoice. If you have original invoice, that is also fine. In some circumstances, your supplier will give you revised tax invoice, no, which we have covered in the tax invoice chapter. From the date you become liable for registration till the date you got the registration certificate, whatever supplies you have made, for that you can give a revised tax invoice. Even on that revised tax invoice also, they will show the amount of tax separately. So either you can have a tax invoice or even you can have a revised tax invoice. That can be a valid document on the basis of which you can avail input tax credit. Or invoice issued by the recipient receiving goods or services from unregistered supplier in case of reverse charge. Exactly. 31 subsection 3 clause F. If you are a recipient, liable to pay the amount of GST under reverse charge mechanism. If your supplier is a registered person, he will give invoice. Then you will have a tax paying document. But if your supplier is unregistered person, he will not give you any document. So then on what basis he will be eligible to take input tax credit? That is the whole purpose of keeping that self invoicing. Why? Because 16 subsection 2 clause A has told one of the most important condition, you must possess some tax paying document in order to avail input tax credit. Sir, if the supplier doesn't give issue invoice and I have paid the GST under reverse charge mechanism, I want to take that input tax credit, sir, what document I will have? That is the whole purpose of introducing 31 subsection 3 clause F. If the supplier has not given the invoice, even whatever self invoicing you have done, that also will be a valid document on the basis of which you can take the input tax credit. Next one, debit note. Do you guys remember the discussion regarding debit note, credit note? Why debit note will be given? To charge something extra. So debit note will be equal to the tax invoice. So if you have the debit note, that also can be a valid document on the basis of which you can take the input tax credit. Bill of entry or similar document prescribed under Customs Act. Even imports also will be subjected to IGST. That input tax credit also you can take the credit. But in case of imports, you will not have tax invoice, these kind of things. You will have a document called bill of entry or similar document. If any other document is there, that can also be a valid proof. Or even documents issued by ISD, Input Service Distributor. We will talk about Input Service Distributor at the CA final level. But even if the Input Service Distributor has given you some document, that also can be a valid document on the basis of which you can avail input tax credit. So any of these 5 documents must possess. If you have document by other name apart from this 5, you will not be eligible to take the input tax credit. Can you take input tax credit on the basis of bill of entry? Sorry, not bill of entry. We have this, no, bill of supply. Can you take input tax credit on the basis of bill of supply? No, you can't take it. Why? Because they will not charge any GST, no. So the exempted suppliers are a composition dealer. So that's why if you want to avail input tax credit, number 1 condition, you need to possess some document. You need to possess some tax paying document. And sir, what document it could be? It could be any of these documents. Either it could be an invoice or revised tax invoice, or it could be a self invoicing done by the recipient on the basis of RCM. And if it is a debit note issued by the supplier, or even it could be a bill of entry or other similar document, or even it could be a document issued by the input service distributor. And having this document alone will not be enough. 16 subsection 2 clause A says one more thing. In that document, certain minimum details must be there. So here two conditions actually. Number one, you should have a tax paying document. On that tax paying document, there should be some minimum details. Only when that minimum details are present, that too in the documents whatever they have mentioned above, then only you will become eligible to take the ITC. Sir, what information it should contain? So if you see here, documents based on which ITC is being taken should contain at least the following details. That means in any of the above 5 documents, if you have, in that document the following minimum details must be there to avail input tax credit. What are that? Amount of tax, very important. In that invoice or any other document, the amount of tax should be clearly specified. Description of goods or services. In that document, there should be a clear description of what goods you are receiving, what services you are receiving. Total value of supply of goods or services, total value. Along with that, GSTIN of the supplier and recipient, and place of supply in case of interstate supply. So even place of supply is also required to be mentioned, especially in the case if it is an interstate supply. That means if it is an intrastate supply. So indirect provision is what? If it is an intrastate supply, even if it does not contain the place of supply also, still you can avail input tax credit. So what are the 5 minimum details which must be there in the tax paying document? Number 1, amount of tax, description of goods or services, total value of supply of goods and or services, GSTN of supplier and recipient, and place of supply in case of interstate supply. Next, no ITC paid towards demands involving fraud. If you have committed a fraud and if you are caught committing a fraud and after getting caught you have paid the amount of GST, that GST can't be allowed as input tax credit, but there was a recent amendment in this area. Anyhow, this will get covered later. This you ignore it. This you try to ignore it. We have a recent amendment regarding this. So subsequently in the subsequent discussion, the same chapter will try to come across. What about the GST paid in cases of fraud and all? I'll try to explain to you later. So but whatever it is, 16 subsection 2 clause A. What is the first condition? You must be in possession of some tax paying document which should contain the minimum details. If that thing is there, if you have in your possession some tax paying document, well and good, and containing this file and containing these minimum details, well and good, you can avail the input tax credit. Okay, next one. Next condition, one more condition which is required to be fulfilled. So now the next clause we have 16 subsection 2 clause A. So do you guys remember the returns discussion, whatever I told? Returns. So there will be GSTR 1 where you will declare your outward supplies, and if you have filed your GSTR 1 and if you forgot something, you can file GSTR 1A. You can amend your GSTR 1 before filing GSTR 3B with GSTR 1A. It is an option given to update the GSTR 1. And one more thing, before that I would like to explain one more thing here. See, if you are a registered person, either you would have opted for composition scheme or you have opted for regular person. That means you haven't opted for composition scheme. If you are a composition dealer, there is no requirement of a monthly return and all. You are required to file only one return per annum, GSTR 4, and quarterly tax payments you have to make. Tax payments, not returns. But if you are a regular registered person, there will be 2 more categorizations here. Either you could be a monthly return filer. There will be few people who will file returns every month. There will be some small registered persons who can exercise an option for quarterly return filing, where you will file quarterly every return. Okay. So now these monthly return filers, they will file something called GSTR 1 each and every month, where they will declare their outward supplies. If it is a quarterly return filer, once in every quarter they will file GSTR 1. Let us say for example April, May, June. Every month, if you are a monthly return filer, so let us say if you are a monthly return filer for the month of April, so there is some supplier, he has filed his GSTR 1. So in his GSTR 1, all the B2B outward supplies and all B2C he will declare. Now what will happen? Whoever his recipients are there, that data will get reflected in the GSTR 2B. Whatever purchases they have made in the month of April, generally these returns will get filed in the month of May. So in May, even this recipient also can see, their recipients also can see how much ITC has been, how much ITC they are eligible for. So this is what will happen in the case of monthly return filers. But in case of quarterly return filers, they are not required to file every month returns. Now what will happen in the quarterly return filer? What will happen is April to June, there is a supplier, Mr. A, who has opted for quarterly return filing. Now let us say he is filing his quarterly return on 11th of July. After the end of the quarter, he will file the GSTR1. That means for the entire quarter, whatever supplies he has made, that will get reflected only, that will be declared only on 11th of July. That means that credit also will get reflected when? Only on 11th of July to his recipients, whatever supplies he has made in this 3 months of time. So on that, whatever GST that has paid, that has to be reflected in the recipient's GSTR2B, no? But since he did not file April, May, June month GSTR1, he is filing for all the 3 months put together. It will get reflected only in the July month. Yes or no? So that's why the people who are buying from them, the people who are buying from these registered persons who have opted for quarterly return filing, they face trouble. Why? Because if they might have made a purchase in May, but in the month of May, when they check that GSTR2B, no data will be reflected. If the no data is reflected, they will not be able to take ITC. If they are unable to take input tax credit, they have to pay their own cash. So that will be a trouble for recipients or not. See, supplier will be happy. He need not file return every month. He will be very happy. He will file return only once in a quarter. Once in 3 months he will file. But what about the people who have made the purchase in the first 2 months of the quarter? They will not be able to get their ITC. That means if that will not get reflected in the GSTR2B. If it is not reflected, what will happen? They has to make a payment in cash. That will be a working capital burden. So that's why what they have done is, so generally when it comes to quarterly return filer, they will file their GSTR1 only once in every quarter. But in the first 2 months, what they can do is, they have given them one option called IFF, Invoice Furnishing Facility. They have given one option called what? IFF. Listen carefully. More we will discuss in returns, but here at various places they will try to, you will come across these terms. That's why I'm telling you now. So once in a quarter you file GSTR1, but your recipients are suffering. See, we are giving you one option. If you are a small return payer, file one return in 3 months. But once again you are crying. What you are crying? I am unable to pass on the credit for my initial 2 months to the recipient. Your recipients are crying. I will tell you one thing. Department told, okay, you file GSTR1 only for the quarter. But what you do is, every month we will give you one facility, which we call it as Invoice Furnishing Facility. So if you take this quarter, April to June, and you have opted for quarterly return filing, what you do is, for the month of April, you furnish one statement called IFF. In that IFF, you declare your B2B supplies. You declare only your what? B2B supplies. So if you declare in IFF, what will happen? What will happen is, once again, whatever sales you have made in the month of April to recipients who are registered person, that will automatically get reflected in the month of May itself. Similarly, in the month of May also, you would have made some B2B supplies. So what you do is, for the May month also, we will give you Invoice Furnishing Facility. There you declare B2B, that will get reflected in the month of June itself, by 11th of June or something. Now finally June month will happen. No? Now what you do is, anyhow June month you are filing the GSTR1, right? So in your GSTR1, you declare only June month B2B supplies. Why? Because you have already furnished April and May month, and declare all your B2C supplies for the 3 months. In B2C supplies there will not be a problem. Why there will not be a problem? For recipient there is no input tax credit. So all your 3 months B2C supplies and your June month's B2B supply, then you file the GSTR1. Now automatically what will happen is, June month supplies also will get reflected in the recipient's GSTR2B. Able to understand? See, actually they told quarterly return filing, but that is more burden. I will tell you later in the returns chapter, I will tell you more. But did you understand now? So if you are a registered person, what returns you will file? So you will file statement of your outward supplies. Either you will file GSTR1 or IFF, Invoice Furnishing Facility. Who will file IFF? Quarterly return filers for the first 2 months. If you are a monthly return filer, every month declaring your B2B, B2C supplies, you will file GSTR1. If you are a quarterly return filer, for the first 2 months you will file IFF. For the 3rd month you will file GSTR1 for all supplies. Able to understand? So if you are a registered person, one return, I will say outward supplies. If you are a monthly return filer, you will file GSTR1. If you are a quarterly return filer, you will file a IFF for the first 2 months. Now that data should be captured where? In the GSTR2B it will get captured. Now whatever ITC that has been reflected in your GSTR 2B, if it has been shown in GSTR 2B, then only you have to claim it in your GSTR 3B. Basically GSTR 3B is the final return where we say, okay, this much ITC I have it in my GSTR 2B, this I am taking it as a credit. So second condition, 16 subsection 2 clause AA says that if you are a registered person and if you have purchased any goods or services with the intention of using it in the course of for business purposes, and you have a tax paying document, that alone will not be enough. That amount should have been reflected in your GSTR 2B. Then only you can claim the input tax credit. Then only you can claim input tax credit. Let us say, for example, I made some purchase. So April month, I am a registered person. Mr. B, I am the registered person. Okay. In the April month, I purchased some 1 lakh worth of goods. Listen carefully. From Mr. A, paying 18,000 rupees of GST. Total 1,18,000 rupees of amount I have paid. Even I have the tax invoice also in my possession. I purchased these goods with the intention of using it for my business purposes also. So now for April month, in the next month returns will be generally filed. Now as a registered person, I have declared my GSTR 1 where I have declared all my outward supplies. But when I come and see the GSTR 2B, I am unable to find the input tax credit. Sir, why it is unable? Why you are unable to? What could have happened? Why he is unable to see the input tax credit? Maybe the supplier might not have filed the GSTR 1 or IFF, or he might have filed it, but he filed it late. Whatever it could be. See, GSTR 2B will capture the data as on 13th midnight. Till that time, whatever returns are furnished, that data will be captured. So I am not going into the complications. So if he opened his GSTR 2B, if ITC is not showing, he is having invoice also, 18,000 rupees of GST he has paid. But when he opened his GSTR 2B, it is not showing up. That means what could have happened there? Either the person from whom he has purchased that goods or input services or capital goods, either he has not filed the return for the month of April, he would not have filed the GSTR 1 or IFF if he is a quarterly return filer, or even if he has filed, he might have filed it late. That's why it is not getting reflecting in his GSTR 2B. Sir, can I still come and claim it in GSTR 3B? Can I claim that, hey, I have an invoice, I paid 18,000 rupees of GST, I will claim 18,000 rupees of GST. Can you claim it? No, you should not claim it. It will be editable column. You can enter the amount, but you should not enter it. Why? Because that amount is not reflected in your GSTR 2B. Understood? That is the second condition. So listen carefully what they are saying. So details of invoices or even debit notes which are uploaded by the supplier in his GSTR 1 or using IFF, invoice furnishing facility. That's why I have explained what is that IFF. So the supplier either in his GSTR 1 or using IFF, and details should be communicated in form GSTR 2B of the recipient. Whoever is claiming input tax credit in his GSTR 2B, that amount should have been reflected. So that's what they say. ITC can be taken only when supplier furnishes invoice or debit note details, where in GSTR 1 or as amended by GSTR 1A. If you have missed out some details, even you can update it through by GSTR 1A or IFF, and the same are communicated to the recipient in the GSTR 2B. Sir, what is GSTR 1A? As I have told, it is an optional facility to amend or add details of your outward supply details after filing GSTR 1. But before filing GSTR 3B, you furnished your GSTR 1. But in that GSTR 1, you missed out something. You forgot something. Before you file the GSTR 3B, if you want to amend your GSTR 1, it is an optional facility. You can amend it by way of your GSTR 1A. More we will talk about it later in the returns. But GSTR 1A is a facility to amend the GSTR 1. This much you remember. Next, ITC cannot be availed on invoices or debit notes which are not furnished by suppliers and which is not visible in GSTR 2B but may be claimed in the succeeding months. So let us say, for example, as I have told, system will capture only when the GSTR 2B will capture only whenever it is furnished before due date. This supplier, whatever purchases he has made it in the month of April, he was supposed to file the GSTR 1. Let us say he is a monthly return filer. By 11th of May he has to file. Let us say he is filing it on 15th of May. When he is filing 15th of May. That means since it was not filed before the due date, it will not come when he is checking on May. So generally he will file GSTR 3B on May 20 and all, but GSTR 2B will freeze on 13th itself. So when he is checking the GSTR 2B, it will not get reflected. Why it will not get reflected? Because he filed it late. But what will happen is in the next month it will get reflected. Next month it will get reflected. Let us say for example by June 20 he will be filing the GSTR 3B and GSTR 1 and all for previous month, that is May month. Then it will reflect. Then that 18,000 will get reflected. Whenever it is getting reflected in the next month, then he can take the input tax credit. Able to understand it, everybody? Clear and comfortable? So if I go further deeper into the details, so what will happen is what GSTR 2B will capture. So GSTR 1 outward supplies, or IFF is also outward supplies, right? So what GSTR 2B, which details of ITC will be captured in the GSTR 2B is a day after due date of the previous month's GSTR 1 or IFF till the current month's GSTR 1 or IFF due date. So if I put it in other way around, let us say for example April month is there, no? For the April month you will find outward supplies, no? GSTR 2B will be there, right? This GSTR 2B, it will capture whatever details which are furnished in GSTR 1 from 1 day after previous month's due date. What is the previous month? March, right? March month's GSTR 1 due date is 11th of April. That means from 12th of April till 11th of May, whatever GSTR 1 related information has been furnished, that will be captured here. So I'm not going into the details once again, ignore it for the time being now. So if only one point what you have to remember here is, if it is not reflected, if GSTR 2B data is not getting reflected in your current month, don't claim it in the current month. Sir, if it is showing up in my next month, sir, claim it. Whenever it is showing, whenever it is getting reflected in your GSTR 2B, then you can happily claim it. No one will stop you. Clear? I told you about the due dates and all, what data will be captured. Just keep it aside. I will talk about it later in the returns chapter. Okay, next. Invoices on which ITC is not available under section 17 subsection 5 are not to be considered. This point also we will discuss the blocked credit concept. There you will get to know about it. Full ITC can be availed in respect of IGST paid on imports or documents issued under RCM, credit received from input service distributor, which are outside the ambit of 37 subsection 1. Which means if it is imports, if you have paid IGST on imports, then it will not get reflected in your GSTR 2B. Why? Because the supplier will not file any GSTR 1 or something. Then there is no requirement to show that figure in your GSTR 2B. You can claim it. Similarly, if you have paid GST under reverse charge mechanism, your supplier will not declare that in his GSTR 1. No, then also no need to check for that in the then also for that figure also you need not check it in your GSTR 2B. And even the same case is with ISD, input service distributor. There also you need not check your GSTR 2B. Clear, everyone? So what is the condition? What is the second condition? 16 subsection 2 clause AA. That amount, whatever input tax rate that you wanted to claim, that should have been reflected in your GSTR 2B. If it is not getting reflected in the current month, don't claim it. If it is reflected in the next month, then you claim it. However, checking that GSTR 2B is not applicable in case of GST paid on imports, in case of GST paid under reverse charge mechanism, and also in case of credit notes, in case of credit received from input service distributor. In these three cases, you are not required to check GSTR 2B. Even if it is not reflected in the GSTR 2B also, you can claim it. So what are the three exceptions, my dear students, where you need not check for that in GSTR 2B? Number 1, IGST paid on imports. Number 2, documents issued under reverse charge mechanism. Number 3, credit received from input service distributor. For these three cases, you need not check your GSTR 2B. You can claim full amount. Understood? So two conditions we have seen. Number 1, you should contain some tax paying document. There should be in your possession some form of tax paying document, and it should contain some minimum details. Number 2, that GST amount should have been reflected in your GSTR 2B. Except in three cases: IGST paid on imports, GST paid on reverse charge mechanism, and also credit received from input service distributor. For this you need not check GSTR 2B. Next one, third point. receipt of goods and or services. Next thing here. So having the invoice alone is not enough. Number 2. What is second condition? Getting it reflected in your GSTR 2B is also not enough. Third condition is what? You must have received that goods or services. You must have received that goods or services, then only you can avail input tax credit. So what exactly they are trying to say here is, let us say for example, let me give you a scenario. There is a supplier, okay, he supplied some goods. Let us say for example, he even gave you the invoice also. So invoice was issued on, let us say, 30th of March. Invoice was issued on 30th of March, and this goods are dispatched. It is located at a very distant place. It is going to come, it has to travel a long distance. It has to come in it will take some time. Let us say for example, it will take some 10 days of time for me to reach the goods. And the supplier has also given you invoice. That invoice has been given to you. You are in possession of a tax paying document. This person has filed his GSTR 1 also for the month of March. That has been reflected in your GSTR 2B also. But you have not yet received the goods. The goods are still in transport. Can I avail input tax credit? No. You can avail input tax credit only when the goods are received by you. You can avail input tax credit only when the services are received by you. If you have not received the goods, if you have not received the services, you will not be able to avail the input tax credit. You will not be able to avail input tax credit. So third condition is you have to wait till the time you receive the goods, till the time you receive the services to avail the input tax credit. Able to understand? Clear and comfortable? Having invoice alone and getting the data reflected in the GSTR 2B alone will not be enough. You need to actually receive that goods and services. See, but in some cases there will be a transaction called bill to ship to transaction. Listen carefully. There will be some transactions called bill to ship to transactions. What are that bill to ship to transactions? I will tell you. Let us say there is a person, Mr. A, who is a supplier. He is into business of selling water bottles. He is into business of selling water bottles. Let us say he is located in Delhi. Where he is located? In Delhi he is located. There is a customer of him. There is a person who is a customer of him. They are all into wholesaler retailing business. Okay. So now this person, Mr. B, is located in Mumbai. Where he is located? Mumbai. He is a recipient. Okay. Now he placed an order. He placed what? An order. Some 10,000 quantity of water bottles he has ordered. Now these 10,000 water bottles are required to be supplied by Mr. A to Mr. B to Mumbai. So after he has placed the order, let us say for example, Mr. B placed an order of 10,000 quantity. But in the meantime, what happened is Mr. C, one of the customer of Mr. B, who is also located at Delhi. Mr. C is whose customer? Mr. B's customer. So he ordered the same 10,000 quantity of water bottles, and who ordered it? Mr. C ordered it. Okay. So now Mr. B gave instruction to Mr. A. Hey, I placed an order for how much quantity? 10,000 quantity. You are supposed to deliver it to me, right? But you do one thing. Instead of you delivering the 10,000 quantity to me, you please deliver that goods directly to C. Whose address I will give you. Since you are also in Delhi, no, my customer is also in Delhi. See, the goods coming to me to Mumbai. Once again, I am dispatching it to my customer. It will take a lot of time. So what I told to my supplier, dear supplier, you do one thing. I placed an order with you. You are supposed to send it to me. But do me one favor. Instead of delivering it to me, directly deliver it to Mr. C, third party, some third party. Directly deliver it to some third party. Now if you see here, two supplies are happening. Now Mr. A, who is Mr. A's customer? Mr. B is a customer. So he will give invoice. In that invoice, he will bill to whom? Mr. B. Why? Because he is his customer. But in that invoice, he will write the shipping address as Mr. C. Because to whom he is shipping? He is shipping to Mr. C. So the transaction here we call it as bill to ship to transaction. Bill to ship to transaction. Where Mr. A is billing to Mr. B, but he is shipping the goods to Mr. C. Now a transaction is happening between Mr. B and C, no? For that also B has to give the invoice, no? So B will give the invoice. B will give the invoice. Mr. B has given the tax invoice to Mr. C, saying some 1 lakh rupees worth of goods, some 18,000 rupees of GST, total 1 lakh 18,000. So first look at the transaction between Mr. B and Mr. C. Till now, whatever conditions we have seen, that we will try to check. First, he should be a registered person. Whether Mr. C can take the input tax credit or not, we will check. As per 16 subsection 1, he should be a registered person. Yes. He should have bought the goods which are intention to be used on business. So that is also fulfilled. 16 subsection 2 clause A, he must have some tax paying document. Is it there? Yes. Let us say, for example, Mr. B has furnished the GSTR1 on or before due date, that has been reflected in his GSTR2B also. Second condition, 16 subsection 2 clause A is also satisfied. Third condition, what is the third condition? 16 subsection 2 clause B, just now as we have read, he must have received the goods. Did Mr. C receive the goods? Yes. So Mr. C satisfied all the conditions, he can happily take that 18,000 rupees of input tax credit. Okay. Now let us say, for example, Mr. A is also giving invoice to Mr. B. No, there is a supply which has taken place. So now definitely in this tax invoice there would be margin. Transaction between B and C will contain some margin. Let us say, for example, Mr. A has given the invoice for 90,000 rupees, where the amount of GST is some 17,000. So total 1,07,000 or amount of tax invoice has been given. Now Mr. B is also a recipient, right? Let us see whether Mr. B will be eligible to take the input tax credit. Now once again, look at the condition. Registered person, yes. Buying the goods for the intention of using it in the business, yes. 16 subsection 2 clause A, he must be in possession of some tax paying document. Is it there? Yes. Let us say Mr. A has also filed his GSTR1 on or before the due date, and he has declared this supply, and the amount has also been reflected in his GSTR2B. Now third condition, 16 subsection 2 clause B, he must have received the goods or services. But you tell me here, did he receive the goods or services? Did he receive the goods or services? No. That means one of the condition got violated. So that means this person should not be eligible for taking input tax credit. So in case of bill to ship to transaction, the recipient is not receiving the goods. The goods are getting received by a third party on the instructions of the recipient. So one of the condition is getting violated or not. That means, like in these kind of transactions, these recipients will never be eligible to take the input tax credit. Why? Because they have not received the goods. But this is a genuine transaction only, no? To avoid this bottlenecks, to avoid this transport of the goods from multiple places, multiple locations, what they are simply doing, they are directly asking the supplier to deliver it to third party. But because of that, since they are not receiving the goods or services, they would have lost the ability to claim the input tax credit. So that's why department has relaxed the requirement. They have told that in case of bill to ship to transaction, it will be deemed as if they have received the goods or services. What they have told, it will be deemed. They have not originally received it, but we are deeming it because it is a genuine transaction only. We are deeming that goods would have been received, and you will still become eligible to avail the input tax credit. Able to understand? Clear and comfortable? Let us see. Still he will be deemed to have received the total 10,000 quantity. Total 8,000 are actually. So your example is, sir, what if 8,000 quantity was sent and 2,000 I have asked him to deliver to Mr. C. See, in respect of 8,000 goods you have actually received, but 2,000 will get covered under bill to ship to transaction. It will be deemed to have been received. So total 10,000 quantity has been received. You will be still eligible to avail the input tax credit. Okay, right. So that's what they try to say it here. The registered person taking the input tax credit must have received the goods or services. Bill to ship to model, goods delivered to another person on directions of registered person by way of transfer of document of title or otherwise, either before or during the moment. Either before the moment or during the moment, the goods are getting delivered to third person on request of the recipient. They are deemed to have been received by such a registered person. So the same example here, they have given it in the illustrative format, but I have explained it in the form of a diagram. So this you can refer it to understand. So whatever I have put it in the material, the same thing I have tried to present it here. So here it will be deemed as if Mr. B has received the goods. The same provision applies even in respect of bill to ship to model for services, not just goods. Even for bill to ship to model for services also it will be applicable. Okay, now see, there was one issue recently. GST department has got one issue. So what is that issue is, let us say there is a manufacturer. Now various people will be there. Let us say there is a customer. Let's put it this way. So there is a supplier who is a manufacturer, and there is a recipient who is a wholesaler. Now, in case of some manufacturers, they will have a policy called X works sales, X works contract, something like that. They say X works sale, they will say. Where what is the requirement here is, generally in normal circumstances, what will happen is, supplier will agree to deliver the goods to the recipient. Whatever is the delivered place of business, whatever is the recipient's place of business, he will deliver the goods. Then the goods will be received. Let us say, for example, he ordered for 1 lakh quantity of the goods, and supplier has agreed to deliver the goods to the recipient. When this recipient will actually receive the goods? Whenever the truck has arrived at the recipient's premises, recipient's factory, and whenever he has actually received the goods, then he would have received the goods, then he become eligible for input tax credit. But some manufacturers, they have some terms called X works. So what do you mean by that? X works is, so supplier's factory is there. So now if a person has to come and purchase, so what this supplier will do is, he will keep the goods ready at the factory gate. He will only bring the goods till the factory gate. After the factory gate, getting the goods is the recipient's responsibility. So at the factory gate, the supplier's responsibility is over. He will not take any responsibility to deliver the goods to the recipients and all. No such responsibility will be taken. He will say, my factory, I will keep the goods at my factory gate. So till that point of time only my responsibility. From there, how you are taking to your place of business, it doesn't matter to me. So my responsibility has come to an end at the factory gate. So now this recipient has to arrange for the transportation. He has to bring the goods from his factory gate, and that goods has to reach his factory. Let us say, for example, vehicle was arranged on 30th of March. At the factory gate, the supplier made the goods available on 30th of March. Recipient went there, arranged the transport, and the goods has crossed the manufacturer's premises on 30th of March. Whereas he received the goods on 15th of April. Recipient actually in his factory, he got the goods on 15th of April. Now, when he will become eligible to take the input tax credit? See, one of the essential condition is he must have received the goods. So in this case, when he has received the goods, will it be taken as 15th of April? That means only for the month of April he will take the input tax credit. If you say no, since the supplier has supplied the goods under X works, that means the supplier's responsibility has ended. From there, bringing the responsibility is bringing it to the recipient's premises is responsibility of the recipient. Can I call this as the date of receipt of the goods? Because from there it is recipient's responsibility only. No. So when should I consider the date of receipt? Why? Because here months are changing. Listen, see here. So if you consider it as 30th of March only, for the month of March only, when you are filing the return, you can take the input tax credit. But in case if you say it as 15th of April, then what will happen? Only when you are filing the return for the month of April, that too in May when you are filing, then you will get the input tax credit. 1 month is also very important. Let us say, for example, in March month only, if you have more outward supplies, you have more liability to pay the GST. But if I say 15th of April is going to be your date of receipt, then I can't take ITC. That means that amount I have to pay it in the cash. Next month I will get the ITC, but next month I don't have any outward supply. It will unnecessarily remain in my ledger. No. See, ITC is a very complicated issue. You can say, sir, only 15 days gap. No, only next month. No. What is the big deal here? There is a big deal here. It is going to affect the working capital of the people. So they have to arrange that GST and pay it. If they have input tax credit, they need not arrange the cash. But if they don't have input tax credit, they have to arrange the funds and make the payment on that interest cost, finance cost, all that they have to incur. So it is not just a matter of 1 month, guys. In case of big factories, big companies, crores of input tax credit will be in the form of this transportation. So they are facing a huge working capital crisis. So they have approached the department, and department gave a clarification that, see, here risk and reward got transferred at the factory gate. During the transport, if any damage happens, the recipient only has to bear. That means you have received the goods when they have crossed the factory only. You need not wait till the time the goods have been reached to your office or reached your place of business. Not required. If you are purchasing the goods on X works basis, then it will be deemed as if you have received the goods once they cross the supplier's factory gate. At that point of time itself, you can take the input tax credit. At that point of time, you can take input tax credit. You need not wait till the time to reach the to reach your place. However, on the other hand, if the supplier himself is providing for the transportation till they reach you, then you have to wait till the time you receive the goods to take the input tax credit. Able to understand here? So that's what they try to say it here. So clarification on availability of ITC in respect of goods delivered under X works contract. Under X works contract, property in the goods, ownership in the goods passes to automobile dealer. This mainly happens in the case of automobile dealer. Basically, this industry has approached the department. So let us say, for example, Tata Motors is there. One dealer is there. He is ordering some 100 quantity of the vehicles. Now the Tata Motors will say, at our factory gate we will make it available, from there taking it to your dealership showroom is your responsibility. So these kind of people actually approach the GST department. So under X works contracts, property in the goods passes to automobile dealer. And at OEMs, OEM is original equipment manufacturer. Just write it there. Have I written it anywhere? So if not written, just write it there. OEM means original equipment manufacturers, factory gate. So ownership will get transferred at the manufacturer's factory gate only when goods are handed over to transporter on the dealer's behalf. So generally how this transaction will unfold is, now the dealer will say, okay sir, I will buy 100 quantity, I will arrange the vehicle, my vehicle is already at the factory gate, you please load that vehicles into the factory gate. So now what manufacturer will do, he will load all the goods at the factory gate into the transporter. That's all. Ownership has already been transferred to recipient. As per explanation to 16 subsection 2 clause B, dealer is deemed to have received the goods at the time of handover to the transporter only, even if the physical receipt occurs later. ITC can be availed at the time of handover at the factory gate. You need not wait till that goods to reach your place of business. The same principle applies to any X works contract where ownership transfers at the supplier's premises upon delivery to the recipient or transporter. Not just in automobiles, everywhere, any case where the sale is happening under X works contract basis, everywhere this provision will become applicable. However, ITC is allowed only when the goods are used for business purposes. This condition is anyhow there. So ITC will be given to you, but intention is to use it only for business. Later, if you are using it not for business purposes, if you have already taken ITC, then you have to reverse it. Whatever ITC you have taken, that you need to reverse it. Right. Diversion to non-business uses disqualifies ITC. Further, ITC is not available if goods are lost or stolen. This anyhow we will see later. 17 subsection 5 clause H, we will try to have it in the subsequent discussion. There I will try to link it. You ignore this point for the time being now. So how many conditions we have seen, my dear students? 3 conditions. Number 1, you should be in a possession of a tax paying document containing some minimum details. Number 2, that ITC amount should have been reflected in your GSTR 2B. Number 3, you should have actually received the goods or services, but here some important clarifications are there. In case of bill to ship to, even though the recipient has not received it, it will be deemed to have been received. And one more recent clarification, under X works contract basis, you would be deemed to have received the goods by the time it crosses by the time it has been handed over to the transporter at the factory gate. At that point of time, it will be deemed to have been received. So these 2 clarifications are very important for the examination. Right. Next condition. Let us see the next condition. Details of ITC in respect of the said supply communicated to the registered person under section 38 should not have been restricted. So sometimes what will happen is, you will fulfill all the conditions. Let us say you have a tax paying document, it has been reflected in your GSTR 2B, and even you would have received the goods, but still GST department will restrict you. They will not let you claim the input tax credit. So why GST department will not let you claim the input tax credits? Because you might have conducted some violations. In those cases, GST department will not let you take the input tax credit. So what are that violations? A brief I have given, that you need not remember it. Just you remember one point, that ITC should not have been restricted. Sir, when ITC will be restricted? In some cases ITC will be restricted. Just for reference sake I will tell you here, you need not remember it. So let us see. Details of outward supplies furnished in GSTR1 are provided monthly, along with an auto-generated statement GSTR 2B containing details for recipients. This I have already told you. Every month supplier will file GSTR 1 or IFF. On the basis of that, GSTR 2B will be made available to the recipients. GSTR 2B contains the details of inward supplies on which ITC is available to the recipient and on which ITC cannot be availed, whether wholly or partly. In the GSTR 2B, it will show 2 categories. Whatever inputs are there on which you are available to take input tax credit, there is an ITC, but you can't take it. So this is where restrictions will come in 2 categories. In case when you open GSTR 2B, in the GSTR 2B, if it is showing that ITC is you have paid, but ITC is not available for you. That is what the restricted figure. That restricted figure you can't take it as input tax credit. Able to understand? If you have committed any violations, there itself it will show. If you open the GSTR 2B, it will show on which it will show, it will contain the details of onward supplies on which ITC cannot be availed. The system itself will restrict it. That restricted amount, you don't enter it once again in the GSTR 3B to claim it. You leave that amount. So when generally the figure will be shown there, when generally it will show inward supplies on which ITC cannot be taken, when the system itself will show that information is, number one, ITC will not be available for inward supplies furnished by registered person who is a new registrant. That means if your supplier is a new registrant, but he did not he will not file return in some cases, or even though he has filed, some nuances will be there, then that figure will be shown under not available category, then you can't claim it. Next, if he has defaulted in the payment of tax, sometimes the supplier will do a default, so that has been reflected, but since the supplier is not paying the amount of GST, to the recipient it will show under the not available category, don't claim this amount of GST, then you should not claim it. Or whose output tax payable as per GSTR 1 or IFF exceeds output tax paid in GSTR 3B for a particular tax period by prescribed limit, Rule 88C. We will see in subsequent discussion what is Rule 88C. That means the supplier has committed some violation. You made purchase from such a supplier who committed some violation, and upon him some proceedings are happening. Or he has availed ITC of an amount that exceeds the credit that can be availed by him as per GSTR 2B. This is Rule 88D actually. That also we'll try to discuss subsequently. Next, he has defaulted in discharging his tax liability under section 49 subsection 12 read with Rule 86B. This is also we are going to discuss later what is Rule 46B and all, and other specified class of persons. You need not remember this list. Once again I am telling. So what simply you are required to remember here is, sometimes you will have tax paying document, it will get reflected in your GSTR 2B also, but under not available category they will show you the figure, that amount you can't take it. Why? Because that GST has been restricted by the GST department, because your supplier might have committed some violations because of which they have restricted. So the whole purpose here is, your supplier is committing some violations, they are by allowing you not to take the input tax rate on them. So actually GST department is discouraging you to make the purchases from that fraudulent suppliers. So that amount you can't take it. So I will tell you once again, this list you need not remember, you simply ignore it. Only clause you remember. What clause you remember? The ITC should not have been restricted. That point you remember. Enough. Okay, so 4 conditions I have told. Tell me, what are the 4 conditions? What are the 4 conditions? Come on, respond. Number 1, he should have in possession some tax paying document. Number 2, what is number 2? That amount should have been reflected in your GSTR 2B. Number 3, you should have received that goods or services. Number 4, ITC should not have been restricted. That's it. Now coming to the next point, 16 subsection 2 clause C. What they are saying? Tax leviable on supply should have been actually paid to government. So whatever tax that you are taking it as input tax credit, that tax should have been paid to the government. Government should have actually got it. So what is the problem here? I will tell you. These are all, I told you, interesting discussion. Sometimes your supplier will do a mistake, but department will punish you. This is one such case. So let us say there is one supplier. There is one supplier, and this supplier made some supply to the recipient. Let us say 1 lakh worth of supply. 18,000 rupees of GST, total 1,18,000. Okay, and you paid that total 1,18,000 also. You paid that total 1,18,000 also. Now this person has also given you tax invoice. In that tax invoice, taxable value he has shown, what is the tax amount he has shown, everything he has shown. Even you paid also, total 1,18,000 you have paid also. Now what will happen is, if you look at the conditions, you are in possession of a tax paying document. So let us say this person has furnished his GSTR 1 also. He has furnished his GSTR 1 also. So that amount has been reflected in your GSTR 2B also. Then third condition, you have received that goods or services also. Number 4, it did not show it in the restricted category also. Now what you will do? 18,000 rupees of ITC you will take. 18,000 rupees of ITC you will take. So in your GSTR 3B you will claim it. But here this supplier is a mischievous person. See, he filed GSTR 1. Why he is filing the GSTR 1? To pass on the credit. He passed on the credit. but he has to also file GSTR 3B, no? Through that only GST payment will happen. Let us say, for example, he declared GSTR 1. Let us say he made only this one single supply. From GSTR 1, it will show it as 1 lakh rupees of outward supply. 18,000 rupees is GST. Now, this supplier, when he opened his GSTR 2B, he did not make any inward purchases. No ITC is there. So, ITC is 0. That means balance 18,000 rupees. What supplier should have done? He should have paid it to the government. Only when you make the payment, then only GSTR 3B will be filed. There is no option called first I will file GSTR 3B, then I will make the payment. There is no such option under GST. If you have to successfully file the GST, whatever amount of GST that you have to pay it. Then only GSTR 3B can be filed. So what this person is doing is, when he looked at the GSTR 3B, he is required to file 18,000 rupees, but he is not filing that GSTR 3B only. He is not filing that GSTR 3B only. Now the department says you become as a recipient, you become ineligible for GST. Input tax rate you can't take. The logic is very simple here. See, if the department is giving 18,000 rupees of credit, they should have got it, no? But ultimately the department did not get that 18,000. Why? Because the supplier did not file the GSTR 3B. Supplier did not file GSTR 3B, they did not get the payment. If the department has not got the payment, why they will give it back to you? But now these recipients will start crying. Why they will start crying? Sir, we are genuine persons. 1,18,000 including the GST amount, I have already paid it to my supplier. That supplier has eaten up all my money. Now you are punishing me. The department says, get punished, because you made a business relationship with not a genuine person. That is not my responsibility. If I would have got my 18,000 rupees of money, I would have paid it to you. I would have given it back to you. But I did not get the money. Why I should give it back to you? Sir, unnecessarily as a recipient, even though I am genuine, I am suffering. No, sir. Government can't avoid it here. Government can't avoid it here. You have to get suffered if you make purchases from not so genuine suppliers. Sir, but how this scenario will practically work out? Why? Because you might get a doubt. Sir, the moment it was reflected in my GSTR 3B, I will avail it. No, sir. I will avail it. So how can I not take it? I have already availed. No. But you are whether supplier will file GSTR 3B or not, that will happen later. But the moment it has been reflected in my GSTR 2B, I will take the input tax credit. No. But how the department can stop me? What will happen? How this practical scenario will work out? How this practical scenario will work out is, what GST department has suggested is, let us say this transaction has taken place in the month of April. In the April month, while you are filing, you are a recipient. By May 20, whenever you are filing the GSTR 3B for the month of April, so then you have taken ITC of input tax rate of 18,000 rupees. Now this supplier for the month of April, by May 11th, he has filed his GSTR 1, but he did not file his GSTR 3B. Okay, the department will wait. The department will wait. Recipient has already taken input tax rate. He has used his for payment. Everything has happened. But the supplier has not filed the GSTR 3B. The department will wait. Sir, next month the department waited. Did not file. One more month the department waited. The person did not file. Like this, department will keep on waiting. Sir, how long the department will wait for the supplier to file the GSTR 1, sir? They will wait till 30th of September following the end of the financial year. How many months they are waiting? Till 30th of September following the end of the financial year, they will wait. Who will wait? Department will wait. Department will wait with a hope that this person will still come and file the GSTR return, GSTR 3B return. I have a hope of getting the money from him. The department will wait till 30th of September following the end of the financial year. Let us say this transaction has taken place in the month of April 2025. How long department will wait? 30th of September 2026. This is the financial year 25-26. So till 30th of September 2026, the department will wait for the supplier to furnish the GSTR 3B, sorry. Now till 30th of September also, if the supplier is not filing his GSTR 3B, now by 30th of September, they will start giving intimations to the recipients. They will start giving intimations to the recipients regarding what? Boss, you have made a purchase from so and so supplier, but that supplier has not filed his GSTR 2B, so GSTR 3B. So now we have a humble request to all the recipients, whoever has taken input tax credit from that supplier, See, individually notice will go. Let us say now this person, Mr. R, will get the notice saying on by 30th of September, after 30th of September, he will get the notice saying you have made purchase from so and so person, 1,18,000 you have purchased. That 18,000 rupees, whatever you have paid, no, that you have to reverse it. That you have to reverse it. Now you have to reverse it. Now you have to, sorry. Now you have to reverse it. You can't fight now. If the department has sent a notice to you, you have to reverse it. Sir, by what time I have to reverse it? By 30th of November of the same year. That means by 30th of November 2026. They will give you 2 months of time. 30th of September they will notify. Now before 30th of November, so during this time, whatever months GST or 3B you are filing, within that time you have to reverse your input tax credit, whatever ITC you have availed. So how I will reverse it? See, if the amount is still lying in your electronic credit ledger, that you will write it back. Like if in your wallet already money is there, you can reduce your wallet amount. Sir, my wallet is completely exhausted. I don't have any ITC, sir. What I should do? You have to pay it now. What you should do? You have to pay it now. So you have to reverse the input tax credit by 30th of November. Either if there is a credit balance in your credit ledger, you try to reverse it. If there is no enough of credit balance in your ledger, what you should do? You have to pay it in cash now. Able to understand? This is how the mechanism is going to work out. So whatever it is, ultimately ITC is getting restricted, no? Right? So this is how practically will work out. 16 subsection 2 clause C. What does that say? Third condition, the tax amount should have been paid to the government. So this is the practically scenario works out. So if you start reading it, supplier should have actually paid the tax charged on goods and or services for which ITC is being taken, either in cash or by utilizing input tax credit. See, when I say supplier has to pay the amount of tax, that need not be by cash. For example, if that person is having for the month of April, when he is filing GST or 3B, let us say his output tax liability came to 18,000. If he is having input tax credit, already enough amount of input tax credit he have, what he will do? He will simply file GST or 3B. Why? Because ITC is available. When I say supplier should have paid the amount of GST, that need not be in cash. Supplier could have paid that amount even by using his input tax credit also, no problem. Here the objective is should have filed the GST or 3B. That is what the condition here. Should have filed GST or 3B. So if he files the GST or 3B, whether by paying cash or by using input tax credit, doesn't matter. So whatever it is, the government should have got the amount of GST either in cash or by using the input tax credit. Next, availment of self-assessed ITC. Now how this practical scenario will work out? They are saying a registered person can avail credit of eligible ITC as self-assessed in his return. Generally, when he is filing GST or 3B, he will claim the input tax credit. Such amount shall be credited to his electronic credit ledger. Now they are talking from the recipient's perspective. Now what he will do is when he is filing the GST or 3B for the month of April, in GST or 2B amount will show, that amount he will take it as input tax credit in his GST or 3B. Reversal. If supplier doesn't pay tax to government, recipient must reverse availed input tax credit along with the applicable interest. If ITC can be availed by recipient in GST or 3B only if the supplier furnishes his details in GSTR 1 or 1A or IFF. If supplier doesn't furnish GSTR 3B till what time? Till 30th of September following the end of the financial year in which ITC is availed, recipient must reverse input tax credit by 30th of November of the same year. That means 30th of November 26. So of the same month, that means within 2 months, October, November, September, they will, after September they will give in notice. By October or November, by 30th of November he has to reverse it. If recipient fails to reverse ITC by 30th of November of the same year, what will happen, sir? Later you have to reverse it along with interest also. Interest at the rate of 18% per annum. If you reverse it by 30th of November, no interest is required to be paid. In our example, 18,000, if you reverse it will be enough. By what time? By 30th of November. Sir, 30th of November is over, but I am unable to reverse it. Later I want to reverse it. What you should do? From 30th of November, how many number of days delay you have made? On that delay at the rate of 18%, you have to pay the interest also. Clear, everybody? Able to understand? So that is what they are trying to say here. So now let us extend that discussion. Let us say, for example, this person, I got the notice in the month of October, I got the notice. So what I have done is, before 30th of November itself, I have filed in my subsequent returns, I have reversed my input tax credit, 18,000 rupees. I have reversed it, I have given back to the government. Now later what happened is, this supplier realized his mistake. Here, because of me, so many recipients have suffered. Now what he has done is, let us say, for example, somewhere in the month of January 2027, he realized, and then he filed the GSTR 3B. Then he filed what? GSTR 3B, whereby he has paid all the amount due along with interest, penalty and all. He has paid by 20th of January 2027. He filed GSTR 3B of which month? Of that April 2025 related month. Then he filed the GSTR 3B and paid all the amounts of the GST and all. So now what will happen? See, if you look from the recipient's perspective, recipient initially availed the credit, later he reversed it. What is the whole purpose of reversing the ITC? Because the supplier did not pay the amount of GST. If I put it in one single line, the government did not get the amount of tax, that's why you have reversed it. But now supplier at a later point of time, he is filing and making the amount of payment of GST to the government. No, now the government got it back. No, sir, can the recipient re-avail the input tax credit? Yes, he can re-avail the input tax credit once again when the supplier has realized his mistake and paid the GST amount to the government. When ultimately when the GST has been got by the government, then the recipient can re-avail that input tax credit. Understood? Clear and comfortable, everybody? So that's what they are trying to say it here. So if you see it, re-availment of reversed ITC. If the supplier subsequently furnish GSTR 3B for the said tax period and pays the tax again, recipient can re-avail that reversed input tax credit. You can re-avail it without any problem. So this is what the third condition. Come on, tell me guys, conditions. 16 subsection 2 clause A, what does that say? Tax paying document you should have containing some minimum details. 16 subsection 2 clause A, what does that say? It should have been reflected in your GSTR 2B. 16 subsection 2 clause B, what does that say? Receive goods or services. 16 subsection 2 clause BA, what does that say? Not restricted. ITC should not have been restricted. Not restricted. Now we have seen 16 subsection 2 clause C, supplier paid tax to the government. Clear? So now we have one more condition, 16 subsection 2 clause D, which says that you have to file your GSTR 3B to claim the input tax credit. Simple. See, just because GST is reflected in your GSTR 2B, automatically it will not get credited to your electronic credit ledger. In order to get that GST reflected in your 2B, to reflect it in the electronic credit ledger, what you should do? GSTR 3B you have to file. Only when you file the GSTR 3B, then you will become eligible to, then actually ITC will get credited. See, let us say for example, how I should give you example for this. Department has given you, see, someone has given you voucher here. You have got one Amazon voucher. Just because Amazon voucher you have, that doesn't give you balance in the Amazon wallet. What you should do? You should go and redeem that voucher. That's what we do, right? So you'll get a voucher, on that voucher coupon code will be there. You enter that coupon code, then the amount will get credited. The same analogy if you apply here, in your GSTR 2B, GST ITC amount will be shown, but automatically that will not be credited to your ledger. In order to get credited to the ledger, what should happen? You have to file your GSTR 3B. Till the time you file your GSTR 3B, you will not be able to get your input tax credit. So that is what the last condition, file your GSTR 3B. So that's what they say here. Filing of the return, section 16 subsection 2 clause D, registered person taking input tax credit must have filed his return in GSTR 3B under section 39. Thus taxpayer should file GSTR 3B to avail ITC on eligible inward supplies. So unless and until you file your GSTR 3B, you will not be able to avail your input tax credit. Clear, everyone? Able to understand? Just have a quick look once for 2 minutes, then we'll proceed further. Have a look at the entire discussion. Many things we have discussed. Just have a quick look. Okay, so we'll continue now. So we have some provisos. So section 16 we have. In section 16 various clauses we have. In all the clauses we have understood the conditions. Now some provisos are also there. There are various provisos which are attached to section number 16. Let us try to understand. So first we have ITC received in lots. ITC is available only on receipt of last lot. So if you remember in 16 subsection 2 clause B, I have told that one of the essential condition which is required to be fulfilled to avail the input tax credit. Right. So 16 subsection 2 clause B has told that one of the essential condition to avail the input tax credit is you should have received the goods or services. Now if you remember in one case in the tax invoice chapter we have seen a case where in case if we have ordered the goods, we will sometimes get the goods in lots. Like I have told, if I have ordered for 100 vehicles, 100 cars I have ordered, all of that 100 cars can't come in one vehicle. So let us say for example it is coming in 5 consignments. Sir, you told I should have received the goods to avail the input tax credit. Let us say you are purchasing 100 cars. For the entire 100 cars you have been given only one single invoice, but that cars are coming in 5 lots. You will have only one single invoice. Now when I can take the input tax credit, sir? Can I take the input tax credit when the first vehicle, when I get the first lot, or will I have to take proportionately, or should I have to wait till I get the last lot to claim the input tax credit? The department has clarified by way of proviso that you are eligible to avail the input tax credit only when you have received the last lot. You can't claim it will not be deemed to have been received when you received the first lot. The goods will be received only when the goods will be considered received only when you have received the last lot or last consignment. Even the same rule will become applicable in goods in semi knocked down or completely knocked down condition also. So that is what one thing they have clarified. In case the goods are covered under an invoice are not received in a single consignment. See, if you are getting separate invoices, that is fine. For every invoice, whenever you receive the consignment, you can claim input tax credit. But if you are receiving one single invoice, but all that goods are not received in a single consignment but are received in lots or installment, ITC can be taken only upon receipt of the last lot or last installment. This is what one thing which has been clarified. And we have one more proviso, second proviso to section 16 subsection 2, which says that payment for the invoice has to be made within 180 days. But you will get copy, certified copy of invoice you will get, So even in case of received in lots, if you are for the first consignment, you are getting only certified copy, but original invoice you are receiving. But anyhow, you have a copy of the certified invoice. If it is an electronic copy, electronic invoices you will get soft copy. In the first lot also you will get soft copy and all. But still, even if you have a possession of the invoice also, you can't take the input tax credit. You have to wait till you receive the last consignment. Right. So now we have one more proviso to 16 subsection 2, which is talking about one more essential condition for which you are required to fulfill is payment for invoice has to be made within 180 days. If you have got the invoice, for that invoice, one more essential condition to avail input tax credit is you have to make the payment to the invoice within 180 days of the invoice. So in case if you are not making the payment within 180 days from the date of invoice, when I say payment, I am talking from the recipient's perspective. Recipient will make payment to whom? Supplier. So if you should have paid the consideration within 180 days. In case if you are not paying the consideration within 180 days to the supplier, then you are required to reverse the input tax credit along with interest. On the initial reversal only interest will become applicable. Along with interest from the date you have availed it. So you have to reverse it along with interest. Okay, so that's what they try to say here. A registered person must pay supplier the value of goods or services along with the tax within how many days? Within 180 days from the date of issuance of the invoice. So why? Because this is because of suppliers. Now suppliers will pay the amount of GST. right? So suppliers will pay the amount of GST, and they will pay the GST amount to the government even though they have not received from the recipient. Later, when the recipient has not made the payment, these suppliers have started creating issues with the department. Sir, we have paid the amount of GST but recipient is not paying it, blah blah blah. And some reason, if in case if they are giving credit notes and all, they are reversing it. So all that issues are happening. So that's why what they have told is to make, even like the way it is protecting the recipients, even it has to protect the suppliers also. So what they have told is, we will protect you suppliers. If you have given the invoice, you should get the payment within 180 days. If you don't get the payment within 180 days, what we will do is, we will ask the recipient to reverse the input tax credit. So that's what they're trying to say it here. Registered person must pay supplier the value of the goods or services along with the tax. Within how many days? Within 180 days from the date of issuance of the invoice. If he fails to do so, then what will happen? Recipient shall reverse input tax credit availed on such inward supply proportionate to the unpaid amount. If only partial, if full payment is not made, full ITC you have to reverse. If partial payment you have made, but partial payment you have not made, let us say for example you have got total invoice amounting to 1 lakh. On that 18,000 rupees is the amount of GST. Out of that 50,000 rupees of payment you have made. That means 50,000 proportionate amount of GST. The balance amount of payment you did not make. Then I am not required to reverse the full amount of IGST. Whatever amount that remains unpaid, on that amount proportionately I have to reverse the input tax credit. So, and not just amount of GST, what also you are required to reverse? Along with interest. See, here there is one thing you have to remember. In case if the supplier has not made the amount of GST, then recipient is required to reverse the input tax credit, not with interest, only input tax credit whatever you have availed, if you are doing it within 30th of November. If you don't do it, then only you are required to pay interest. Why? Because it is supplier's mistake, not recipient's mistake. That's why they are not punishing you to pay the amount of interest. But in case if you are reversing the input tax credit because you did not make the payment within 180 days, it is purely your mistake, you are required to reverse the amount of input tax credit whatever you have taken along with the interest. From day one itself you are required to pay the interest. Why? Because it is your mistake. In case if the supplier is not making the payment, that is supplier's mistake. It will be unjust to punish the recipient by charging him the interest. That's why they told there you reverse only tax amount, no need of interest, if you do it within 30th of November. But in case if the recipient is not making the payment to the supplier, it is purely recipient's mistake. You have to reverse the input tax credit along with the interest. So that's what they say here. Exceptions, however, making the payment within 180 days, that condition will not become applicable in certain circumstances. These exceptions are very, very important. When, see, as per second provision to 16 subsection 2, what is the general rule? You have to make the payment within 180 days. If you are not making the payment within 180 days, you become ineligible for, you have to reverse your input tax credit along with interest under section 50. So now I am telling for that rule some exceptions are there, which means what? Even though you are a recipient, even though you are not making the payment within 180 days, even though you are not making payment within 180 days, still we are not required to reverse the input tax credit. Sir, when, sir? Number 1, supplies on which tax is payable under reverse charge mechanism. Supplies on which you are paying the GST under reverse charge mechanism. In that case, making the payment to the supplier doesn't matter. So why they are saying it here is, let us say for example there is a supplier, okay, who is an advocate. He is supplying services to a business entity. Now we all know that these services will get covered under reverse charge mechanism. Let us say for example this business entity has already paid the amount of GST under reverse charge mechanism to the government. 1 lakh is the value of the service and 18,000 rupees is the amount of GST. So this 18,000 rupees they have already paid to the government and they are not making the payment to the supplier within 180 days. Now department is least worried. Why least worried? They have got whatever amount they have to get it. No. If they are not paying it to the suppliers, if the supplier is required to pay the amount of GST, then supplier also is not paying to the department. But here what is happening? GST amount anyhow you have already paid it. If you are not paying it to the supplier, then there is no need to reverse the amount of input tax credit. Why? Because GST amount already what has happened? The department has got it from the recipient. So in that case, no need to make the payment. Making the payment to the supplier within 180 days doesn't matter here. Next one. Second one, deemed supplies without consideration. Quite logical here. We have seen we have seen 4 paras under schedule 1, where even though you are performing some activities, even without consideration, they will be deemed to be supply. If it is deemed to be supply, let us say for example, supply of goods between distinct persons without consideration, between 2 separate registrations under same PAN. If supply of goods or services is happening, that will be deemed to be supply. Let us say I have a place of business in Bangalore. I also have a place of business in Chennai. I have transferred goods from my Bangalore to Chennai. Deemed supply, no consideration. So I will give invoice. I will treat it as supply. I will give it invoice. But for that payment, I will not get it. Between distinct persons, payment will not happen. Even without consideration also, you are considering as supply. Then what is the purpose of keeping the condition of making payment within 180 days? They have to pay the tax. But here the condition is you have to make the payment to the supplier. No. So here here there is no consideration only. Since there is no consideration, that's why you are treating it as supply. Then what is the purpose of keeping the condition making the payment within 180 days? Quite illogical, right? So that's why if it is a deemed supply where you are considering it as supply even without consideration under section 7 subsection 1 clause B, since there is no consideration, that's why they have deemed it as supply. Then what is the purpose of making the payment within 180 days to the supplier? Doesn't become applicable. Next, one more case where payment within 180 days will not become applicable is additions made to the value of supplies. Very important, listen. Additions made to the value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient on the supply as per 15 subsection 2 clause B. So do you guys remember 15 subsection 2 clause B? 15 subsection 2 clause B, additions to the value of the supply, where we have seen that a recipient has made a payment to the third party, which is actually the supplier's obligation in relation to that supply, that also will be added to the value of supply. Do you guys remember that discussion? Okay, let me create a scenario what they are trying to say it here. So there is a supplier, he has made some supply to the recipient. Okay, so now this recipient on some event was happening, there is supplier having an obligation to pay to some third party. Let us say for example some 1 lakh rupees supplier is required to pay to the third party, but instead of the supplier, recipient has made the payment to the third party, and recipient is required to pay only 10 lakh rupees. Now recipient is only required to pay 10 lakh rupees, but as per 15 subsection 2 clause B, here transaction value is 10 lakh rupees only, that is what the price agreed or agreed to be payable. But as per 15 subsection 2 clause B, even this 1 lakh rupees is also required to be added or not. So total for 11 lakh rupees tax invoice is required to be given. That will be the value of supply. Here supplier, even though he is getting 10 lakh rupees, he will give an invoice for how much? 11 lakh rupees. So 11 lakh rupees, let us say for example on the GST rate is 10%, which will come to how much? 1,10,000. Total 12,10,000 rupees of tax invoice has been given. By whom? By the supplier. To whom? To the recipient. Now recipient will take how much amount of ITC? 1,10,000 rupees of input tax credit. He will take it or not? Assuming all other conditions are satisfied. Now this recipient is required to make the payment within how many days? Within 180 days. Let us say for example this recipient is not making the payment within 180 days. Now he is required to reverse input tax credit. How much amount of ITC is required to reverse? Is he required to reverse the ITC on the total 11 lakh rupees, or is he required to reverse the input tax credit only on 10 lakh rupees? Able to understand my question? You did not pay 10 lakhs, but you have availed input tax credit on total 11 lakh rupees. Now when you did not make the payment of consideration to the supplier within 180 days, you are required to reverse the input tax credit. But how much amount you are required to reverse? You will be required to reverse only on 10 lakh rupees. So reversal of ITC will not become applicable in respect of that part of the consideration which has been added to the value of supply because of 15 subsection 2 clause B. Why? Because that amount is already discharged. No. So that's why you are required to reverse input tax credit not on 11 lakh rupees, on this 1 lakh rupees, assuming GST rate as 10%, we have assumed that 10,000 rupees input tax credit you can keep it. Only on that 1 lakh rupees you are required to reverse it along with interest. Supplier receive, see here it is what you have to pay to the supplier, consideration you have to pay to the supplier. So here supplier consider, here third party is not the supplier. No. That's why, see, some people have started interpreting it this way. So they are saying that if you are not paying the consideration on the total invoice value, you are required to reverse it. But here the condition is, okay, invoice value might be total 11 lakhs. But out of that, the consideration which is already paid is 1 lakh rupees. So on that, you need not reverse it. That's what has been clarified. You are required to reverse it only on the amount which is actually required to be paid to the supplier, not which you have already paid it to the third party. Able to understand? Clear and comfortable? So you are required to reverse. So this reversal of ITC is not becoming applicable on that amount which has been added to the value of supply under that 15 subsection 2 clause B. That 180 days payment will not become applicable there. Why? Because he has already made the payment to the third party. Okay, so this was leading to some misinterpretations. That's why they have given this clarity by way of this provision. Understood? So that's what they have told. So 30 days condition will not become applicable to that additions which are made to the value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient of the supply as per 15 subsection 2 clause B. If I put it in very simple terms, whatever additions that you have added to the value of supply under 15 subsection 2 clause B, for that once again you need not check the condition of 180 days. Why? Because that amount is already paid by the recipient to the third party. Able to understand? So there, even if you are not making the payment to the supplier, you need not reverse ITC on that addition amount. Only on the amount which is actually liable to be paid to the supplier, on that only you are required to reverse it. Able to understand? So these three exceptions are also very, very important. Okay, so what are the three exceptions to payment within 180 days condition? Number one, supplies on which tax is payable under reverse charge mechanism. Those supplies which are deemed as supplies even without consideration under schedule 1. Additions which are made to the value of supply because of 15 subsection 2 clause B. And under situations given in point B and C, the value of supply is deemed to have been paid. No need to check that conditions once again. Clear? So what we have covered till now? We have covered section number 16 subsection 1, subsection 2 various clauses, and for that 16 subsection 2 we have two provisos. First proviso is talking about in case if you have received the goods in lots, you have to wait till you receive the last lot to avail the So whereas the second proviso says you have to make the payment within 180 days. If you don't make the payment, you have to reverse the input tax credit along with the interest under section number 50. So that interest also you are required to reverse it. However, payment within 180 days condition will not become applicable in certain cases. Clear? So section number 16 we have started discussing. 16 subsection 1 completed, 16 subsection 2 also completed. Now we are required to discuss 16 subsection 3 and 16 subsection 4. I will talk about first 16 subsection 3. Very simple clause which says that if you are claiming depreciation on the tax component, ITC will not be allowed. If you are claiming depreciation on the tax component, ITC will not be allowed. So let us say for example, a person has purchased the capital goods. This is the condition for capital goods. You paid 1 lakh rupees worth of capital goods and you have 18,000 rupees of GST paid. So now generally when I say capital goods, that you will capitalize in your books of accounts. And when you capitalize it in the books of accounts, you will depreciate it. That means by charging depreciation, you are claiming relaxation from income tax. Yes or no? So if you have capitalized 1 lakh rupees of the asset in your books of accounts under Income Tax Act, so on that 1 lakh rupees, you can claim the deduction over a period of time in the form of depreciation. That means for that expenditure, you are already claiming relaxation in the form of income tax deductions. Now this 18,000 rupees of GST component you have no? You have two options for that 18,000 rupees of GST. Either you can take it as input tax credit or you can capitalize it, not both simultaneously. Why? Because it will lead to double benefit. By claiming it as input tax credit, you are getting a GST deduction. GST you are going to get it back. If you capitalize not just 1 lakh, if you capitalize 1 lakh 18,000, for that 18,000 you are also claiming deduction from the Income Tax Act and in the form of depreciation. So that's why any of the two options you can choose. Either if you, whatever GST that you have paid on your capital goods, you have two options to choose from. Number one, either you can take an input tax credit of that, or you can claim depreciation on that by capitalizing in your books of accounts, but not both simultaneously. If you want to claim input tax credit, don't capitalize it. If you want to claim the income tax deduction, don't take the input tax credit. Simultaneously, we will not let you do it. So either GST input or charging depreciation, not both simultaneously. As simple as that. So if depreciation is claimed on the tax component of the capital goods under Income Tax Act 1961, ITC on that tax component cannot be availed under GST law, as it will lead to dual benefit. Okay. Now coming to the 16 subsection 4. Sir, what is that 16 subsection 4 talking about? 16 subsection 4 is talking about time limit for availing the input tax credit. What is it? Time limit for availing input tax credit. Sir, let us say for example, in April month, I made a purchase, sir. I am a registered person. I made a purchase for the month of April. I made one purchase. All the conditions are satisfied. But in the month of April, while I am filing the return in GSTR 3B, in May 20, when I am filing the GSTR return, I forgot, or because of some reason, I did not take the input tax credit. Sir, can I take the input tax credit when I am filing the GSTR 3B of the next month? Yes, you can take it. Sir, next month also I forgot. Can I claim that input tax credit in the next month's GSTR 3B? Yes, you can do it. So while you are filing return for the May month, then you can claim that in ITC. When you are filing ITC for the June, when you are filing GSTR 3B for the June month, then also you can take the input tax credit. Sir, then also I forgot, sir. No problem. When you are filing the July GSTR 3B for the July month, then also you can take the input tax credit. Sir, like this, how long, sir? Like this, how long? See, I have already told you one simple logic. Whenever government is going to give you some benefit, they will always put a time limit. When they are getting benefited, there is no time limit for that. But GST, ITC is a kind of mechanism where the persons are getting benefited. No, here the GST department has put one condition. There is a maximum time limit. Sir, what is a maximum time limit within which I can avail the input tax credit? They say that ITC on invoices pertaining to or debit notes issued in a financial year, this is financial year, can be availed any time till 30th of November of succeeding financial year or date of filing of the relevant annual return, whichever is earlier. So what they are saying, till what time I can avail input tax credit? 30th of November following the end of the financial year or date of filing of the annual return, whichever is earlier. Let us say the supply has been taken place in April 25. What is the maximum time limit I have? 30th of November following the end of the financial year. So this financial year will end on 25-26. So 30th of November following the end of the financial year means 30th of November 2026 or date of filing of annual return. Let us say, for example, if annual return is filed on 30th of September only, whichever is earlier. Which one is earlier? 30th of September is earlier. On or before that date, you have to maximum claim it. Sir, thereafter you can't avail the input tax credit. Okay, so what is the maximum time limit, my dear students? 30th of November following the end of the financial year in which the tax invoice or debit note is issued or date of filing of annual return for that relevant financial year, whichever is earlier. Till that point of time you can continue to claim the input tax credit. If that cutoff date is gone, then you can't avail the input tax credit later even if you realize it. Same like credit note. Yeah. So here one more condition here one more condition. This time limit will not become applicable in case of re-availment of input tax credit. In case what? Re-availment of the input tax credit. There are two cases I told where you can re-avail the reversed input tax credit. What are they? In case supplier had not made the payment, then by 30th of November following the end of the financial year, we will reverse it. Thereafter, if the supplier has made the payment, then I can re-avail it. Condition number 2. One more case. If I did not make the payment within 180 days, then I will reverse it. Thereafter, if I made the payment, I can re-avail that input tax credit once again. If I made the payment, this point did I tell? 180 days condition. If I make the payment once again, then I can re-avail the input tax credit. That I think I have missed it out. Yeah, that I have missed it out. So even that second provision, if you are making the payment within 180 days, you will if you are not making the payment within 180 days, you will reverse it. Thereafter, if you have made the payment to the supplier, you can re-avail that input tax credit. So there are two cases where you can re-avail that input tax credit. Number 1, supplier did not make the payment of GST to the government, then we will reverse it. Thereafter, if the supplier has paid the amount of GST to the government, I can re-avail it. Second case, as per second provision to 16 subsection 2, if I am not making the payment within 180 days to the supplier, I will reverse it. Thereafter, if I am making the payment once again to the supplier, I can re-avail that input tax credit. Now, this condition of this time limit will not become applicable in the case of re-availment of input tax credit, re-availment of reversed input tax credit. I will tell you a scenario. Listen carefully. A person has made a supply in the month of March 26, March 25, supply has been made. Let us say supply amounting to 1 lakh rupees. Let me put it this way, not April. Let me put it as April 2025. A transaction has taken place where a recipient has been given the invoice and he availed the input tax credit. Transaction taken place in the month of April. tax invoice is also given in the month of April. Now he forgot to declare that invoice in the month of April. No problem. For May month when you file the return, you can claim it. You forgot it in May month also, no problem, you can claim it. Like that, how long? 30th of November following the end of the financial year, which will be 30th of November 26, or date of filing of annual return, whichever is earlier. Let us say, for example, annual return was filed on 31st of December, whichever is earlier will fall on 30th of November. So on or before this date, I can claim it. After this, I will not be able to re-avail it. Okay. Let us say in one case what happened is, I claimed the input tax credit first. I claimed in April 2025 while filing the return for the month of April 2025. In May, I have availed the input tax credit. Thereafter, I am supposed to make the payment within 180 days. No. So within 180 days, I did not make the payment. What I have done? ITC reversal I have done. ITC reversal I have done. Now thereafter, let us say for example, many years are gone. 2 years are gone. Let us say for example, I am making the payment in May 2027. At that point of time, I am making the payment. Now as per the proviso, if I make the payment later, I can re-avail the input tax credit. No? Yes, I can re-avail the input tax credit. Now in one case, GST officer has put one condition. What condition he has put is, boss, when the tax invoice was given? April 2025. What is the maximum time limit? Under 16 subsection 4, what is the maximum time limit? 30th of November 2026. Now when you are coming and reclaiming re-availing the input tax credit, May 27. That means which is beyond the time limit. No, I will not allow you to take the input tax credit here. Why? Because it has passed beyond 30th of November or due date of furnishing the annual return, whichever is earlier. But the department gave here relaxation. This 180 days, this condition will not, this time limit will not become applicable. Why time limit will not become applicable here? Why? Because it is a case of re-availment of reversed input tax credit. Whatever ITC that has been reversed, that you are re-availing it now. So that's why this condition will not become applicable. Same, even in the case of supplier also, you can do the same thing. So in case of the supplier, let us say for example, this person has not furnished his GSTR 3B. So till 30th of November, by 30th of November 2026, here also I need to reverse. No, I reversed it. Thereafter, supplier realized his mistake. He made the payment. He filed his GSTR 3B in the month of May 2027. Can I re-avail the input tax credit as a recipient? Yes. Can the GST officer came and put a condition here, a time limit has exceeded? Can he say that? No. Why? Because there also this is a case of re-availment of reversed input tax credit earlier. In that two cases, time limit will not become applicable. Whenever you want to re-avail it, even after 10 years, 15 years also, you can re-avail it. In all other cases, that means if it is because of a genuine mistake. So if it is because not genuine mistake, if it is intentionally something which you have not availed it at all, first time if you want to avail, then it will not become applicable. If you are re-availing the reversed input tax credit, that means already you have availed it within time limit. Thereafter you are reversed it. Then after you want to re-avail it, since you have already availed it within the time limit, no, that's why they are releasing this time limit in that cases. Okay, right. So did I add that point here? I think here that point was missing. No, if you make the payment once again, you have to re-avail it. You can re-avail it. Just try to add it. Write it somewhere. Recipient can re-avail input tax credit on payment made to supplier subsequently. Recipient can re-avail the input tax credit on payment being made to supplier subsequently. Okay, clear and comfortable? So one more case I will tell you. So first I will tell you, yeah, so this is the exception. Time limit under section 16 subsection 4 doesn't apply for re-availing ITC, that is reversed earlier. Next, now I will tell you one more thing here. Let us say for example, one supply has taken place in the month of March 2025. Tax invoice has been given. Okay, so for this tax invoice, what is the maximum time limit? for claiming the input tax credit. Let us say annual return was filed on its due date. So 30th of November following the end of the financial year. So what will be the 30th of November following the end of the financial year? 25 only. March 25 will form part of 24-25 financial year only. So maximum time limit for availing input tax credit is 30th of November 2025. Now this was the original tax invoice. Thereafter what has happened is you sent some goods extra than ordered by the recipient. You sent some extra goods. Okay, so that's why what I have done is I have given one debit note. Let us say I have given the debit note in the month of April 2025. Now on the basis of debit note also I can take input tax credit. For this, what is the maximum time limit? I will give you options also. For this, what is the maximum time limit for availing the input tax credit? Is it 30th of November 2025 or is it 30th of November 2026? Once again, if I put it into context, is it the 30th of November following the end of the financial year in which original tax invoice was given, or is it 30th of November following the end of the year in which a debit note was issued? It was debit note. 30th of November following the end of the financial year in which a debit note was issued, not the tax invoice. Okay, so for this a debit note you can claim ITC till 30th of November 2026. Able to understand? But for credit note, condition is different. If you want to get back your GST by way of credit note from a supplier's perspective, if you want to declare the credit note and if you want to get back your GST, for that what is the time limit? 30th of November following the end of the financial year in which original supply was made. Able to understand? But in the case of debit note, for availing input tax credit, 30th of November following the end of the financial year in which a tax invoice or debit note is issued. Clear? Minute things, my dear students. This is where students often get confused. Clear? Right. So that's what they say here. For debit notes, date of issuance of the debit note, not date of underlying invoice, is relevant to determine the relevant financial year. Next one. So we have one more thing here. Clarification on time limit under 16 subsection 4 in respect of reverse charge mechanism supplies from unregistered person. Let us read it first what they are trying to say here. For suppliers registered from unregistered suppliers under RCM, what will happen there? If you are a person required to pay tax under reverse charge mechanism, right? Supplier is unregistered person. What you will do? Self-invoicing you will do, no? Right. Invoice is to be issued by recipient under 31 subsection 3 clause F. And what will be the relevant financial year for availment of ITC? Say I told 30th of November following the end of the financial year in which invoice was issued. What is the time limit in case of invoice given by recipient himself? In case invoice has been given by the recipient himself, what will be the time limit? Which will be the financial year? Same here, my dear students, is based on the date of invoice issued by the recipient, provided tax is paid and all conditions of 16 subsection 16 and 17 are met. Nothing but whenever recipient is doing the self-invoicing, that itself will become the financial year. 30th of November following the end of the financial year, same time limit will become applicable. If recipient issues invoice after the time of supply and pays tax, they must pay interest on the delayed tax and face penal action. So what they are trying to say here is, this one small thing I will try to clarify. Let us say there is a recipient, he is receiving some supplies and he is required to do self-invoicing under 31 subsection 3 clause F. Invoice is required to be issued within 30 days. That also we have seen, self-invoicing. Let us say supply has taken place in the month of March. In the month of, let us say on 1st of March itself, invoice has on 1st of March itself, supply has been issued. By what date he has to issue the invoice? By 31st of March, he has to issue the invoice. 31st of March, let us say 31st of March of 2026. Now that invoice will form part of 25-26 financial year. The maximum time limit is 30th of November 2026. Yes or no? But let us say sometimes what this kind of people will do is, anyhow invoice is required to be issued by these people only, no? So what they will do is they will make a delay. Instead of giving invoice on 31st of March, if the recipient could delay the invoice and give it on 1st of April 2026, then what will happen? Invoice has been issued in the year 26-27 and you will be eligible to claim the input tax credit till 30th of November 2027. Yes or no? Yes. See, whatever it is, whenever invoice has been given by the recipient, from that date that will be the considered relevant financial year, and from that financial year 30th of November following the end of the financial year. Now these kind of recipients have started doing like this. So in that case also we can't indirectly punish them, but what we can do is, since you have given the invoice after time limit, now you will be liable for penal action. If you are required to give invoice on 31 subsection 3 as per 31st of March 2026, but intentionally if it was found that you are giving the invoice on 1/4/2026, yes, you can enjoy the time limit for you can get the time limit of 30th of November following the end of the financial year. Till 30th of November 2027 you can enjoy the time limit for claiming the input tax credit. Okay, you can claim, but since you have done the violations here, since you intentionally have violated, if the department finds it out later, you will be liable for the penal action. Penal action will be taken against you. Okay, time limit will not get affected, but if it was found it was an intentional case intended to mislead the department and all, now you will be subjected to penal action. So that's what they have told. If recipient issues invoice after the time of supply and pays tax, they must pay interest on the delayed tax, and even they could face penal action under section 122 subsection 13, but this will remain common. From whichever date invoice has been given, that will be taken as relevant financial year. 30th of November following the end of the financial year will remain common. Able to understand? Clear and comfortable, everybody? So this is what the thing which they have clarified it here. Okay, comfortable everyone? Right, next. So till here we will stop it. In the next class we'll try to continue our discussion. Okay, so after break we'll take the lunch break now. After lunch we'll try to continue. Right, so welcome back everybody. So let us try to resume our discussion from wherever we have stopped in the previous session. So almost we are at the verge of completion of this section number 16. So one or two provisions are left out that I will try to complete, and thereafter we will try to revise once section number 16, then we will go ahead with the section number 17. Okay, right. So in the previous session we have completed till 16 subsection 4. So let us now try to understand 16 subsection 6 which we have. Okay, right. Very interesting but little bit confusing. Listen carefully. Time limit for taking input tax credit in case of revoked registration cancelled. Do you guys remember revocation of cancellation of registration? Long ago, so long ago we have discussed? No, recently only we have discussed. So what did I say? First of all, your registration will be cancelled if you have committed any violations, or if you have committed any violations of the provisions of GST Act. Then proper officer on suo motu basis, he can initiate an action to cancel your registration. Now in case if your registration has been cancelled suo motu by the proper officer, being a registered person, you will be given one more chance to get your registration back. So what you can do, you can submit an application for revocation of cancellation of registration. So you can submit an application for revocation of cancellation of registration, and subject to filing of all the returns and all. In case if you are able to file the pending returns, file the pending returns. If in case if you are unable to file it, you have to file it within 30 days from the date you got your registration back. So whatever it is, if your registration has been cancelled on suo motu basis by the proper officer, and if you want to get it back, you can submit an application and they will revoke the cancellation. That means they will cancel the cancellation. You are going to get your registration back. Okay, so I will give you one typical scenario. With the help of that example, I will make you understand what exactly they are trying to say here. Let us say financial year 24-25. Okay, in April 2024, a person has received some inputs. Now he did not claim the input tax credit. There is a recipient who purchased some inward supplies. On that he had paid GST also, but that GST he did not claim it while filing the return for the month of April. He did not file it. Next, while filing the return for the month of May also, he did not claim it. For June also he did not claim it. Like that he kept on forgetting. Now what is the maximum time limit within which I can get that GST? Within what is the maximum time limit within which I can claim that input tax credit? So we have seen 30th of November following the end of the financial year or date of filing of the annual return. Let us say annual return has been filed on its due date, that is on 31st of December. So 30th of November will fall earlier. So maximum you have time till 30th of November 2025. So this is financial year 24-25. Financial year is going to end on 31st of March 2025. So he will have a maximum time of 30th of November 2025. Till that point of time, he is having an option to make the option to avail the input tax credit. That is a maximum time limit, right? Right. So now let us say, for example, after a certain period of time, he committed some violation. So maximum time limit, this you remember. So he committed some violation. Okay. Now he did not claim input tax credit. He did not claim in the month of April. In the subsequent months also he did not file it. Now at a later point of time, his registration was cancelled. He did some violation. PO has cancelled his registration. Let us say his registration was cancelled with effect from 1st of June 2025. His registration was cancelled, or even let me put it earlier. Okay, 1st of June 2025, his registration was cancelled. Effective date of cancellation. Now thereafter, within 90 days, he can make an application. All that provisions are there, right? So he can make an application. So what he has done is he made an application. And ultimately he has got back his registration. That means revocation of cancellation happened. So revocation of cancellation of registration was happened on 15th of December 2025. 15th of December 2025. So till 1st of June 2025, he did not claim the input tax credit. Till 1st of June also, till the time his registration was effective, he did not claim his ITC. So after that, his registration has been cancelled. In case if his registration would have been effective, listen carefully, in case if his registration would have been effective, till which date he would have the time limit to avail the input tax credit? Till 30th of November. Till 30th of November, he is having an option to avail input tax credit. But what happened? So his registration was cancelled on what day? 1st of June. He would have cancelled. If his registration is effective, he would have been eligible to claim that GST till 30th of November. But later he got back his registration. When did he get back his registration? He got back his registration. Revocation of cancellation of registration happened on 15th of December. So his registration will be made once again effective with effect from 1st of June 2025. But he will be able to file the returns now only, no? He will be able to file the returns from whatever date his registration has been cancelled till the date of revocation of cancellation of registration. He will not be able to file the returns. But now his registration has become effective. From whatever date it has been cancelled, it has become effective. But by the time he's got his registration back, the time limit for availing the input tax credit got over. In between only the time is over. No, if your registration has been effective, you would have claimed it. But since your registration has been cancelled, later when you back the revocation of cancellation of registration, by that point of time, whatever time limit we have seen under 16 subsection 4, the time limit got over. That means this person has lost his right to claim the input tax credit. No, should be given one more opportunity or not? Yes, he should be given one more opportunity. So now what the department has told is, in case, now what you will do is, if you remember the registration discussion once again, whatever returns from the date of cancellation of registration till the time you got that revocation of cancellation, whatever returns that are pending, you have to submit that returns within 30 days. In that returns you can claim the input tax credit, even though the date is over. But by the time your registration got cancelled, at that point of time still you are eligible to claim the input tax credit. So at the time of cancellation, if you are still eligible to claim the input tax credit, and thereafter if you have got your revocation of cancellation, so whatever pending returns that you will be submitting, in that returns you can declare that invoice and you can claim your input tax credit. Able to understand? Clear and comfortable? So with the help of this example, if you directly read it, nothing you will be able to understand. If you are able to relate with this example, everything will look very, very easy. See here, if a taxpayer's registration is cancelled and later revoked, they cannot file returns for the period from effective date of cancellation to date of revocation until cancellation is revoked. That's what in our example, I will not be able to file my returns from 1st of June 2025 till 15th of December. Why? Because my registration was cancelled during that time. If recipient has not claimed ITC and any invoice debit note before time limit under 16 subsection 4 lapses, that means before time has lapsed but still you are unable to claim the input tax credit, they cannot claim ITC on that invoice or debit note. If you are unable to file the returns within that time, no, then generally you will lose the right to claim the input tax credit. Relaxation is provided, extending time limit under 16 subsection 4 to the date of return filing if the returns for the cancellation to revocation period are filed within 30 days. If you are filing within 30 days, no, whenever you are filing the return, till that point of time, you are eligible to claim the input tax credit, provided ITC time limit has not already expired on the cancellation date. So here there are some minute things which you are required to understand. See, if I am filing the returns within 30 days, I will get the input tax credit. What if I file all the pending returns after 30 days? Then I will not be able to get the input tax credit. Number one, I will not be able to get that input tax credit. First thing. Next one. So let me tell you one more thing. Let us take the same scenario. A person has purchased goods in the month of April, but while filing the return for the month of April, he did not avail the input tax credit. He did not keep availing it. So his registration was cancelled with effect from 15th of December 2025. When his registration was cancelled, 15th of December 2025, his registration was cancelled. What is the maximum time limit he had to avail the input tax credit? 30th of November. That means till 30th of November, he did not claim the input tax credit. And on 15th of December 2025, his registration was cancelled. Thereafter, he made an application for revocation of cancellation, and his registration, he got it back. Let us say, for example, on 15th of February 2026, he got his registration back. So from here, revocation of cancellation will be effective. Now, whatever returns which are pending from the date of revocation, from the date of cancellation till the date of revocation of cancellation, that he can file it within 30 days. Now, in that returns, can he claim the ITC on that April related invoice? In this returns, can he claim ITC of that invoice, whatever is not claimed in the month of April? No. Why? Because by the time your registration is cancelled, at that point of time limit already got over, expired. So now you can't claim it. So which kind of ITC you can claim it? Whatever ITC which is still you are as on the date of cancellation of registration, if you are still eligible to claim that input tax credit, but at the time you have got your revocation of cancellation, by that time if the time limit has expired, in that case whatever returns you will be filing within 30 days, then only you can become eligible to avail the input tax credit. On the other hand, if by the date your registration has been cancelled, with that date itself, if you are registered, if you have lost already the right to claim the ITC, thereafter you can't file the pending returns and claim the input tax credit. Clear, everybody? Able to understand? Right. So that is what. Okay. 30th November before only. If 30th of November before revoked, then you still have the time limit for filing the returns, no? Then as on 30th of November, you will not find any problem. You will not ask this question only. Why? Because you still have the time left for filing the returns. Okay. So this is what this provision 16 subsection 6. So then we have proportionate restriction on ITC. Sometimes even though we have complete ITC, but there will be proportionate restriction. Only proportionately we can avail input tax credit, for not for full things. That I will anyhow try to explain in our subsequent discussion. And also ITC is not allowed on certain supplies. What is that ITC which has been blocked? That will try to cover it under 17 subsection 5. This too just for introduction we have given it here. That means sometimes all the conditions will be fulfilled. All the conditions you have fulfilled, but still you will not be able to claim input tax credit. In some cases full ITC you can't claim, only proportionate amount you can claim. In some cases even full ITC you can't claim it. What are that cases? Anyhow we are going to discuss in the section number 17. This you can ignore it here. Okay, right. So if we have a quick recap of what and all we have covered in section number 16. So tell me guys, what is section number 16 talking about? Eligibility and conditions for availing the input tax credit. So 16 subsection 1 talks about eligibility. What did it say? Registered person can take ITC, that too on that goods or services either which are used or intended to be used for business purposes, that we call that, on that you become eligible to avail the input tax credit. Then 16 subsection 2 is going to talk about conditions. Just being a registered person or receiving the goods or services with the intention of using in the business alone will not be enough. You are required to comply with some extra conditions in order to be eligible to avail the input tax credit. What are that conditions? Number 1, 16 subsection 2 clause A, you should have some tax paying document, which could be debit note, which could be tax invoice, debit note. In case of imports, bill of entry, a document from input service distributor. So like this, any kind of document you should have, and on that document some minimum details must be there, like amount of tax, description of goods or services, value, GSTN of the supplier name, etc. Then clause B, what is clause AA, sorry. We have a clause A. What is clause A saying? That amount of GST should have been, that invoices should have been filed by your supplier in your GSTR1 or IFF, and they should have been reflected in GSTR2B. If not reflected in the current month, you can't avail it, but if it is, whenever it is reflected, then you can claim it. Next, clause B. What is clause B saying? You should have received that goods or services. So here also, here few things we have seen. Bill to ship to transaction we have seen. In case of bill to ship to transaction, even though the recipient has not received it, it will be deemed as if it has been received. Then, and also I have told X works clarification. In case of X works contract, it will be deemed as if the goods are received by the recipient when they are handed over for transportation to the transporter at the delivery at the factory gate itself. Then only it will be deemed to have been received. Thereafter, clause BA we have seen, where whatever ITC that is available, that should not have been restricted. It should not be restricted. Then thereafter, clause C. What does clause C say? Supplier should have paid the amount of GST to the government. So here how this mechanism actually works out, it if the amount is reflected in your GSTR2B, you can claim it. The government will wait for the supplier to furnish his GSTR3B till 30th of September following the end of the financial year. If by that point of time also, if the supplier is not filing his GSTR3B, then first an intimation will be sent to the recipients, and they will be asked to reverse their ITC by 30th of November without interest. If you are not reversing it by 30th of November, then you are required to reverse it along with interest. Then thereafter, what is the next condition? Goods, so here are okay, when the supplier has made the payment of the GST, you can re-avail it. So then we have one more condition, 16 subsection 2 clause D. What is that? 16 subsection 2 clause D says you should file GSTR3B in order to avail the input tax credit. Then we have seen some provisos. What provisos we have seen? First proviso told that in case if you have received the goods in lots, when you receive the last lot or consignment, then only you become eligible. Second proviso says you are required to make the payment to the supplier within 180 days. In case if you are not making the payment within 180 days, then you are required to reverse the ITC. In case full amount is not paid, full ITC you have to reverse. In case a partial amount is not getting repaid, proportionately you have to reverse your ITC. Along with interest, you have to reverse it. However, this payment condition, making the payment within 180 days, is not applicable in a few cases. In case of those supplies where tax is payable under reverse charge mechanism, in case of deemed supplies without consideration as specified under schedule number 1, and also in case of those additions which are added to the value of supply as per 15 subsection 2 clause B. And thereafter, later, if you are making the payment to the supplier, whatever ITC that you have reversed, that you can re-avail it. So this is what 16 subsection 2 altogether talking about conditions. Then we have seen 16 subsection 3, which is talking about capital goods. In case of capital goods, if you have paid any GST, either you can avail input tax credit or you can claim on that depreciation under income tax. A dual benefit is not allowed. Then 16 subsection 4 is going to talk about the time limit. What is the maximum time limit within which you can avail the input tax credit? They told that the maximum time limit, is the video getting stuck? Overall, everything is okay only, no? Okay. So 16 subsection 4 says that that maximum time limit, in case if you did not claim the input tax credit on any invoice or debit note, you need not worry. So there is still, they are giving you time. The time which they give is 30th of November following the end of the financial year, or date of filing of the annual return, whichever is earlier. Within that time you can declare it. However, here you have to be this time limit will not become applicable in those cases where there is a re-availment of reversed ITC earlier. And also when we talk about debit note is Debit note whenever it is issued, not whenever the tax invoice is issued. So from the end of the financial year of 30th November following the end of the financial year in which a debit note has been issued, from there you can claim the input tax credit. And what else we have? In case of unregistered, in case of recipient liable to pay tax under reverse charge mechanism, and where he is doing self invoicing, whatever is the date of issuance of the invoice, that will become the relevant financial year for the purpose of calculation of the time limit. There I told you one small thing. Sometimes recipients can try to play the cheap tricks where they will try to intentionally give the invoice late so that they have most of the time limit for availing input tax credit. Okay, you can get the time limit, but in case if you are caught, you will be liable for the penal action and all. Then we have seen 16 subsection 6. 16 subsection 6 talks about availment of credit in case of revocation of cancellation of registration. If I have to tell you in one simple paragraph the summary there, so what they have told is, in case at the time of cancellation of registration you are eligible to claim the input tax credit, the time limit has not yet expired. Thereafter your registration has been cancelled and later you are revoking that, later you are revoking it, and by the time you got the revocation of cancellation, the time limit specified under 16 subsection 4 got expired. No issue. If you are filing the returns within 30 days, then whatever is the date of filing, till that point of time you will be considered to have been eligible to avail the input tax credit. That's all. This is what regarding section 16 related discussion. Now we will try to understand section number 17. This is what relevant for the CA Inter. Okay, so now we will try to understand section number 17. Sir, what we are going to discuss as a part of section number 17. In the section number 17, we are going to mainly talk about two aspects. Number one is apportionment of credit. Number two is blocked credit. Apportionment of credit is not that important, but what is going to be the most important thing is blocked credit discussion is going to be very important. A favorite area for the examiner, if at all he wants to ask a question from this chapter input tax credit, 99% of the time the question is going to come from this blocked credit, 17 subsection 5. But before we go to that important discussion, let us try to complete this apportionment related discussion. So I will try to tell you in simple case what they try to say here. See, let us say you are a registered person. Okay, you are a registered person. Let us say you are making taxable supplies. You are also making exempt supplies. Or let me put it this way. You are making taxable supplies. You are also making zero rated supplies. And also you are making exempt supplies. Okay. Sir, what are taxable supplies? Taxable supplies are those supplies on which you will be liable to collect the GST. Zero rated supplies are nothing but something which is supplied to SCZ exports. They will fall under zero rated. Exempt supplies are those supplies on which you will not be liable to pay any amount of GST, which has been wholly exempted. So out of these three supplies, what only you will be able to collect the GST? Only on taxable supplies only you have a liability to pay the GST. Yes or no, my dear students? Listen carefully. Very simple point. We'll try to wind it up in a few minutes. So you are making multiple supplies. You are making taxable supply. You are making zero rated supply. You are making even exempt supplies. On all that, taxable supplies are the only supplies on which you have a output tax liability. See, zero rated supplies, even though you don't pay any GST on it, zero rated supplies will always have some advantage. Why? Because they increase the foreign reserves of the country. Whenever you are making exports, whenever you are sending to SCZ and all, from the SCZ it will go to exports once again. So zero rated supplies always enjoy privilege. Country always try, as a country perspective, they will always try to give encouragement. The government will always be ready to give benefits to those people who are making exports or who are mainly oriented towards exports. But exempt supplies are those which are completely exempt, on which you are not required to pay any GST. Even on zero rated supplies also you are not required to pay GST, but they enjoy privilege because they are promoting the exports. Now I will tell you one simple thing. Let us say, for example, this person is buying a product X. This person is buying a product X, raw material he is purchasing. That raw material will be exclusively used in the making of exempt supplies only. That raw material is getting used only for the purpose of exempt supplies. That raw material is purely only for exempt supply. We don't use it. That raw material we will not use it for any other purposes. Then what we should do? On that, should ITC be made available or ITC should not be made available? It should not be made available. Why it should not be made available? because you are purchasing a product on which you are not required to pay any GST. Using that product, you are purchasing one, you are ultimately making one outward supply on which you are not liable to pay any GST. If you don't have any output tax liability, why you should be given input tax credit? Yes or no? So one thing is certain, if you are purchasing any goods on which there is no output tax liability, then department told, no boss, we will not give you ITC. Why? Because the whole purpose of ITC is to adjust your output tax liability, but you are using that inputs for such purposes which are completely exempt, on which you are not required to pay any GST. Simple logic here, no output tax liability, no input tax credit. Okay, so that on that ITC will be disallowed. Next, let us say there is a product Y, another raw material Y they are using, which is exclusively used for making taxable supplies. Which is exclusively being used for what? Taxable supplies. Let us say 1 lakh worth of purchase they have made, 18,000 rupees of GST they have paid. Using that, they are manufacturing a product A which is completely taxable. On that, will ITC be available or not available? Should it be fully available? Not. It should be fully available. Why? Because I am exclusively using it for the purpose of making taxable supply. Now let us say this entity has purchased one more product Z. This they are using it for zero rated supplies. For what purpose? Zero rated supplies. That means using this product Z, they try to manufacture or do some supply of product that is zero rated. That product completely they are supplying it to SEZ only. So if they are supplying to SEZ, means they enjoy zero rate. That means you are not required to pay any GST on that. So you tell me, on this product Z, are you required to allow input tax credit or not? Should this person be allowed to have input tax credit or not? Logically speaking, no. Why? Because no output tax liability, no input tax credit. But as I have told, government always wants to do favor to those who are promoting the exports. Those who are promoting exports, that you can use it. That for that you have to be given benefit. There you should not be punished. So in order to encourage, what they have told is, this product Z, even though you are exclusively using it for the purpose of zero rated supplies, still we will allow you input tax credit. This is a kind gesture shown to the people who are contributing for the foreign reserves of the country. If I have to put it in very simple terms, okay, there is no output tax liability, but still, since you are contributing to the exports of the country, as a kind gesture, we will allow you to take the input tax credit, even though there is no output tax liability. Clear? So what I have clarified, if there are any inputs which are getting exclusively used for exempt supplies, no GST, no ITC will be allowed there. If you are using any inputs exclusively for the taxable supplies, no restriction, full ITC. And one extra point what we have clarified is, if you have purchased any inputs which you are using exclusively for the purpose of making zero rated supplies, there also you will be allowed to have input tax credit. Okay, then let us say this company is purchasing a raw material A. Now this is a common raw material. This A is a what? Common raw material. This is getting used by this registered person for making taxable supplies also, for making zero rated supplies also, for making exempt supplies also. A single raw material, from that raw material they are using the manufacturing process. Using that raw material, they are producing some products. Out of that, few products are taxable, few products are getting sold to SEZ, few products are exempted. So a common raw material they are using, common inputs they are using, which they are using it for taxable supply, zero rated supply and exempt supply. Now you tell me, this material A, 1 lakh they have purchased, paying 18,000 rupees of GST. Should this 18,000 rupees of GST be allowed or not? If allowed, should it be fully allowed or proportionately allowed? It should be proportionately allowed. And for what proportion it will be allowed? So whatever proportion that you are using it for taxable supplies and zero rated supplies, for that you can enjoy, for that proportion you can take input tax credit. But whatever portion that you are making use it for exempt supply, that proportion will be not allowed. That proportion will be not allowed. Proportionately only ITC will be allowed. So whatever proportion that can be dedicated for taxable supplies and zero rated supplies, that you can take it, that proportionate amount you can take it as input tax credit. But whatever proportion that you are using it for exempt supply, that can't be allowed as ITC. Sir, but on what basis we will divide it, sir? On what basis I have to divide that ITC? Should I divide it on the basis of should I divide it on the basis of sales of the products, or is there any other basis, or on the basis of cost of production? So on what basis, sir? That we will try to learn it at the CA final level. That is not a part of our CA inter syllabus. Just you have to realize the fact that if there are common inputs which are getting used for taxable, exempted and zero rated as well, only that proportion which is attributable to taxable and zero rated supplies only can be allowed as input tax credit. That proportion which is attributable to exempt supply cannot be availed as input tax credit. Sir, but how to determine that proportion, sir? Not a headache for us now. That we will try to learn it as a part of our CFNL. Clear? This thing everybody clear? Now, on similar terms, one more case where proportionately we require is, let us say there is a registered person. He is running a business. Okay. Now, he purchased some material. He purchased some inputs. He received some inputs. Let me put it this way. There is a person. There is a person who is who is staying in a two-story building. Who is running in a what? Two-stair building. Now, in that two-stair building, first floor he is having office. Ground floor he is having ground floor he is having office, commercial purposes. First floor he is having a house where he is staying. Okay, he has taken internet connection, Wi-Fi connection exclusively. He has taken it for your house. Only for the first floor he has taken the internet facility, on which he is paying some, let us say some 2000 rupees he is paying, on which 500 rupees is a GST. Now this 500, should it be allowed as GST or not? Should it be allowed as input tax credit or not? No. Why? Because it is not for business purposes. Let us say this person has taken a separate internet connection only for his ground floor. On that also he has paid some 2000 rupees and 500 rupees GST he has paid. Can that ITC be allowed or not? Fully or not? Fully he can allow. Why? Because let us say for example, from say myself, I am a chartered accountant. It's my office where I am supplying services. CA services not exempted. So can I take GST or not? Yes. Let us say I have taken one common connection. I have taken one high bandwidth connection. I have taken some. I am paying some monthly 3,500 rupees, where I am paying 700 rupees in the form of GST. So this common internet connection I have taken, where I am going to use it for my house also. I am going to use it for my office also. Now what I should do? So here also proportionately, whatever proportion of inputs that you can allocate it for non-business purposes, that proportion will be disallowed. Whatever proportion that you are going to make use of it for your business purposes, on that proportion ITC will be allowed. On that proportion ITC will be allowed. So if in case of common goods, common inputs are there which they are getting used it for business purposes as well as non-business purposes, only that proportion which is attributable for business purposes, on that only I can avail input tax credit. Whatever proportion that is attributable for non-business purposes, on that I can't avail the input tax credit. But how to do that apportionment, it's once again a big question mark here. That also once again we'll try to learn it as a part of our CFNL. That also we'll try to learn it as a part of our CFNL. So just for the time being now, I have explained you two cases where we need the apportionment, where there are common inputs which are getting used for taxable, zero rated, exempted, and some common inputs are there which are getting used for business and non-business purposes. In those, these are the two cases where apportionment will be required. So if you start reading it here, so section 17 subsection 1 and 2 will talk about it. ITC can be availed when tax is payable on output supply, and cannot be availed on exempt supplies except zero rated supplies. I already told you why zero rated supplies enjoy the privilege. A taxable person making both taxable and exempt supplies, inputs or input services or capital goods which are exclusively used for taxable supply, on that full ITC, no one will stop you. If it is exclusively used for exempt supply, then no one will give you ITC. In case if it is used for taxable and exempt supply, proportionate ITC which is attributable to taxable supply is available, apportioned in the ratio of taxable and exempt supply. You have to apportion it. How to do it, we'll talk about it later. But zero rated supplies you can enjoy. Even though zero rated supplies you are not able to pay any GST, they will be treated at par with the taxable supplies. Next, taxable person using inputs, input services, capital goods for business purposes and non-business purposes. If they are exclusively used for business purposes, no one will stop you, take full ITC. If it is getting exclusively used for non-business purposes, no ITC. If it is getting used for both business and non-business purposes, proportionate ITC attributable to business purpose is only available. So ITC can be availed on inward supplies for making zero rated supply. So exports and supplies for authorized operations to SCZ unit or SCZ developer. So all that will come under zero rated supplies. For that proportion you can enjoy the ITC, no restriction is there. Clear? So this is what regarding 17 subsection 1 and 2. Now we will come to the next most important concept in this section number 17, which is going to be 17 subsection 5, where it is called as blocked credit. Once again, I am telling you, very favorite area for the examiner. Most of the times the questions are going to come from here. Okay. So what is this blocked credit? The name itself says. What is this blocked credit? So the name itself says blocked credit refers to those kind of assets or those kind of inputs or input services on which, even though you are eligible, even though you are using it for business purposes only, even though it is used for taxable purposes, using taxable supply, even though you are complying with all the conditions given under 16 subsection 2 also, but still ITC is blocked. If you are buying certain goods, certain services, certain kind of things, then ITC is completely blocked, no matter whether you comply with the conditions or not. See, actually what they have identified is, what kind of goods or services they have identified is, those kind of goods or services where it is very difficult to establish whether it is getting used for business purposes or non-business purposes. We can't bifurcate it. One simple example I will give you. Say I am a chartered accountant. I bought a car. I purchased a car. I will say that I purchased a car because I have to every day come to my office, leave for my office. I have to visit the client. I have to visit the GST offices. I have paid some 10 lakhs worth of 10 lakh. I have purchased from 10 lakhs worth of car. On that I have paid some 3 lakhs, 4 lakhs worth of GST. Why? Because I have shown you already significant portion in case of vehicles will go to GST only. So now what I will do is, I will say I am purchasing the car for my business purposes only. I will claim the full amount of ITC. But how the department will come to know whether you are using the car for your business purposes or for your personal purposes? On a Sunday, I went with my family on a vacation, taking all my family in my car. How the department will come to know? Yes or no? Or let us say I purchased food for my staff. I am conducting one event, anniversary celebrations I am doing, whereby I have ordered food from the restaurant, and that food has been served to my employees. Business expense only. Government told on food also will not give you any GST. Because who will know? How the government will come to know whether that food was ate by their employees or their family members? How the department will be able to know about it? So like this, some ambiguous goods are there, ambiguous services are there, or capital goods are there, on which it becomes extremely difficult to bifurcate business and non-business purposes. Department told, we don't want headache on all this. We will do one thing. We will identify certain goods where it is very difficult to establish what is business, what is not for business. That we will tell you, on that goods or services ITC is blocked. We will not give you ITC. Tomorrow don't come and question us. I am using it for business purposes. I have tax paying document. I complied with all the conditions, and don't come and irritate us. We have identified a few goods or services and even capital goods under 17 subsection 5 that we will not allow you to take input tax credit. So if you want to use it for full business purposes also, I can't go and question tomorrow to the government, sir, I'm keeping my car at office only, sir. I don't even take my office to my home also, sir. I want to take input tax credits, sir. Government will say get lost. Why? Because motor vehicle has been identified under 17 subsection 5, on which ITC is blocked altogether. So those assets, those goods, services or capital goods on which ITC is blocked, that's what we are going to see now. Okay, shall we have a look at it? Let us see. ITC is allowed on most inputs and input services also. Not just that, on capital goods also. In most of the cases, ITC on input services, capital goods is allowed under GST, except for items which are listed in 17 subsection 5, except if the item is falling under 17 subsection 5, such as those for personal consumption. Even on immovable property also they have blocked, on telecommunication towers, and taxes due to tax evasion detection. In the name of these goods, people are doing so much of tax evasion, so government doesn't want to have all this headache. They have identified certain things under 17 subsection 5, but in some cases it is fair injustice. There are certain goods where we genuinely use it for the purpose of our business, but still the department has identified. Why? Because even we can't help it out. See, government should bring up some mechanism, but they can't say that because of a few people doing tax evasion we will block ITC on everything. So that is here, because of 17 subsection 5, I genuinely does not favor the government. Why? Because you have to work out a model, you bring up some calculation, but you can't say completely this asset is blocked, this good is blocked. For example, motor vehicle, I really need a vehicle for my office purposes. I am using it, But government, they should have worked out some proportion. Okay, 20% ITC you take, 30% ITC you take. They should have worked out some proportion, but they have directly told no, not even zero, not even 1 rupee of ITC also will allow. So this is something which is creating a lot, which has created a lot of hardship for many business person, and it is still creating it. Okay, so anyhow, let us see. So the various goods or services on which credit is blocked are discussed here under. Very important, listen carefully. First one, clause A. So what is the first category of item on which ITC is blocked? Motor vehicle for transportation of passengers, that too with a seating capacity of less than or equal to 13, including the driver. Here we call that motor vehicle as ineligible motor vehicle. So why do we call that as ineligible motor vehicle? Because it is ineligible for input tax credit. And what is that vehicle which is ineligible for input tax credit? Number one, motor vehicle which should be designed to carry passengers. First point, it must be designed to carry what? Passengers. If I buy a truck, on that will I be able to enjoy input tax credit? Yes, you can enjoy the input tax credit. So if I purchased, let us say for example, if I purchased mini auto where backside will be open, where I can transport the goods, will I get eligible to claim input tax credit? Yes, 100% yes. Why? Because a restriction is there. ITC is blocked only on that motor vehicles which are designed to carry passengers. If a vehicle is designed to carry goods, on that no restriction is there. Recently I came across one of the client. He purchased one, as I have told, that auto kind of thing only, electric auto he has purchased, where backside will be open, where you can load the goods, and that will be used only for the goods. He paid somewhere around some 4.5 lakhs or something he has paid, but he is not claiming GST. When I asked him why you did not claim the GST on that, he told that our auditor said no. I asked him to question his auditor, boss, why I am not able to claim the input tax credit. I asked him to question. He was saying that motor vehicles ITC is ineligible. So it was not motor vehicles on which ITC is ineligible. Motor vehicle which is designed to carry the passengers. Many chartered accountants are in this wrong notion. Many people are there. So motor vehicle which is designed to carry passengers, on that ITC will be ineligible. Okay. Now two-wheeler, if I purchased a bike, scooty, on that will I be able to avail input tax credit? No, it will also fall under motor vehicle only. Designed to carry passengers only. Two-wheelers are also designed to carry passengers. So motor vehicle designed to carry passengers, whether it is two-wheeler, three-wheeler, four-wheeler, whatever it is, if the vehicle is designed to carry passengers. And also one more condition, which should have a seating capacity of less than or equal to 13 persons, including the driver. Maximum seating, if the seating capacity is falling less than or equal to 13, then only ITC will be restricted. Let us say there is a IT company, it purchased a bus, big bus, where 30-40 seats will be there. It is using that bus for the purpose of transportation of its employees. Will ITC be eligible or not? 100% eligible. Why? Because restriction is there only when the seating capacity is less than or equal to 13. If the seating capacity is more than 13, including the driver, it will not fall under block the credit. Only on what kind of assets ITC has been blocked? Only on what kind of motor vehicles? Motor vehicles for transportation of passengers, that too having a seating capacity of less than or equal to 13, including the driver. On that only ITC is blocked. Right. So now, what is the meaning of Motor Vehicles and Conveyances Act defined in CGST Act? It excludes, that means what will not get included in the motor vehicle? Vehicles running upon fixed rails, railways will not fall under motor vehicle definition. They have specifically excluded. Railways will not fall under. It excludes motor vehicles. Next one. Special purpose vehicle for being used in a factory or any enclosed premises. Only it will run within the premises. Like for example, in big factories, you will find that white kind of things, where they will load the people, and that will go only inside the factory only. That you can't come and drive it on the road and all. That will also not form part of motor vehicles. That means on that you can claim input tax credit. And also vehicles with less than 4 wheels fitted with engine capacity of up to 25 cc. Less than 4 wheels. That means what? 3-wheelers, 2-wheelers will come here, but not all 2-wheelers and 3-wheelers. What kind of 2-wheelers and 3-wheelers? Those are up to 25 cc. Many vehicles will get disqualified. Only bicycles have 25 cc of capacity. Electric vehicles, small electric vehicles. So today, even if you take one normal scooty also, it is having somewhere around 120 cc, 100 cc vehicles we have. So that means 2-wheelers or 3-wheelers, if they have a engine capacity of more than 25 cc, then they will fall under ineligible motor vehicle, on which you can't avail input tax credit. Okay, but specifically 3 things they have excluded from the motor vehicle definition. That means on these 3 things you can avail input tax credit. What are the 3 things on which you can avail input tax credit? Vehicles like railways, train is there, on that you can claim input tax credit. Or those kind of special purpose vehicle for being used in a factory or an enclosed premises only, not outside. And similarly, vehicles with less than 4 wheels which are fitted with an engine capacity up to 25 cc. So if they are not falling under ineligible motor vehicle, that means on these 3 things I can avail input tax credit. ITC is not blocked. And apart from that, motor vehicles designed to carry passengers, full ITC, no restriction. Designed to carry goods, sorry. Motor vehicles designed to carry goods, full ITC, no restriction. Motor vehicles designed to carry passengers having a seating capacity of more than 13, no restriction, full ITC. Able to understand? But however, exceptions are there. So what is the general rule? I told that motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. On that, ITC is blocked. For that, exception is there, which means what? That means in some cases, even though it is a motor vehicle designed to carry passengers less than or equal to 13, still I am entitled to take the input tax credit. Let us say, for example, normal rule, if I purchase a car, I can't enjoy input tax credit. But in some cases, even though if I am purchasing a car, I become eligible to take the input tax credit. Sir, what are they? Number one, so ITC is allowed when the ineligible motor vehicle is used for eligible purposes. Sir, what are that eligible purposes? Number one, making further taxable supply of the same of such motor vehicle. I am a vehicle dealer. I am purchasing the vehicle, and that vehicle I will sell it. If I am purchasing the vehicle and if I am selling the vehicle, so let us say for example, automobile dealer here, there is a dealer who is selling Tata Motors cars. What he will purchase? Cars, which is a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. That what, for what purpose he is using it? For making further supply. He will buy the cars, he will sell the cars. For that person, ITC will be allowed. Why? Because that is a normal goods for him, that is an input for him. So on that, in that case, ITC will be allowed. When? Number one, if it is used for making further taxable supply of such motor vehicles, or making taxable supply of transportation of passengers. Making further supply of transportation of passengers. Sir, what do you mean by that? See, let us say for example, I'm a car operator, travel operator. I purchased a 4-wheeler, I purchased a car. And why I am using that car is, using that car I am providing transportation services, passenger transportation services. For say for example, I am a cab driver. So I purchased a car. Using that car I am providing the services of passenger transportation. I am picking and dropping the people, I am for fare and all. So then you can enjoy the input tax credit. So if you are buying a motor vehicle, but if you are using it for providing the output services of transportation of passengers, then it will be, then you are eligible for input tax credit. Now, making taxable supply of imparting. Okay, before I come to this point, I want to talk about this. See, they are telling that if you are buying a motor vehicle for making taxable supply, for making outward taxable supply of transportation of passengers, then you become eligible for ITC. No? Let us say for example, Infosys company purchased a car they have purchased having seating capacity of 4. And why they have purchased that car is, they are using that car for transportation of their employees. They will pick their employees from their home and they will drop the employees to their homes. Now, will Infosys become eligible to claim the input tax credit on that vehicle? They are into transportation of passengers. No, they are not making any outward taxable supply of transportation of passengers. They are using it for their official purposes only. On that, they can't enjoy input tax credit. So when we say you are using it for the purpose of making the taxable supply, that means on which you are making a taxable supply. If you are collecting the amount of remuneration, if you are collecting the consideration from the other person, employer, yeah, it will, the relationship between the employer and between employees and employer, it will fall under employer, and anyhow they will not charge any consideration. If at all they are charging, anyhow they will not charge any consideration. They are purely providing it as a service for the purpose of picking and dropping their employees. Able to understand? But what is eligible? If you are using the ineligible motor vehicle for the purpose of providing outward taxable supply of passenger transportation services, they are talking about the cab drivers and tour operators here. They will become eligible to claim the input tax credit. So one more exception where you can take the input tax credit is making taxable supply of imparting, training or driving on such motor vehicles. Sir, what do you mean by that? If I am running a driving school, if I'm running a driving school where I am purchasing a vehicle, and why I am purchasing that vehicle is using that vehicle I am providing the outward taxable supplies of what is that, imparting training or driving on such motor vehicles. So mainly driving schools also can get the exemption, can get that input tax credit, because that is also eligible purpose. Clear everyone? So what we have told in clause A, motor vehicles designed to carry passengers having a seating capacity of less than or equal to 13. So, however, in the motor vehicles, what will not get included? Railways, special purpose vehicles which will move only within the factory or enclosed premises. Even having less than 3 wheels but have a fitted engine capacity of up to 25 cc. So these that means on that you can claim input tax credit. But when it is an ineligible motor vehicle, but still if you are using it for 3 eligible purposes, you can claim input tax credit. What are they? Number 1, if it is making a further taxable supply, if it is engaged, if the person is engaged in making further taxable supply, or he is using that ineligible motor vehicle for the purpose of making taxable supply of transportation of passengers, or if he is using that motor vehicle for making a taxable supply of imparting training on driving such motor vehicles. Nothing but driving schools and all can avail the input tax credit. Now here there are a few note points. ITC is allowed on motor vehicles with seating capacity greater than or equal to greater than 13. No restriction on that, you can avail full ITC. ITC allowed on motor vehicles used for transportation of goods, trucks, tippers, goods and transportation vehicles on which ITC will be allowed. Availability of ITC on demo vehicles having a seating capacity of less than or equal to 13. Sir, what is this? So one issue has come before GST department. So what is that is, now today when you go to dealers, let us say for example Varun Motors we have. Varun Motors is the one of the biggest dealers of Maruti Suzuki vehicles. They sell the Maruti Suzuki cars. Now let us say for example they have purchased some 100 vehicles. Why they will purchase that vehicle? Because they have an intention to sell it. They will sell these 100 vehicles, they will sell it to the further customers. So that's why they have purchased that 100 vehicles. Now these are the motor vehicles which are ineligible because they have car, no, they are car having a seating capacity of less than or equal to 13. But here they can enjoy input tax credit. Why they can enjoy input tax credit? Because they are engaged into making of further supply. Okay. Along with that, they purchased one more car. Now why they have purchased that car is they are keeping that as a demo vehicle. They are keeping that as a what? Demo vehicle. Nothing but today if you want to go and purchase a car, first you will have a demo. You can go for a demo ride, right? Where for that purpose they will keep for each model one car they will keep for demo. Where for example if I want to get some car, let us say I want to get some Maruti Desire, Swift Desire car I want to buy. So I went to the showroom and told, boss, I want to buy the car, I want to test drive. So they will always, for every model they will have one car where you can use it for test drive. So like that one car they have purchased which they are using it as a demo vehicle, where if the customer wants to experience how the feel will look like, they are using it for test drive. Now a doubt has come here whether on this demo vehicle they can claim the input tax credit. Whether on the demo vehicle they can take the input tax credit. See, for only 3 purposes they have allowed. Number 1 is what? Making a further supply. Number 2 is what? Should use it for the purpose of providing supply of passenger transportation services. Or number 3, you should be engaged in making taxable supply of importing training of such motor vehicles. Now, is it getting covered anywhere here? So what GST officers have started doing is these demo vehicles they have restricted the ITC. But these dealers have started fighting for it, and the GST has gone to GST department and they have given a clarification that even though these demo vehicles are not directly made for further supply, but they are used in the process of making the further supply. Yes or no? So that means unless and until a customer experiences a test drive, he will not buy the vehicle. So that means it is also indirectly getting used for making further supply. If they have to sell the other models, they need the demo vehicle. So using that logic, the department has clarified even on demo vehicles also they can avail the input tax credit. There is no restriction on it. Why? Because that will also be deemed to be used in the course of that is also used for one of the used in the further supply, making further taxable supply. So that's why on that ITC will be allowed. So that's what they have told. Demo vehicles used by dealers for trial runs promote further supply of similar motor vehicles. So ITC on such demo vehicles is not blocked. That means ITC is allowed. Understood? So that is what clause A is all about. Now let us try to understand clause AA. So what is clause A talking about? Vessels and aircrafts. What do you mean by vessel? Ships, conveyance which is generally getting used in the used in ocean, in water. So like if I have a boat, or if I have a hatch, if I have a ship, if I have a cargo, so that I call it as vessel. Aircraft. conveyances which go in air. So they have told that in clause AA, if you have purchased any vessel or if you have purchased any aircraft, on that we will not allow you to enjoy the input tax credit. If I purchased a ship, I can't enjoy input tax credit. If I purchase a aeroplane, jet, whatever it is, then also I can't enjoy input tax credit. But here also they have given some exceptions. That means a few people, even though they are buying a vessel or aircraft, still they can enjoy the input tax credit. Who are that people who can enjoy the input tax credit on vessels and aircrafts? More or less similar, whatever we have told it here. ITC is allowed when vessels and aircrafts are used for following eligible purposes. What are they? Number one, making further taxable supply of such vessels or aircrafts. Let us say, for example, I have ABG shipyard company. That ABG shipyard company will buy the vessels. Why they will buy the vessels is they will sell the vessels once again. They will sell the ships. So if you are buying any vessel or aircraft for making further supply, then we can enjoy you can enjoy the ITC. Or making further taxable supply of transportation of passengers. Let us say, for example, a tourist company has purchased a vessel, what we call it, cruise ship they have purchased. Now using that cruise ship, they are providing the services of transportation of passengers. Can they enjoy input tax credit? Yes. Indigo Airlines has purchased an aircraft. Why Indigo Airlines has purchased an aircraft? To provide the passenger transportation services. Can they enjoy input tax credit? Yes. Next, not just that, I will tell you this point here. Even if the companies are using it for the purpose of transportation of goods, cargo ships, a company is there which has purchased a cargo ship for the purpose of transportation of goods, not passengers, they can enjoy input tax credit. Or Air India, they have purchased a cargo flight which they are using it for the purpose of transportation of goods. On that also they can enjoy input tax credit. See, this is more or less indirectly to the previous point only. In the previous point, what they have told, directly they have told motor vehicles designed to carry passengers. That means indirectly they have used it for transportation of goods. Here also same thing. In case if someone has purchased an vessel or aircraft, so if they are using it for transportation of goods, then they can enjoy the input tax credit. Next one, making taxable supply of imparting, training. And one more thing here, my dear students, if you see, for all the points they have told making taxable supply, but here they are directly telling transportation of goods. That means they might be using for their internal purposes of transportation. A manufacturing company purchased a vessel for transportation of goods, not for making outward supply. Can they enjoy input tax credit? Yes, they can enjoy it. Next one, so transportation of goods. Next, making taxable supply of imparting, training on navigating such vessels, or making taxable supply of imparting, training on flying of such aircrafts. So what is this? Let us say, for example, some company has purchased some Navy Academy has purchased a vessel. Why they are using that vessel is for the purpose of teaching, for the purpose of training the people on how to navigate a vessel. See, for vehicle we say car driving school here. For vessel we can't say vessel driving school. We call it as navigating a vessel. Similarly, someone has purchased an aircraft. Some aircraft academy is there. Some pilot training academy is there. They are purchasing the aircraft to impart the training on flying such aircrafts. Then they can enjoy the input tax credit. Able to understand? So what they have told in clause AB, vessels and aircrafts, on that ITC is blocked. But however, they have given exceptions. That means what? In some cases ITC is allowed even on vessels and aircrafts. What are that cases where ITC is allowed? Number one, if you are using it for the purpose of making further supply, or if you are engaged in making taxable supply of transportation of passengers, or you are using it for transportation of goods, either for your own purposes or for the purpose of making supplies, or you are imparting skills relating to navigation of a vessel or flying an aircraft. In those cases ITC will be allowed. Clear? Next, let us say clause AB. What do they say here? Services of general insurance, servicing, repair and maintenance insofar as they relate to motor vehicles, vessels or aircrafts referred to in clause A or clause AA. What they simply try to say here is, let us say for example, you have purchased a car on which ITC is not allowed for you, or you have purchased an vessel, or you have purchased an aircraft on which ITC is not allowed. If ITC is not allowed on car, if ITC is not allowed on vessel, if ITC is not allowed on aircraft, then if you have incurred, see for these vehicles you pay insurance, no? On that insurance also you will pay GST. Let us say for example you took a insurance for your car, 10,000 rupees of insurance premium, 1800 rupees of GST. If on car ITC is blocked on insurance of that also. This car you have got repaired For that you have paid repair charges. You have incurred some repairs or spares, whatever it is. Some 1 lakh rupees you have incurred on repair. On that 18,000 rupees of GST you have paid. If you are not eligible to claim ITC on car, you will not be eligible to claim ITC on that repairing also, or repairs and maintenance, whatever it is. So same thing. So what they are trying, same thing with regard to vessels and aircrafts also. So services of general insurance, servicing, repair and maintenance in so far as they relate to motor vehicles, vessels or aircraft, which are referred to in A or A and clause AA. That means simple logic, if I have to put it here, if you are ineligible to claim the input tax credit on motor vehicles, vessels or aircraft, you will be ineligible to claim the input tax credit on its general insurance, services, repairs and maintenance also. Which indirectly means what? If you are eligible to claim the input tax credit on the motor vehicles, vessels and aircrafts, then you will also be eligible to avail the input tax credits on its general insurance, servicing, repairs and maintenance. Let us say for example, I'm a cab driver. I have purchased a car designed to carry passengers, but I'm using it for the purpose of providing transportation of passengers. So now on cab, if I am eligible to take the input tax credit on that cab, whatever insurance I have paid, on that cab whatever services I have incurred, on that cab whatever repair cost I have incurred, whatever maintenance cost I have incurred, on all that also I can take input tax credit. If you take Indigo Airlines, if they have purchased an aircraft on which they can take input tax credit, if they are able to take input tax credit on that aircraft, even on its general insurance, services, repairs and maintenance also you can take the input tax credit. Okay, so simple logic here. If you are eligible to claim the ITC on that vehicle, on that conveyance, even you will be able to avail the input tax credit on that general insurance, service, repairs and maintenance also. If you are ineligible to avail the input tax credit on that motor vehicle, vessel or aircraft, you will be ineligible to claim the ITC on its general insurance, servicing, repairs and maintenance also. As simple as that. Not just that, few more exceptions are also there. Let me tell you. Exceptions, that means in what circumstances you can claim input tax credit on general insurance, servicing, repair and maintenance. Number 1, such services relating to ineligible motor vehicles, vessels and aircrafts when used for eligible purposes. As I have already told you, if you are using it for eligible purposes, you can claim ITC on that conveyance, even on that related services also you can avail. Not just that, such services when received by manufacturer of ineligible motor vehicles, vessel or aircraft. So what they are trying to say here, let us say for example, there is a car manufacturer. Tata Motors company is there. Now Tata Motors company will manufacture the cars, no? They will manufacture the cars. So on that cars, on whatever cars they are manufacturing, they will have a stock insurance, no? Cars will become the stock there. So for that they have taken insurance. Can they avail input tax credit? Yes, they can avail input tax credit. So for manufacturers of the vehicles, they can enjoy the input tax credit. Next, not just that. Supplier of general insurance services in respect of ineligible motor vehicles, vessels or aircrafts which are insured by him. Sir, what do you mean by this? Listen carefully. This is going to be a little bit complicated, but I will try to give you an excellent example to make you understand. Let us say I am a chartered accountant. Okay, I purchased one car. On that car, am I eligible to take ITC? No, I am ineligible to take ITC. I can't take it. For this car, I need insurance also. Let us say, for example, I went to Tata Insurance and I have paid some 1 lakh rupees. I have purchased one very costly car. I paid some 1 lakh rupees of insurance premium. On that, I have paid 18,000 rupees of GST. Can I claim GST on that insurance which I have taken on the car? That also I can't take. So now what happened is, one day my car has been hit with an accident. So I went and hit a tree. Nothing happened to me. I am safe, but car is completely damaged. That car is completely damaged, but I will not be worried. Why I will not be worried? I have an insurance policy, no? So I have taken it to the service center. I told, hey, my car has met with an accident. I have an insurance policy, get it repaired. Now what happened is, this service center has done the repair. Now repair expenses came to 5 lakh rupees. How much? 5 lakh rupees of repair expenses came. On that 18% of GST, 90,000 rupees of GST. But this bill, it will not come to me. This bill I will not pay. This bill will directly go to whom? Tata Insurance Company. Now this service center is providing the services to Tata Insurance, for which they are paying consideration. And the services are what? Services relating to repairs, maintenance, servicing of a ineligible motor vehicle. So practically speaking, this person should not be allowed to take input tax credit, no? But here it is an exception. Why? Because it is his normal course of business. No, it is his normal course of business. So these insurance companies are eligible to take input tax credit on either if they are reinsuring it, on that reinsurance if you have paid any premium, or if they are getting the service done, or if they are getting the repairs done, or if they are getting the maintenance done, on that if they have paid any amount of GST, that insurance companies, the general insurance companies can avail the input tax credit. Able to understand? Quite logical, no? Should they be allowed to take the ITC or not? Yes, they should be allowed to take the ITC. That's what has been told here. Clear? So what is clause A, B? Same idea, students. Initially they have told that services of general insuring, servicing, repair and maintenance in relation to ineligible motor vehicles, aircraft or vessel, on that ITC is not available. But if you are using, some exceptions are there. If you are using the ineligible motor vehicle, vessel or aircraft for eligible purposes, then you can claim the ITC. Why? Because you will automatically become eligible to take the ITC on the motor vehicle, vessel and aircraft also. Similarly, for manufacturers, if it is if such services are taken by manufacturer of ineligible motor vehicle, vessels or aircrafts, then also they can enjoy ITC. And if those services are received by a supplier of general insurance services in respect of ineligible motor vehicles, vessels and aircraft insured by him, even that general insurance service provider also can take the input tax credit. Next. So this is what the note point they are trying to say it here. ITC is allowed on leasing of general insurance, servicing, repair and maintenance relating to motor vehicles, vessels or aircraft. ITC on which it is allowed. That means if ITC is allowed on motor vehicle, vessel or aircraft, even servicing, repairs and maintenance of that motor vehicle, vessel or aircraft also will be allowed. Okay, right. Now here comes the interesting part. Now what some people have started doing is, if I purchase a car, if I'm a chart accountant, if I purchase a car, on that department is not giving me input tax credit. I will do one thing. I will rent a car. Monthly rentals are also available today. I will get a monthly rental. So department initially told what? If you purchase, GST is restricted. Now what I started doing? I have started renting. So now on renting I can get the input tax credit. No, that's what people started doing. Or let us say for example Mukesh Ambani is there. He has purchased an aircraft for traveling for his own purposes. Generally ITC is blocked. But what this Mukesh Ambani started doing is he has started taking aircrafts on rent on monthly basis so that he can enjoy the input tax credit. But this is something which is like overriding the law or not. So that's what they have told, you know. Even leasing and renting or hiring of ineligible motor vehicles, vessels and aircrafts on which ITC is not allowed. If you purchase a motor vehicle, vessel or aircraft, if ITC is not allowed for you, even if you are renting or leasing that motor vehicles also, then also we will not allow you to take the input tax credit. Why? Because it will become a pure loophole here. People will start doing all this renting business, and that person who is renting anyhow he will get on ITC on purchase. See, from whomever you are taking the car on rent, he will get ITC. Why? Because he is using it for the purpose of transportation of passengers, you can say there. Yes or no? So that's why what these people have started doing is they have started renting it out instead of purchasing so that they can enjoy input tax credit. But that is simply an overriding of the law. So that's what the government has told. In case if you are such a person, on purchase of ineligible motor, on purchase of some motor vehicle, on purchase of some vessel, on purchase of some aircraft, if ITC is ineligible for you, even if you take that on renting or hiring also, ITC will be ineligible on that input services. However, if you are a person, if you are eligible to take ITC on the ineligible motor vehicle, vessel or aircraft, like who are doing it, you are using it for eligible purposes and all. If you are eligible to take ITC on the ineligible motor vehicle or vessel or aircraft, then you will be able to take the ITC on even renting or hiring also. For example, if I am a cab driver, if I purchase a cab, I will be able to get the ITC. Instead of purchasing a car, if I am taking that on lease or rent, then also I will become eligible for ITC. Clear? So that's what they have told. Exceptions. Such services used for making an outward taxable supply of same category of services or as an element of taxable composite mixed supply. So one thing is, if ITC is allowed on its purchase, directly in the main heading itself they have told, see, renting or leasing of only such conveyance on which ITC is blocked, then only even that renting also ITC will be blocked. That is anyhow covered in the main heading. That means which indirectly says that in case if you are eligible for ITC on purchase, you will become automatically eligible for ITC on rentals also. But in addition to that, they have also given few more things here. In case if you are renting vehicles, and why you are renting vehicles is you are also into same line of business. So let us say I am a tour operator, I will rent the vehicles and I will give the vehicles on rent. If I am into same line of business, then I can enjoy the input tax credit. Or one more thing also they have told, if you are using it for making an outward supply of same category of services or as an element of taxable composite or mixed supply. Sir, what do you mean by that? So if I am tour operator example, do you understand? This person is taking the rent and using it for making same supply. You can enjoy ITC. Let us say for example, there is a hotel. Now the 5-star hotel is there. If you book an accommodation in this hotel, they will give you accommodation, and even pick up and drop facility of the cab also will be provided. Okay, hotel accommodation, a 5-star hotel, where if you get an accommodation, where you book a hotel accommodation, not just accommodation, you will also get complimentary breakfast there. You will also get drop and pick up also. So they will pick you from the airport, they will drop you from the airport. So nothing but they are indirectly, they are making one composite supply or mixed supply, depending on whether they are naturally bundled or artificially bundled. In that, one of the part is what? Not transport. Okay, I have given you wrong example, I guess. Let me put it this way. Tour operator example. So that will become transportation of passenger services will become. So let us say, for example, there is one tour operator. There is one tour operator. Tourist, he will take you to the places. So as a part of this tour operator, what he is doing is, he will provide you transportation. He will provide you transportation. No, this also will not fall here. What should I give you? One good example I have to give, where it is getting used in the same line of business, like they are giving a car on rent. Okay, hotel example only we will take, not just pick up and drop. So what I am trying to say here is, hotel is only there, where if you book a hotel with them, they will give you accommodation, and along with the accommodation, they will give you one 4-wheeler self-driving vehicle also for you, where you can take they will pick and drop. Okay, pick and drop also permitted. Along with that, they are also giving you a 4-wheeler which you can drive it and go around the places, so long you are staying in that hotel for accommodation. Now this hotel has taken one car on rent. This vehicle, this company, what they have taken car on rent, and this hotel is providing composite supply or mixed supply. In that, one of the component is what? Once again, renting of vehicles. Then also they can enjoy the input tax credit. Okay, so first exception, if you are using, when the services of leasing, renting or hiring of motor vehicles, vessels or aircraft on which ITC is not allowed. On the purchase, if ITC is not allowed, even on renting, leasing or hiring of that motor vehicles, vessels or aircrafts also ITC is not allowed. Whereas some exceptions are there. What is exception number 1? In case if a person is receiving the services of renting, leasing or hiring of motor vehicles, vessel or aircraft, and if he is engaged into making outward supply of same category of services, or he is making a composite or mixed supply in which one of the component is the same line of business. Able to understand? So hotel here, if you take, it is making a composite supply or mixed supply, where one of the component is what? Leasing, hiring or renting of the motor vehicles. So then also you can enjoy the exception. Then one more case, such services when provided by employer to its employees under a statutory obligation. So what they are doing here is, let us say for example, there is one company, Infosys company is there. Generally, if I buy a motor vehicle, if I purchase a car for the purpose of picking and dropping the employees, then generally ITC is blocked there. On the other hand, what Infosys company has done is, they have leased or rented a car. And why they have leased or rented a car is, they are doing that services of picking and dropping their employees. Generally on this also ITC should have been blocked. Why? Because what we have told, if on ineligible motor vehicle ITC is blocked, even on leasing or hiring also ITC will be blocked. But here they have given one little bit of relaxation. In case if the company is under a statutory obligation to provide the drop and pickup facilities, there is some law. According to that law, if that company is statutorily required to pick up and drop the employees, that's why they are taking the motor vehicle on rent, then they become eligible to avail the input tax credit. Purchase, for that this relaxation has not been given. This relaxation has been given only in the case of what? Renting, leasing or hiring of a motor vehicle, vessel or aircraft. So if it is done by the employer to their employees under a statutory obligation, here most important thing is statutory obligation. There must be a statutory obligation under some law or regulation, then you can enjoy the ITC on leasing or hiring only. Once again, not for purchase. Clear? Able to understand? So these are the provisions related with the conveyances. So what we have covered? Come on. Clause A we have covered. What does clause A say? Motor vehicles are designed to carry passengers having a seating capacity of less than or equal to 13. But if you are using it for eligible purposes, what are eligible purposes? Making further supply, using it for making a taxable supply of outward passenger transportation services, or making an outward supply of imparting driving skills of that vehicles. Then clause AA, vessels and aircraft. Unless you are using it for certain purposes, like what? Same, further taxable supply, for making a taxable supply of transportation of passengers, or you are using it for transportation of goods, or for imparting skills relating to navigating a vessel or flying an aircraft. Clause AB, what does that say? So that ineligible motor vehicle or vessel or aircraft on which ITC is blocked. On the same vehicle, vessel or aircraft, if you have incurred any general insurance expenses, services, repair and maintenance, on that also ITC will be blocked. That means if ITC is eligible for you on that motor vehicle, vessel or aircraft, even on that services also you can enjoy the input tax credit. In addition to that, ITC will also be available for manufacturers of the motor vehicles, vessels or aircrafts, and ITC is also available for general insurance companies who are availing that services in relation to ineligible motor vehicle, vessel or aircraft. I gave you example to make you understand that. Then we have one more clause I have told you. This is actually at a separate place. You will find it at a separate place, but since it is related to the motor vehicles, I have brought it up here. So actually where you will be able to find it is that leasing or hiring, actually they have provided at another place. Yeah, here only, sorry. Actually it should form part of B. When you read in the Bare Act, no, this leasing or hiring of motor vehicles will be clubbed in point B, that I have separated and gave it here. Why? Because it is also related to the conveyances, so that's why I have kept it here. So what they are telling, when it comes to leasing, renting, hiring of motor vehicles, vessels or aircrafts on which ITC is blocked. So if on vehicle, vessel or aircraft ITC is blocked, even on its renting, hiring or leasing also ITC is blocked, except when you are using it for making the same course of supply, either independently or as a part of a composite or mixed supply. And also in case if such services are provided by employer to an employee under some statutory obligation, then also they can avail the input tax credit. Clear about conveyance related blocked credits, right? So if it is okay, so we'll take one short break. You guys are feeling sleepy, I guess, afternoon time, so we'll take one short 10 minutes of the break, nothing much than that. So after 10 minutes we'll continue our discussion. Okay, let us continue our discussion regarding this input tax credit. So 17 subsection A, clause 17 subsection 5, clause AA, clause A, clause A, clause AA, clause AB we have covered. Now let us try to understand clause B. So what does clause B talk about? So clause B says that if you are purchasing, if you are receiving inputs, inward supplies in the form of food and beverages, or if you have received the services of outdoor catering, or if you have received health services or some other similar kind of services, on all that ITC is blocked. These are that category of services, once again, where it is very much difficult for us to bifurcate whether it is for personal purposes or business purposes. So if we talk on the specific items whatever are covered here, food and beverages, for example, I'm having some event in my office, I have ordered some food from a restaurant, or I have ordered some drinks, beverages at my place, where I'm feeding it to my staff only, or I'm feeding it to my customers only, but still ITC will not be available. Or outdoor catering, let us say for example I am celebrating some 5 years anniversary at my office, I have invited everybody for dinner, I have received outdoor catering services, I called a caterer and told, hey, 50 people will come to my event, please do provide the catering services. Now that catering service person has told that okay sir, 50,000 will be the cost, on that he has even charged GST also, but the department told no, we will not allow you GST input tax credit on that. Once again, it is highly difficult for which purpose it is getting used. Or beauty treatment, so let us say for example Alia Bhatt. See, I don't have any partiality regarding any Alia Bhatt or any other actors, just that names come out when I take the name at any actor. So let us say for example this Alia Bhatt, so she is a actor, so what is her outward supply? What is her outward supply? She is into that acting services, that is what she is supplying, Now this Alia Bhatt, in order to look good, let us say for example she got some beauty treatment services, some makeup, some skincare treatment she has got. See, she wants to look beautiful, then only she can get the business, then only she will remain in the industry, no? So that's why she has got some beauty services. Department told still we will not allow you to take input tax credit on that. Now Alia Bhatt can't come and argue, hey, it is my profession, I have to look good in order to get the roles in movies or advertisements and all, but still department told what? Who knows whether it is your personal choice to look good or you are doing it in order to get the business, that we don't bother. If you are getting beauty services, we will not be allowing you to take input tax credit. And healthcare services, similarly, if you are getting healthcare services, let us say for example today Ambani undergoes some heart surgery. See, anyhow on healthcare services GST is exempted, but if at all, if any GST is paid on health services, on that also you will not be able to avail an input tax credit. Or cosmetic and plastic surgery. See, on cosmetic and plastic surgery, it will not fall under healthcare services. On that GST is not exempted. But if any actor, if any popular person undergoes cosmetic surgery, plastic surgery, even hair transplantation also will come here. On that also they can't enjoy input tax credit. Similarly, if any life insurance and health insurance was taken, on which if you have paid any GST, on that also you can't avail the input tax credit. Clear? So these are the specific services covered here. Repeat, what are those covered here? Under clause B, food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance, on which on all these services ITC has been blocked. However, GST on term insurance. Term insurance is also a kind of savings, no? It is also a kind of investments, and also insurance is covered here. But whatever it is, if you take the term insurance, on that also ITC will not be available. Why? Because it will fall under broader category of life insurance only, or it is a kind of savings kind of thing and all. Term insurance is purely individuals will take it. Anyhow, that will be there for personal purposes only, no? So that will be on the GST will not get it. However, I'm telling that on these inward supplies, there are some exceptions. What do you mean by exception here? On a few services, you can avail the input tax credit. That means even if you are receiving food and beverages, even if you are receiving outdoor catering services, or you are receiving beauty treatment services, or you are receiving healthcare services, or you are receiving cosmetic and plastic surgery services, or you are receiving life insurance and health insurance services, in some cases GST will be, ITC will be available. Sir, what are they? Number one, once again, if the above services are used by registered person for making an outward taxable supply of same category of goods or services as an element of taxable or composite or mixed supply. So if you are receiving these kind of inputs either to make a same category of outward supply, or as a part of, or one as one of the component of a composite or mixed supply. Let us say, for example, I am running a store, I am running one canteen, I am purchasing the beverages on which I am paying GST, and as a canteen, why I am purchasing beverages? To make further supply, to make the same supply, I can enjoy input tax credit, no issue for that. Or let us say, for example, there is one big shot, he is having some big event, so he called one outdoor catering service provider, and he told, for example, a company is only celebrating his 100 years anniversary. They called they called a catering service provider, and they told, we want 100 items on the menu. In that, one of the item they have asked for is gulab jamun. Now this outdoor catering services, he is expert in preparing all the 99 items, but that gulab jamun he is not aware. Now what he has done is, he has went to another catering service provider who is expert in gulab jamun. He told, I will pay you some consideration, I am conducting an event, at that event I need you to prepare the gulab jamun. So here this person is receiving catering services, but why he received that catering services? To make a same category of outward supply. Then also it will become eligible, then also this person can take input tax credit. Same with regard to beauty treatment services. Let us say, for example, one famous artist has come. So this artist has come to one salon, where in that salon she needed one package, where manicure, pedicure, whatever you call it, everything she wants to get. But she needs one such a service on that expert is not available. They have approached that expert, and she will provide that services to the salon, where salon will pay the money to that beauty expert. Now on that beauty treatment which has been received by the salon to make a same kind of for outward supply, ITC will be available. So like that, the above list of services, if they are getting provided, if they are getting used to make the same course of supply, or if you are using it as a part of one of the element of a composite or mixed supply, I will tell you. Let me tell you, there is an event management company. So this event management company has been approached by one of the company to conduct one event. As a part of that event management company, they are required to do decoration. They are required to provide decoration. They are even required to, let us say, for example, even it is a corporate event, even they are required to do that, what do we call it? MC we call it, anchor. They have to provide the anchors and all, and even they need to provide entertainment. Along with that, they are also required to provide the food. Everything as a package they are providing as a event management services. Now in order to provide the food at this event, as a part of this event management services, either they are receiving some food and beverages. Can they avail input tax credit? Yes, they might not be in the same line of business, but they are including it as one of the element of a composite or mixed supply. Or they are receiving some catering services as a part of this composite supply, then also they can enjoy the input tax credit. See, as a part of event management, even they are required to do bridal and groom makeup also. For that, they have hired a beauty artist who will provide beauty services, which will be used by this event management company, not as the same line of activity, but as one of the component of a composite or mixed supply. On that also they can enjoy the input tax credit. As simple as that. Able to understand clause B? That's all. Clause B is over. So generally on this services, ITC is blocked, but if you are using it either to provide the same line of outward taxable supply, or as one of the element of a component, composite or mixed supply, then you can enjoy the ITC. Next one, and few more activities on which ITC is blocked under clause B, membership of a club, health and fitness center. If you are availing the services of a membership of a club, if a company has taken the some gym membership, some club membership or health center membership for its employees, ITC is blocked. You can't enjoy it. Travel benefits extended to employees on vacation, such as leave, home travel concession. In case if you are receiving any input services, why, let us say for example, one company is getting some services. Let us say for example, some hotel services and all they are receiving. Why they are receiving it is because they have to provide vacation to their employees. On that also ITC is blocked. But however, they give one restriction here. If the above goods which are specified in 1, 2 and 3, if they are provided by employer to the employee under a statutory obligation. So let us say for example, in a Infosys company, they are running a canteen. For that canteen, they are buying some food. And why they are buying the food is because that food has to be provided to their staff. But if there is any law asking them to provide that food, if it is a statutory obligation, that's why they are getting the food or outdoor catering services or any of these services, then they can enjoy input tax credit. Or some corporate company has taken health club or fitness center or gym membership they have taken. Why they have taken? Because it is a statutory obligation. Let us say some law is asking them to compulsorily provide that gym access, etc., health club access to the staff. Then what? Then also they can enjoy the input tax credit. Or they are providing travel benefits for vacation as leave or home travel concession for their staff, but providing that is mandatory under statutory obligation. They are required under some law to give that services to their employees. Then they can enjoy the input tax credit. Able to understand? So if the company is doing it voluntarily, there is no obligation for you to run the canteen in the company, but you are voluntarily doing it and you are buying food, catering services for that. Can the company avail input tax credit on that? No. Why? Because it must be under a statutory obligation. Clear? Able to understand everybody? Shall I proceed ahead with the next item? Right. So now comes the important part. Works contract services received for construction of immovable property. So what they are saying, in case if you are a registered person, if you are receiving works contract services in relation to construction of an immovable property, then they are saying on that works contract services you can't avail the input tax credit. So here the subject matter is works contract. First of all, do you guys remember what is the meaning of the term works contract? Can you please let me know? It refers to any such supply in relation to an immovable property where supply of goods is also involved, supply of services is also involved. So that will be treated as supply of service only, but that I call it as works contract. Now what they are saying is, if any registered person is receiving the services of works contract in relation to a construction of immovable property, on that they will not allow you to take the input tax credit. On that they will not allow you to take the input tax credit. Sir, what exactly they are trying to say here? Let us say there is one company, corporate company is there, or let us say one manufacturing company is there. They want to construct one, they have a piece of land, on that they want to construct an office building. So they have approached one contractor. He agreed to do the construction of that building, where he will supply all the goods also, he will provide the services also. He agreed to construct that building for 1 CR. Supply of services. But in this 1 crore, what is involved? Supply of goods is also involved, supply of services is also involved. And this person is a registered person. He told, sir, for 1 crore, I will provide the services. 18% is the rate of GST, which will come to 18 lakhs. Total 1.18 crore he has charged. Now company has paid 1.18 crores. For their factory purposes or for their official purposes only, they are building that immobile property. But still the GST department told, we will not allow you to take the input tax credit. Whatever 18 lakh rupees that you have paid it to me, that you can't take it as input tax credit. ITC is blocked there. ITC is blocked there. So the department is saying whatever GST that you have paid on works contract in services related to construction of an immobile property, on that ITC will be blocked. You can't enjoy the input tax credit. Anyhow, you can't enjoy the input tax credit. What you can do? Capitalize it, claim the depreciation under Income Tax Act. ITC is blocked altogether. Here you don't have any other choice. What you have to do, if you want to get benefited out of this, even this GST component also, you can go and capitalize it. You claim deduction as depreciation under Income Tax Act. You can't enjoy the input tax credit here. Okay. Now let me tell you one more scenario. Let us say, for example, there is a already existing building, and see this, after the construction, this building the company will capitalize in its books of accounts. That is clear in the first example, right? Let us say there is already a building. On that building, some extra floor is required to be constructed. What is required to be constructed? An extra floor. Now a contractor came forward and told, sir, I will construct that extra floor for you, where he, as a part of that construction services, he will supply the goods also, he will supply the services also. So this will also become works contract. It is in relation to immovable property. So let us say he told this will cost 20 lakh rupees. On that 3,60,000 rupees of GST, total 23,60,000 rupees. Now what the company has done is, whatever expenditure they are incurring, it is going to get qualified as a capital expenditure. They will capitalize this in the books of accounts. It is a capital expenditure. They are going to capitalize in the books of accounts. Now the department told, even this is also a works contract in relation to construction of an immovable property. So this we will not allow you as a input tax credit. ITC will not be allowed for you. So since ITC is not available, what I can do? Only option you have is, if you want to get benefited, capitalize it and claim depreciation on it. Let me tell you one more scenario. Let us say, for example, there is already a building, 4 floors worth of building is there. Now on the top floor, ceiling has got some repair. The ceiling is falling actually. Some part of the ceiling was weak and it was falling. Now this ceiling needs to be fixed. In order to fix that ceiling, you have to bring the labor also. You need cement, sand, iron, all that you need. So one person came forward and he told, I will fix that ceiling for you. Where as a part of that fixing that ceiling, I need to supply the goods also, I need to supply the services also. This also, can I call it as works contract? Yes. This is also an activity in relation to an immovable property, which is involving supply of goods also, supply of services also. It will also qualify as works contract. But this is not something which is qualifying as capital expenditure. This is a normal, regular repairs and maintenance work. So he told that it will charge some 1 lakh rupees. On that 18,000 rupees of GST he will collect. But this expense is not going to qualify as a capital expenditure. Why? Because it is part of, it doesn't fulfill the capitalization criteria as per the accounting standards. That means they are going to charge it as a revenue in the statement of P&L. If such works contract service you are receiving, which does not qualify as a capital expenditure, which is qualified as a revenue expenditure, on that there is no restriction. You can happily enjoy the input tax credit. On that you can enjoy input tax credit. Able to understand? So here what did I say? Initially what they told, if you are receiving any works contract services in relation to construction of an immovable property, then you can't enjoy input tax credit. But I am further filtering it. What exactly has been told is, if you are receiving works contract services in relation to an immovable property which will qualify for capitalization in your books of accounts, on that you can't avail input tax credit. On the other hand, if you are receiving any works contract services which is not fulfilling the criteria of capitalization, which is in the nature of regular repairs and maintenance, which the entity will take it to the statement of P&L, then what? Then you can take it as a input tax credit. See here, some people might get a doubt. So that means, does that mean, is it a choice given to the recipient that if you want to claim input tax credit, don't capitalize? If you want to claim input tax credit revenue, like that, a person can choose whether to capitalize or whether to treat it as revenue. Is that the option given to him to choose? No, my dear students. So whether capitalization required or it should be treated as revenue, it should be governed by the accounting standards. It's not a choice given to you. So as per the accounting standards, if you feel that that expenditure needs a capitalization, you have to capitalize it and ITC will be blocked. If as per the accounting standards, if doesn't fulfill the capitalization criteria, it fulfills the revenue expenditure criteria, then you can avail the input tax credit. It is not something like an option being given to the recipient. If you want ITC, treat it as revenue. If you don't want it as ITC, treat it as capital. No, that is not the starting point. The starting point is, first you have to look at the accounting standard and check whether it is fulfilling the capitalization criteria or not. Then you come and decide whether ITC is available or not available. Clear? Able to understand everybody? Now, one more relaxation has been given. So, sometimes some kinds of plant and machinery will be there, which will also get qualified as which will also qualified as immobile property. Some kind of plant and machinery will also be permanently attached to the earth. So if everything which is permanently attached to the earth will fall under immobile property definition or not? Yes. I will give you one example. Just give me 1 minute. I should have that image on my device. I will check it once. Able to see this? So this is what a part of plant and machinery, no? So but if you see here, this is something which is permanently fastened to the earth. If you see here, concrete structures and all are there. Yes or no? So this, with the help of this concrete structure, it is something which has been permanently attached to the earth. My image gone, huh? Why? Okay, I stopped, instead of iPad I have stopped this. Crazy, right? Fine. Anyhow, so this is the plant and machinery, right? So this is the plant and machinery, so which is getting permanently attached to the earth, when initially we have understood the definition of immobile property. So what did I say about immobile property? Immobile property is something which is land, benefits arising out of land, something which is permanently attached to or fastened to the earth. Yes or no? So now this will also fall under immobile property or not? So but they have told, they have, in case whatever, if you are receiving works contract, so you are into this business, you approached one works contractor, you asked him to provide, you have a piece of land, on that this kind of plant and machinery is required to be installed. So this works contractor told, okay sir, for the construction of this plant and machinery you need raw material, you need materials like this structures and all you need, this cement and all you need, bolts and all also you need. So I will bring all the material, I will supply the goods also, I will supply the services also. So this is also such an activity with regard to an immobile property which is involving supply of goods as well as supply of services. Can I also call this as works contract? Yes. Now this person told, sir, for erecting this plant and machinery, for supplying that plant and machinery to you, 50 lakhs it will cost, and 9 lakh rupees will be the GST, 59 lakh rupees will be the total amount. Now if you go by the restriction here, what we have told, works contract services in relation to in relation to an immobile property is blocked, and it will fulfill the capitalization criteria also. But the what department has given the relaxation is, we will define something called plant and machinery. If the immobile property whatever you are constructing falls under that plant and machinery definition, even though if it is qualifying as capitalization expenses in your books of accounts, still we will allow you to avail the input tax credit. Able to understand? So two exceptions I have told. Initially what did I say? Number one, IT works contract in relation to an immobile property, ITC is blocked. One exception, if you are providing works contract services in relation to an immobile property which will not qualify as capital expenditure, which will be treated as revenue expenditure, ITC is not blocked, ITC is allowed. Number two, in case if you are receiving works contract services in relation to an immobile property which will qualify as plant and machinery, on which a plant and machinery, even though it is fulfilling the capitalization criteria in your books of accounts, still on which you can avail input tax credit. Able to understand? This two you got it? Now one more case where ITC will be allowed in case of works contract services. Let us say for example there is one company. This company, on their land they want to construct some 5 floors building. Okay, now they have given that contract to one works contractor where he has agreed to supply all the goods, to supply all the services, and to construct this building for him. Okay, now what this works contractor has done is, he was currently occupied with other projects. He is having multiple projects. Let us say for example he got this contract for 1 crore rupees, but he is currently busy with another project. Now what he has done is, he went to another works contractor who is also into same line of business. He's a small works contract, not so big one. He's not such big enough to get big contracts. So what he has done is, he approached that works contractor and told, hey boss, I got this project. Instead of I doing it, I will subcontract it to you. So you do one thing, you construct that works contract on my behalf. You fulfill that. I will give you 90 lakh rupees. 10 lakh rupees is purely his margin. So now this person is also a registered person. He told, okay, 90 lakh rupees, I will provide the works contractor services to another works contractor who is also into same line of business. Okay, so On that he has also charged some GST. Now this works contractor, whatever works contract services that he has received from another works contract, that can he avail ITC on that? Yes, he can avail the ITC on it. Okay, able to understand? Now let me give you one more example. Let us say this builder is there. Actually works contract is a builder, main builder here. Now this builder need one office space. This builder need one office space. Now he has approached, he's already busy with many projects, he's doing construction and all for his customers. He approached one builder, another builder who is also a works contract, and he told him, boss, you please construct my own office building for me. I will give you, he told that, okay sir, I will do 50 lakh rupees is a consideration. On that, can he avail input tax credit? No. Why? Because he is undertaking it on his own account, for his own premises. What did I say? If you are receiving the services for making same kind of outward supply. So, but here you are receiving not for making an outward supply, for your own office building, then also you can't enjoy the input tax credit. So, once again, if I summarize all the discussion put together, initially they told works contract in relation to an immobile property, ITC is blocked. 3 exceptions I have told. Number 1, if it does not qualify as capitalization, if it does not qualify for capitalization in the books of accounts. Number 2, if it is falling under eligible plant and machinery definition. Number 3, if it is received by another works, if the services are received by a works contractor who is also into same line of business, who is using it for making same kind of outward supplies, in those cases ITC will be available. Okay, that's all. This is what done. So if we read it here, ITC is blocked on input services related to construction activities. It could be office, factory, building, except for builders, developers, contractors who are undertaking construction for others. Last example, what I have told. See, if you are a builder, for the construction of your own office, if you are getting works contract, then ITC will be blocked. But if you are a builder receiving the works contract services for providing construction for others, then you can enjoy the ITC. This one example I have given it. Next, ITC of construction services is not available when expenses are capitalized in the books of accounts. Routine activities like repairs and maintenance, renovation are eligible. This also I have told you, right? Next, capitalization of an expense does not depend on whether taxpayer intends to avail ITC or not, but it should depend on accounting standards and GAAP. This also I have clarified. So what are exceptions? ITC on works contract for immobile property is allowed when, if it is an input service for further supply of works contract service, same line of business, or if immobile property is what? Plant and machinery. So now you will get a doubt. So sir, what is works contract? This we have already clarified. It is a composite supply where goods are also involved, services are also involved in relation to an immobile property. What is an immobile property? This also we have covered the definition. Sir, what is construction? Construction could be reconstruction, renovation, addition, alteration, whatever it is. Now, one thing which we need to learn newly is, sir, what is the meaning of plant and machinery? You are telling if immobile property, is the video getting stuck or is it normal? Normal only? Okay. So, plant and machinery. Sir, what will fall under plant and machinery definition? You are saying that if immobile property falls under plant and machinery definition, ITC is available. Sir, but what can we treat it as plant and machinery? Let us see. It means apparatus, equipment, or any machinery which is fixed to earth by foundation or structural support. Sir, this is what the meaning of foundational structural support. So this is the structure, this is the foundation. Some apparatus which is fastened to the earth using some structural support or foundation. Next, used for making outward supply of goods or services, and this is what you are using it for, making outward supply of goods or services. Next, what is included? It includes foundation or structural support. Even this also will fall under plant and machinery definition. Sir, what is excluded from the plant and machinery definition? Land is excluded from the plant and machinery definition. Building is excluded from the definition of plant and machinery definition. Other civil structures like roof, sheds and all, that also will get excluded from the plant and machinery definition. Telecommunication tower, it is also not a plant and machinery. That means if someone is providing works contract for construction of a telecommunication tower, ITC will be blocked. Why? Because it will not fall under plant and machinery definition. And pipelines laid outside of the factory premises. So what they are saying, if they are laying any pipeline outside of the factory premises, that will also not fall under plant and machinery definition. If it is laid inside of the premises, then it will be a eligible plant and machinery. On that you can enjoy the input tax credit. That's what I am saying. Oil companies pipeline laid outside the factory premises, that will not be a plant and machinery, ITC will not become available. Within the factory premises, if they are laying the pipeline, that will form part of plant and machinery. On that they can enjoy the input tax credit. So let us say, for example, one ONGC is there. ONGC is having one big factory, a factory compound will be there. So within the factory, if they are laying the pipeline, that will fall under plant and machinery. If someone is providing works contract services regarding that laying of the pipeline, on that they can enjoy input tax credit. Let us say from this factory at a distant place there is a storage house. To that storage, if someone has laid down a pipeline, works contract services they have provided, this will not fall under plant and machinery definition. On that you can't enjoy the input tax credit. Okay, so the most important thing here to remember is what is not included in the plant and machinery definition. So what is not included? Land, building, other civil structures, and also telecommunication towers and pipelines laid outside the factory premises. They will not fall under plant and machinery definition, which means if someone is providing the works contract services in relation to that, ITC will be blocked. Okay, next. So now see, one person has got an interesting doubt here. So there is one company, they thought that they want to construct one building on their piece of land. See, if they receive works contract services, they have told under clause C that ITC will be blocked. Now one company thought one thing, let us do one thing. We have a piece of land, on that we want to construct a building. We will not approach any builder, we will not get works contract services. Whatever goods we require for the construction of the factory, we will purchase it. Whatever cement, steel and all required, that we will only purchase. We will only recruit labor, we will only directly bring the labor, and using the labor we will do our own construction. We will do our own construction. So doing your own construction means what? You will only buy the goods, you will only bring the labor, you will carry out the construction on your own account. See, let us take one simple house example here. You have a piece of land. There will be two popular terms in the industry, labor contract, material contract, something like that they say. So in case if it is a material contract, what you will do? You will just show him a piece of land. He will do the complete building for you. Material, bricks, cement, everything he will only supply. If it is a labor contract, that means what will happen? You have to buy all the goods like cement, steel, everything you have to bring. He will provide you only labor. That labor will work with your goods and they will construct the building. So the company has gone for second option, where they are purchasing their own goods and where they are receiving the labor services and they are getting the construction done. Now it is not a works contract, no. When it will become a works contract? In a single supply in relation to immovable property. If the supply of goods is also involved, supply of services is also involved, then what will happen? Then ITC will be blocked. It will fall under works contract. But it is not a works contract, no. Whatever goods they have purchased, for that they will get GST invoices. Whatever labor services they have got, for that they will receive the GST invoices. Now they can become, now since it is not a works contract service, they will be eligible to claim the input tax credit or not. But don't you think it is also something like overriding provision? Overriding or not? So that's why what the department has told us, not just on works contract. If you are carrying the construction on your own account, if you are carrying the construction on your own account, then also we will disallow the input tax credit on that goods and services. Then also we will block the ITC. But here also same three exceptions. In case if you are carrying out the construction on your own account, it is not qualifying as a capital expenditure, it is qualifying as revenue expenditure. No need to worry about it. You can claim the input tax credit. Or let us say you are a builder, you are buying the goods, you are receiving the labor services to do the construction for others. That is also like providing same kind of outward supply, right? So then also you can enjoy input tax credit. Builders can enjoy. On the other hand, if you are a builder, you want to construct your own building, for that purpose you are buying the goods, for that purpose you are receiving services, then also ITC will be blocked. So if you are doing the construction for others, for that if you are receiving goods and services, you can enjoy the input tax credit. But if you are constructing for your own, even builders, promoters also can't get the input tax credit for that. Similarly, if you are doing the construction on your own account for eligible plant and machinery, so what will fall under plant and machinery definition we have seen, no? So if you are buying the goods, if you are receiving the services separately for constructing a immovable property, but that immovable property falls under the definition of plant and machinery, you can enjoy the input tax credit. You able to understand? Now because of this entry, what happened? Either you give it at a works contract or you carry out the construction on your own account, still ITC has been blocked in both the cases. So that's what they try to say it here. So if you see it, 17 subsection 5 clause D, self-construction of immovable property. ITC is not allowed on goods and or services received by a taxable person for construction of an immovable property other than plant and machinery on his own account, even though such goods and services are used in the course or furtherance of business. You might be building that, you might be building your factory building, but still ITC will not be allowed. Exceptions. ITC on goods or services used in the construction of immobile property is available when for construction of plant and machinery, when value of goods and services is not capitalized, and when you are carrying the construction not on your own account. For others, if you are doing construction, you can enjoy the input tax credit. Next, so this is what, now we have one clarification on availability of ITC on ducts and manholes used in the network of optical fiber cables in terms of 17 subsection 5. See, here one doubt came before GST department. See, for this also I need to have one image. Let me check whether any image is there. I should have image for that. Just give me 1 minute. I have got it. See, we have this telecom companies now today. See, you want Wi-Fi connection, internet connection you want. So they will come and give you the connection, no? But for give you that connection, they need this kind of equipment. In the roads, sometimes they will conduct these kind of things. So now the doubt which has come before the GST department is when, let us say for example, some telecom company, Reliance Jio, so they are providing internet connection, Wi-Fi services they have started, right? Now if they want to provide if they want to provide this telecommunication services, they need to have these kind of underground network. Okay, so now let us say Reliance Jio, they need to have these kind of ducts and manholes for fiber optic cables, and this they have given it as works contract, or they are constructing their own. So now this is also immobile property. These are also something which are permanently attached to the earth. So if they have given this contract as a works contract, let us say for example, one person came forward and told, sir, we will do the ducts and manholes for you required for fiber optic cables and all, where we will supply all this material, we will supply the labor also. So now it is an immobile property. Now doubt which has come before the GST department is whether these things will fall under plant and machinery definition or not. Whether these things will fall under plant and machinery definition. Why? Because if it falls under plant and machinery definition, what will happen? They can enjoy input tax credit on works contract services, or even if they do their self construction also, they can enjoy ITC. If it doesn't fall under plant and machinery definition, then ITC will be blocked on that. So now the doubt is whether this ducts and manholes in this case of fiber optic cables, can they be considered as plant and machinery? Department gave a clarification that yes, it will fall under plant and machinery definition. Why? Because in the plant and machinery definition, they have given some exclusions. It is nowhere falling under that exclusion. What exclusions they have given? Land, building, other civil structures, telecommunication towers, and what else? Pipelines laid outside the factory. So it is falling under none of that. So that's why they have given a clarification that they will fall under plant and machinery definition. So if telecom companies, either they are getting these things done on works contract basis, or they are doing their own construction, buying the goods and services separately, they will still fall under plant and machinery definition, and they can enjoy the input tax credit. Clear? So that's what they have clarified. Ducts and manholes are key components in OFC network, with PVC ducts or sheaths housing cables and manholes serving as network nodes for installation and maintenance. Ducts and manholes are considered as plant and machinery under section 17 of the 17 as part of the OFC network for transmitting telecommunication signals. Also, they are not in the nature of land, building, civil structure, telecommunication towers, or even pipelines laid outside factory premises, which are specifically excluded from definition of plant and machinery. So ITC is not restricted in respect of such ducts and manholes used in the network of fiber optic cables under clause C or clause D. That means you can enjoy the ITC on that. So this is what clause D is about. Clear? So what kind of blocked credit discussion we had seen till now? 17 subsection 5, clause A, clause AA, clause AB. These are all talking about ineligible motor vehicles, vessels, or aircrafts. Then we have seen clause B, which is talking about food and beverages, catering services, beauty, healthcare services, cosmetic surgery, plastic surgery, or life and health insurance services. And not just that, it also includes membership of any training, fitness centers, etc. And also, what else we have seen? Leave vacation, leave travel facilities, etc. Travel facilities which have travel benefits which are provided to their staff, unless these activities are getting provided under some statutory obligation. Then clause C we have seen, if you are receiving any works contract services in relation to an immovable property, unless it falls under plant and machinery, unless it fulfills revenue expenditure criteria, or it is carried out for others. So clause D, not just works contract. If you are doing the construction on your own account of any immovable property where you are buying goods separately, services separately, then also you can enjoy the ITC. Then also ITC is blocked, sorry, except in a few circumstances. Clear? Now few more cases where ITC will be blocked. So now going forward, the remaining blocked credit cases are very simple. So let us try to understand it. Right. So 17 subsection 5 clause E, which says inward supplies charged to tax under composition scheme. Very simple, my dear students. If you are a registered person, you are buying the goods or services from a composition dealer. Composition dealer will not give you tax invoice. He will give what? Bill of supply. He has given 1 lakh rupees. You have received some supply from composition dealer for which you have paid 1 lakh. He will not collect any GST from you. But this composition dealer, every quarter on his turnover, 1% he will pay from his own pocket. No. Sir, can I calculate that 1% on my inward supply and take it as input tax credit? No. Why? Because what we have seen, composition dealer will break the input tax credit chain, where even he cannot take the input tax credit, even he can't pass on the input tax credit. So if you received any inward supplies from composition dealer, you will not be able to get any input tax credit on that. Straight away point, small point. So a composition scheme supplier cannot collect a tax. He will issue a bill of supply and pays a lump sum tax on his quarterly turnover, and tax paid under this scheme is not available as ITC. You cannot say, hey, anyhow my supplier will pay 1% from his own pocket. No, I will also calculate 1% on my inward supplies and I will take ITC. No, you can't do that. Then we have 17 subsection 5 clause F, my dear students. Here also there is a correction. So inward supplies received by an NRTP. I have already told you what do you mean by NRTP, right? So a non-resident person who doesn't have a place of business in India, if he is coming for a short term in India and making some supply, he will become NRTP. Now what they have told is even NRTP also can't avail input tax credit on his inward supplies, except in one case. So if you read it, you will get the clarity. NRTP has no place of business in India, but he will supply goods or services sporadically. ITC is not available on goods or services received, except for tax paid on imported goods, while ITC on imported services is blocked. See, even on imports are also subjected to GST, right? If he has imported any goods, only on that he can take input tax credit. On import of services also he can't take input tax credit. On locally purchased goods and services also he can't take input tax credit. Only on one item he can take input tax credit. What is that? Only on import of goods. If he imported the services also, he can't avail input tax credit. Locally purchased goods or services, whatever it is, on that ITC will be blocked. Only on goods imported, on that if he has paid any GST, that alone he can take it as input tax credit for that. Okay, that is what clause F. Then we have clause FA. Sir, what is that clause FA talking about? Clause FA is talking about input supplies used or intended to be used for CSR activities, corporate social responsibility. As we all are aware, those companies which are fulfilling the criteria given under section 135, as a part of their average turnover of the last 3 years, they will calculate in that certain percentage they have to spend it on social welfare. So now that is compulsion for the companies. Let us say, for example, there is one company which is getting qualified under section 135. They are required to meet the CSR expenditure. So in order to meet that CSR expenditure, let us say, for example, they have purchased some 1 lakh quantity of the notebooks. These notebooks they will go and distribute in the rural areas as a part of their CSR expenditure. On that 1 lakh notebooks, whatever they have purchased, they paid, let us say, for example, some 20,000 rupees of GST they have paid. Sir, can they avail input tax credit on that? No, ITC is blocked. Why? Because those goods were intended to be used for CSR related activities. You are doing it as a charity, no? When you are doing it as a charity, why once again you are asking for input tax credit? Why? Because if you go and distribute it later, you will not be collecting any GST on that. No outward supply, no output tax liability. When there is no output tax liability, why we have to give ITC? That's the simple logic here. So ITC shall not be available in respect of goods or services or both received by a taxable person which are used or intended to be used for activities relating to his obligations under CSR under section 135 of the Companies Act. Next, inward supplies used for personal consumption. If you are receiving any goods or services for personal consumption, straight away ITC will be blocked. Why? Because as we have already told, only when your goods are used for business purposes, on that only you can use ITC. If you are getting any supplies for personal consumption, ITC is strictly blocked there. So section 16 requires goods or services to be used in the course or furtherance of business to avail ITC. So section 17 subsection 1 restricts that portion of goods or services used for business purposes when used partly for business and partly for other purposes. In that case, apportionment is required. Even section 17 subsection 5 clause G blocks ITC on goods or services used for personal consumption. Once again, nothing but non-business use. If you are buying any goods or services, then also ITC will be blocked. See, the use for business case is stressed in so many provisions. First in 16 subsection 1 they have told, then they have told in 17 subsection 1 for apportionment, and one more point they are keeping it under 17 subsection 5 clause G also. At multiple places they have stressed the importance of using the supplies for business purposes in order to avail the input tax credit. Next one, free samples, gifts, goods lost or stolen. Once again, here also the logic is very simple. If you have purchased any goods, if there is any output tax liability, then ITC. If you have purchased any goods but you are distributing it as free samples without any consideration, if they are not collecting any GST on that, then there is no ITC also. If you have purchased some goods but that goods are stolen, so if the goods are stolen, that means they are never supplied. That means on that you will not pay output tax liability. When there is no output tax liability, there is no input tax credit also. Or goods are destroyed. Sir, I purchased some gift, sir. Those goods are destroyed, sir. See, if they are destroyed, you will not be able to make outward supply. If there is no outward supply, no output tax liability. If there is no output tax liability, no input tax credit also. So that's what they have tried to say it here. ITC in respect of goods which are disposed as gift or free samples, ITC will be blocked as no tax will be payable on its outward supply. Goods lost, stolen, destroyed or written off goods, once again blocked as they are not used in making a taxable supply. Once again, if it is given as gift, then also no output tax liability. They have defined the term gift. This definition is not important. So under Transfer of Property Act, they have defined the term gift here. So voluntary unconditional transfer without any consideration from donor to the donee. In common parlance, gift is a voluntary made without consideration and cannot be demanded as a right. And what is the meaning of free sample? That sample also they have defined. So whatever it is, if the goods are given as free samples or given as gift or given as goods lost or goods whatever you have purchased they were lost or stolen, since in those cases there will be no output tax liability, even ITC will also be not made available for you. So one simple logic, if there is no output tax liability, no input tax credit. Clear everyone? Able to understand? So now they have given a few clarifications here. But before that, one more clause we have 17 subsection 5 clause I, one more case where ITC is blocked. See here in this provision, in the study material itself, there is a wrong. There was an amendment in this area. They have told that whatever tax that you have paid under section number 74 up to financial year 22, 23, 24, ITC will be blocked. But earlier the provision was if you have paid any tax because of section 174, 129, 130. See, these are assessment cases where you are caught committing fraud. In case if your goods are confiscated, in case if your goods are seized, you are getting caught. That's why you are paying GST. Now once again, if they give you input tax credit for that GST, what is the use of catching you? So that's why what they have told is in case if you have committed any fraud, if your goods are confiscated and that's why you are paying GST, that we will not give it as a credit to you. That used to be the old provision, but there was an amendment which says that tax paid only under section number 74, that too up to financial year 23-24 ITC is blocked. That means what they have done is they have liberated the provisions. Even if you are paying the GST because you are caught, still we will allow input tax credit, because anyhow if you are caught they will impose penalty on you, interest on you, that in that way you are getting punished. So once again you should not be punished by not giving you ITC. So that's why this provision has undergone amendment, but in the study material itself they did not make the change. Even if it is even if they have made the change also, these sections are not applicable for you at CA inter level. What is section 74, section 129, 130? These are all assessment scrutinies and all that we'll anyhow try to discuss at our CA final level. At this level it is not going to be important. You can simply ignore it. Simply you remember it as if you have committed fraud and you have caught, that's why if you are paying any GST, that too up to financial year 23-24 only, that amounts of GST you can't avail it as input tax credit. But now the current provision is you can take it even if you have been caught. committing any fraud and all, and you have paid the GST amount, that GST amount you can enjoy it as input tax credit. Okay, so these are all the different clauses under which ITC has been blocked. Okay, so now associated with that, few circulars we have. Let us try to understand. ITC in the hands of supplier in respect of sales promotion schemes. See, sometimes suppliers will run various sales promotional schemes, like they will give you buy one get one free offer. So in those cases, when it comes to ITC, some confusion has come. So department has tried to clarify ITC in all that sales promotion schemes by way of one circular. Let us try to understand what is that circular about. Circular number 92 by 11 by 2019 blah blah blah. It has clarified the entitlement of ITC in the hands of supplier in respect of various sales promotion scheme. First one, samples and free gifts. Let us say for example a supermarket is there. If that supermarket is giving away free gifts or samples without charging any consideration, if it doesn't fall under supply, that means there will be no output tax liability. If it is not output tax liability, even ITC also will be blocked unless it qualifies as supply under schedule 1. See, sometimes even if you are permanently transferring or disposing of the business asset, or if you are giving free samples to your related persons or distinct persons, then it will qualify as supply, no? Then there will be output tax liability. Then ITC will not be blocked. So in case if you are giving any gift, in case if you are giving any free sample and without any consideration, if it is not a consideration, it will not be a supply. If it is also not falling under schedule 1, it is not supply at all. That means there will be no output tax liability. If there is no output tax liability, there will be no input tax credit also. Able to understand? However, if you are giving some gift, free sample, but somehow it is getting covered under schedule 1, even without consideration also it is getting qualified as supply, then ITC will not be blocked. Why? Because if it is deemed as supply, anyhow you will pay output tax liability on that, even ITC also will not be blocked there. So that's what they say, samples is supplied free of cost, do not qualify as supply under GST unless they are covered by schedule 1. And ITC is not available on inputs, input services or capital goods which are used for gifts of free samples unless it is qualifying as supply. Similarly, buy one get one free. Now here is an interesting discussion. See, sometimes supermarkets will give you offers, right? You buy one get one offer they will give. So what one GST officer has started harassing is, hey, if you buy 2 shirts at the price of 1000, if you buy one shirt will be free. So if you buy 1000 rupees for one shirt, 1000 rupees worth of one shirt, another shirt will be given free. Now what GST officer started harassing is, hey, you are giving gift. That means one shirt you are giving it for consideration. One shirt you are considering it for giving it for free of cost. So that one I will consider it as not a supply, because without any consideration you have given it. So with respect to that one shirt, whatever ITC you have taken, you have to reverse the input tax credit they have told. ITC is not available. Able to understand? 1+1 offer is going here. If you go and buy one shirt, another shirt will be free. So now what is the GST officer's argument? You are only making supply of one shirt. Other one you are giving it as gift. Since other one is given as gift, whatever ITC in respect of that one shirt is there which is given as gift, that you have to reverse it. That is not eligible. Now recipient's argument is different. What he is saying is, boss, when I am giving 1+1 offer, 1 I am not giving it as free, 2 I am selling it at the price of 1. 2 I am giving it as 2 I am selling it at the price of 1. See, when 1+1 offer is there, you can't go to the shopping mall and say, hey, 1+1 offer is there, no, anyhow 1 is free, no, I will not purchase the other one, give that 1 as free. Will they give it? No. So here what is the logic there? When 1+1 offer is running, that is 2 goods supplied for a single price. It is a composite supply. You can't say it as good has been given as gift or free of cost. So both are getting supplied here, but at a single price. There is no requirement to reverse any input tax credit. Why? Because supply has actually taken place. So that's what the department has clarified. So if you see it here, it can be at best be treated as supplying 2 goods for a single price. Taxability will depend on whether it is a composite supply or mixed supply. ITC shall be available to the supplier for inputs, input services and capital goods which are used in relation to the supply of goods or services or both as a part of such offers. Next, discounts including buy more, save more offers. Buy more, save more. That means if you buy 5 staggered discounts, something like that we have told, no, staggered discounts and all. If you buy 5,000, 5% discount. If you buy 10,000, 20% discount. So in case of those discounts, those are the discounts anyhow recorded on the invoice. 15 subsection 3 will become applicable here. They are those discounts which are given at the time of making supply only, and that value that will be excluded from the value of the supply. There is no question of whether ITC should be allowed, ITC should not be allowed. The question of ITC will not come here. No need to reverse any ITC, and discount amount can be reduced from the value of supply. So this is what they have clarified. Discounts offered to customers, including staged post-supply discounts, can be excluded from value of supply if they meet the conditions given under 15 subsection 3. With ITC available fully, no need to reverse any ITC on anything. Discount is altogether different. There nothing is going free. Basically, you are selling it at a lower price. That's all. But ultimately, supply is happening. So no need to reverse any ITC. Secondary discounts, as we have already told the same circular, secondary discounts are not excludable from the value of supply because they do not they are not agreed at the time of making of the supply. So secondary discounts will not be reduced from the value of supply. Here also there will be no impact on the ITC. So discounts not known at the time of supply offered or after supply cannot be excluded from value of supply, and they do not impact availability of input tax credit for the supplier. Next one. ITC reversal when return of time expired goods or goods are treated as fresh supply. Okay, I will tell you here what will happen. So this is one interesting scenario. I will try to explain it. After that we will wind up the session. Okay, listen. Little bit mind application you have to do. Here they have given only half circular. This is what sometimes ICA will do. Full circular is discussed at the CA final, but here they have given only half of the circular, but half of the circular discussion will be incomplete if we don't know the complete background. So I will tell you. See, medicine manufacturer will be there, no? Some pharma companies will be there. What these pharma companies will do? They will manufacture the drugs. And as you all are aware, every drug, if they have sold some drug, that will come with an expiry date. After that, that medicine should not be sold. Now, pharma company manufactures the drugs and they will be given to wholesalers. And these wholesalers will sell it to retailers. From the retailers, we go and purchase that medicine, showing the prescription and all. Now, generally what will happen is manufacturers will supply the goods to the wholesaler, or wholesaler will supply the goods to the retailers. But with a provision. What is that is, in case if those goods which are lying with the wholesaler or retailer, if they are remaining unsold and if the time is expired, so if the goods are sold, that drugs are sold to the manufacturer or wholesaler, by the manufacturer to the wholesaler, or for the wholesaler to the retailer, with a provision that if the goods are remaining unsold, those goods can be returned by the supplier. Returned by the wholesaler. Wholesaler will return to the pharma company, retailer will return to the wholesale company. Yes or no? So they can return it. So when they are returning it, there could be two options. These people, whoever are returning, we will take the wholesaler case only. These people who are returning, if the wholesaler is returning the goods because their time expired, there are two options. So now what can happen is, when the goods are returned, the pharma company can give credit note. The pharma company can give credit note. So initially when they made a supply, they will give what? Tax invoice. Now whenever the customer is returning the goods, they can give a credit note. But there is a problem with the credit note. See, generally if you give the credit note, that credit note, if you declare in the GSTR1, you will get back your GST. But there is a time limit. For credit note, there is a time limit, no? Maximum 30th of November following the end of the financial year in which the supply was made, not the credit note. But if you look at the drugs and all, they will come with minimum 2 years of expiry date. So if the wholesaler or retailer, if they are returning the goods back because of time expired goods, now credit note they can't issue. Why they can't issue credit note? Even they issue the credit note also, time limit has expired. They can't declare in the GSTR1 and they can't get back the GST liability, because maximum time limit is 30th of November following the end of the financial year, or date of filing of the annual return, whichever is earlier. So maximum, if you look also, even if the supply has been made in the month of April, maximum you will have 12 plus 7 only. Till 31st of March 12 months, till September 6 months, October, November 8 months, total 12 plus 8, maximum you have 20 months of time only. But medicines minimum come with 24 months of validity. So if you give the credit note, what will happen here? Even though if you give the credit note, you can't declare and you can't claim the ITC. So now in order to overcome that, there is one more option given. What is that one more option given? What one more option has been given is, these wholesalers can return the goods treating it as a fresh supply. They can treat it as a fresh supply. So if they treat it as fresh supply, now what will happen? They will give a invoice. See, let us say for example, initially sale has happened at 1 lakh rupees here. 18,000 rupees of GST has been paid on that. Initially what would have happened? This wholesaler would have paid 18,000 rupees of GST. Pharma company would have paid 18,000 rupees of GST to the government, and this person might have taken ITC, 18,000 rupees of ITC. Now when you are returning the goods, if you treat it as fresh supply, once again what will happen? This person, whoever is returning, he will give the invoice taking the original value only. So 1 lakh rupees on that 18,000 rupees of GST. Total 1 lakh 18,000. Now what is happening? So he will have output tax liability. How much? 18,000. But earlier he has taken input tax credit, no? Set off. Now earlier pharma company paid 18,000 rupees as GST. Now they will get it as input tax credit, no? Matched. Clear? Set off. This is what used to happen. Now sometimes what will happen is, in most of the cases, whatever goods which are returned to the pharmaceutical company, what the pharma company will do with that? What the pharma company will do with that? In most of the cases, they will change the expiry date and send it in the market, if it is not so critical. But in a few cases, what they will do, whatever goods they have returned, they will destroy. What they will do? That they will destroy. So in case if they are resupplying it, once again they will give the invoices. That is altogether a genuine case, different case. In case whatever time expired goods are there, if they are returned, but the pharma company is destroying it. Why? Because they are no longer fit for the market. If they are no longer fit for the market, goods should be destroyed. If the goods are destroyed, ITC should be reversed. ITC is blocked, no? Goods lost, stolen, destroyed. ITC will be reversed. So now they have to reverse the input tax credit. Pharmaceutical company, if they have destroyed the goods, they have to reverse the input tax credit. Now on what value they have to reverse the input tax credit? Now here there is an interesting thing. Now the question here is, now what pharmaceutical company started doing is, they have got 18,000 rupees of ITC, no, on fresh supply, but the goods are destroyed. Now they need to reverse the input tax credit. What pharmaceutical company started doing is, what ITC they have started reversing is, for manufacturing, when 2 years back when they have manufactured that drug, no, on that raw materials and all will be there, right? That proportionate GST they used to calculate and they used to reverse it. Now they are taking 18,000 rupees of ITC, but what they used to reverse, you know, at the time of manufacturing, they will buy the goods, no, that proportionate GST they used to be calculate, because that figure will be generally lower. This is after adding all the profit margins and all. But when you take it on the raw material, let us say instead of 18,000, the GST might come to 9,000 rupees only. So what these pharmaceutical companies have started doing is, they thought in an innovative manner. They are taking on this return supply full ITC, but they are reversing the ITC whatever they have. They are reversing the ITC on the original manufacture. Do you think it is correct or not? It is not correct. Why? Because government is at loss now. So you are taking 18,000 rupees of ITC, but you are reversing only 9,000 rupees. How come it is a fair game? So department gave a circular and told, so whatever reverse supply has happened, that ITC you have to reverse it. Not this initial lower figure, this bigger figure of ITC only you have to reverse it. Don't be over smart. Please be genuine. So that department has given a circular. Able to understand? But anyhow, no one is getting affected, no, here because of that. Here no one is getting affected, right? That's it. So that's what they try to say it here. So if you see here, let me see what they're trying to say. So circular number 72/46/2018, blah blah blah. So what they are saying, in case if the time expired goods are returned, either it can be treated as fresh supply, or we can give what? Credit note. I told you what is the problem with the credit note. So in most of the cases, they will make a fresh supply. Return of time expired goods by treating the same as a fresh person. In case if the person who is returning is a registered person, but he is an other than composition dealer, then what he will do, as I have told, he can return time expired goods by treating it as a fresh supply and issuing an invoice. The value of original supply may be taken as value of return supply. ITC is available to the recipient subject to conditions in section number 16, subject to all the fulfillment of the conditions. Now let us come to destruction of the returned goods. If the returned goods are destroyed by the manufacturer, he must reverse ITC availed on return supply, not on ITC attributable to manufacturer. So whatever ITC that is there on the return supply, that you have to reverse, not that you have to calculate on the manufacturer how much is there and all. That you should not reverse it. Only on the return supply, whatever value invoice is there, that ITC you have to reverse it. So this will happen in the case of if the registered person is other than composition dealer. Sir, what if the person returning the time expired goods is a registered person, but he has opted for composition levy? Then when he is returning the goods, what he will do? he will give a bill of supply without charging any GST. So if it is a bill of supply, no ITC will be taken, nothing needs to be reversed and all, you can ignore it. Why? Because that GST has already been paid to the government, so then you can ignore that scenario. So he must return the goods by issuing a bill of supply and pay the tax at composition rate. No ITC is available to the recipient. Since no ITC is available on return supply, even when they are destroyed also, no need to pay any GST. No need to reverse any GST. Next, what if the recipient is an unregistered person? He will simply return it by issuing some commercial document, not even tax invoice, not even bill of supply. Anyhow, there will be no GST, no reversal, nothing will be required. Okay, right. So even example, this clarification applies to return of goods for any reason. Initially they gave the circular for time expired goods, and at the end they have told that not just for time expired goods, when any goods are getting returned by the customer, treating it as a fresh supply, the same requirements of this circular itself will become applicable. So example also they have given, if a manufacturer has availed ITC of 10 rupees at the time of manufacturing of medicines which are valued at 100. At the time of return of such medicine due to expiry, ITC available to manufacturer on the basis of fresh invoice which is given by wholesaler. Let us say on that invoice if he is charging 15 rupees of GST, that 15 rupees is required to be reversed, not the ITC which you have availed on the manufacturer. Clear? Able to understand it? So this is what the concept regarding blocked credit. So with this we are done with 17 subsection 5 as well. Yes, we have covered significant chunk of portion. Remaining we have section numbers 18, we have credit in special circumstances. This credit in special circumstances I will try to explain. Thereafter the 4 cases will be there. So after that, how ITC is utilized, starting from heading 12.5, how ITC is utilized, and we will have one rule called Rule 86A. We will have another rule called Rule 86B. This all is required to be discussed along with payment of taxes chapter. There we will try to discuss. Okay. So only pending discussion in this chapter is that section number 18 we have. Credit in special circumstances, reversal in special circumstances. That we will try to understand in the next class. Thereafter, ITC questions we will try to solve. After that, we will start the payment of taxes chapter. As a part of the payment of the taxes, I will try to explain manner of utilization, Rule 86A, Rule 86B, everything will be explained as a part of that payment of taxes chapter. Understood? Right. So that's all for today. We'll see you in the next class. Bye. Okay. Welcome back. Good morning, everyone. Right. So we'll try to resume our discussion. So in the previous session, we have started discussing about the concept of input tax credit. In that also major portion we have completed. Majority of the discussion relating to the concept of input tax credit, majorly we are done with that. Some minimal content is left out from this chapter. If we could do that, we can successfully wind up this chapter, input tax credit. And having a quick recap in order to have the connectivity, having a quick recap of what and all we have covered as a part of our previous session. So what and all we have covered, my dear students. Number 1, first we have started our discussion with section number 16, which is going to contain 2 subsections. Subsection 1 is talking about eligibility, who is eligible to avail the input tax credit. They have told that every registered person on all goods or services whatever he has used or intended to be used for the business purposes, on that he can avail input tax credit. Thereafter we have seen subsection 2, which is talking about conditions which you are required to fulfill. There are various conditions which you are required to fulfill. Just being a registered person alone will not be enough. You need to comply with various conditions. And what are that conditions? Number 1, you should have some tax paying document. Then that amount should have been reflected in your GSTR 2B. Then after that, you should have received that goods or services. Next, then we have one more thing, ITC should not have been restricted. ITC should not have been restricted. Then we have clause C, supplier has paid the amount to government. Amount should have been paid to the government. So however, how this practically works out, we have seen initially you will be able to take the input tax credit whenever it has been reflected in GSTR 2B, but the government will wait for the supplier to file his GSTR 3B till the 30th of September following the end of the financial year. If not, it will be intimated to the recipients who are required to reverse the input tax credit by 30th of November of the same year. If not, they are required to reverse it along with the interest. Then thereafter we have seen clause D, in order to claim the input tax credit you should have filed your GSTR 3B, you should have filed it. So then only you can avail the input tax credit. Then we have subsection 3, which is talking about capital goods. When it comes to capital goods, so when it comes to the GST component, either you can take it as a GST input tax credit, or you can claim depreciation under Income Tax Act. That means either you can depreciate, either you can capitalize it, or you can claim the input tax credit, but not both simultaneously. Then we have 16 subsection 4, which is talking about maximum time limit within which input tax credit can be availed. So they have told that 30th of November following the end of the financial year, or date of filing of the annual return, whichever is earlier, within that time limit you are supposed to claim your input tax credit. And in this 30th of November following the end of the financial year is from the date on which the debit note has been given. In case if you are claiming input tax credit on the basis of debit note, so 30th of November following the end of the financial year in which debit note was issued, not the original tax invoice was given. And this time limit will not become applicable in case of re-availment of reversed input tax credit. So there will be various instances where you can re-avail your reversed input tax credit. There this time limits will not become applicable. And also in case of relevant financial year, for the purpose of self-invoicing, in case of recipient under reverse charge mechanism, the recipient will do the self-invoicing that year in which the invoice has been given. That will become the relevant financial year within 180 days. Or yeah, the two provisos we missed out for 16 subsection 2. Two provisos we have. So we have the first proviso, which says that if you have received the goods in lots or installments, until and unless you receive the last installment, it will not be deemed as if you have received it. So you have to wait till the receipt of the last installment to receive that, to claim the input tax credit. Then we have second proviso also, which says the payment to the invoice has to be made within 180 days. If not, the recipient is required to reverse the amount along with interest. You are required to reverse it. However, this condition of making the payment within 180 days will not become applicable in those circumstances where the recipient is required to take the input tax credit on RCM basis, and also in case of those deemed supplies without consideration mentioned in Schedule 1, and in respect of those portions which are added to the value of supply under 15 subsection 2 clause B. Right. So these are the provisos. Then also we had 16 subsection 6, where I have told in case if your registration is cancelled, thereafter if you have got your revocation of cancellation, as on the date of cancellation, if you are still eligible for availing input tax credit, if the time limit is not elapsed, then whenever you are filing all the pending returns within 30 days from the date of revocation of cancellation, whatever is the date of filing of the returns, that till that point of time you can be able to avail the input tax credit. So this is what the major provisions relating to section number 16. Thereafter we have started discussing section number 17. Initially 17 subsection 1 and 2 we have seen, which are talking about apportionment cases. So in case if you are making common inward supplies for the purpose of taxable zero rated as well as exempt supplies, as I have told, whatever proportion that is attributable to taxable supplies and zero rated supplies, on that you can avail input tax credit. Whatever portion that is attributable to exempt supplies, on that you can't avail input tax credit. Manner of apportionment we are going to discuss at the CFNL level. Similarly, if there are any common inputs, if you are using it for business purposes as well as not for business purposes, there also whatever proportion that is attributable for business purposes, on that you can take ITC. Whatever portion that is attributable for non-business purposes, on that you can't take the input tax credit. So then comes the most important part, blocked credit. So what are the various kind of goods or services or inputs on which ITC has been blocked? So clause A we have seen, motor vehicle designed to carry passengers having the seating capacity of less than or equal to 13. However, what is not included in the motor vehicle, that railways will not get included in the motor vehicle, and special purpose vehicle which will have a movement only within the factory or enclosed premises, or even a vehicle having less than 4 wheels but which is having an engine capacity of 25 cc only, they will not fall under motor vehicle definition. However, if these motor vehicles having a seating capacity of less than or equal to 13, this we call it as ineligible motor vehicles. But if you are using it for eligible purposes, then you can avail input tax credit. So what are that eligible purposes? If you are purchasing it with the intention of making a further supply, or for providing a taxable supply of outward supply of passenger transportation services, or taxable supply of imparting driving skills. Right. So thereafter, then we have seen one more case, clause A we have seen, which is talking about vessels and aircrafts. So vessels and aircrafts. So even on vessels and aircrafts also ITC has been blocked. But however, here also if you are using it with there are some exceptions to that. If you are making a further supply of it, or if you are making a taxable supply of outward transportation of passengers or transportation of goods, or if you are making a taxable supply of imparting navigation skills of a vessel or flying an aircraft. So then we have clause A B, which says that not in case if ITC is blocked on the motor vehicles, vessels or aircrafts, on that whatever general insurance charges you have incurred, servicing, repair and maintenance and all that also ITC is blocked. If ITC is allowed for you on the motor vehicle or vessel or aircraft, even on its maintenance, repair, servicing, general insurance also you can enable input tax credit. So here also a few exceptions are there. Manufacturers of these motor vehicle, vessel or aircraft, they can avail input tax credit, and general insurance companies which are providing the general insurance facilities in respect of that servicing, repair or maintenance, for that also they can avail input tax credit. Then clause B, we have, and one more thing we have seen, not just buying, even leasing, renting or hiring of that motor vehicles or vessels or aircraft is also on which on that also ITC has been blocked, unless you are engaged in the making the same category of supply, or either as an independent supply or as a part of a composite or mixed supply. And also if it is provided by an employer to the employee under some statutory obligation, then also ITC you can avail it. Then coming to clause B, in clause B we have seen various kinds of products on which ITC has been blocked. So to list a few: food and beverages, catering services, beauty services, healthcare services, cosmetic and plastic surgery, or what else, life insurance and business services. So however, if you are using these to make the further supply, to make the same category of outward supply either as a single element or a composite or mixed supply, then ITC can be allowed. Similarly, membership of health and fitness center or a club, on that also ITC is blocked. Travel benefits provided to the employees as a part of leave, travel concessions and all. So these things, if the employer is providing to the employee under a statutory obligation, then you can avail the input tax credit. So then we have seen clause C, which is talking about if someone is receiving works contract services in relation to construction of an immovable property, then ITC will be blocked. However, three exceptions are there. Number one, if the expenditure does not qualify as capital expenditure, then you can enjoy the input tax credit. And also if you are not carrying out that works contract, if you are not carrying out the construction on your own account, but if you are carrying the construction for others, that means you are into same line of business, and if you are receiving the works contract services, then you can enjoy ITC. And also if the construction, if that immovable property qualifies as an eligible plant and machinery, so and then also you can avail the input tax credit. So what is plant and machinery? We have seen exclusions are very important. It excludes land, building, civil structure, and also telecommunication towers and pipelines laid outside of the factory premises. And there we have seen one point there, ducts and manholes in OPs, optic fiber cables and all, so they will qualify as plant and machinery, on that ITC will be available. So then clause D, see if you are not receiving works contract services, but you are doing the construction on your own account by buying the goods and services on your own, then also ITC is blocked. However, here also exceptions are there. If it doesn't qualify as a capital expenditure, then you can avail input tax credit. If you are doing construction for others, then you can enjoy input tax credit. Or if that immobile property is falling under the definition of plant and machinery, then also you can enjoy the input tax credit. Then apart from that, few more cases where ITC will be blocked is, so a few small points we have seen. In case of those inward supplies on which you have procured from a person who is opting to pay tax under composition scheme, and those supplies which are received by NRTP, except he can avail input tax credit only on import of goods, not on import of services, not even on local purchase of goods and services. And whatever input supplies used or intended to be used for CSR activities, then that also ITC is blocked. And whatever inward supplies which are getting used for personal consumption, ITC is blocked. And then we have seen a few things and all. And apart from that, tax paid in fraud cases, detention, confiscation, on that also ITC is blocked. So there at the end I have explained one small concept where manufacturers, wholesalers, they return the time expired goods to the manufacturers, treating it as a fresh supply. They have two options actually: either they can return it and the supplier can give credit note, but there is a problem with the credit note. If the time limit gets expired, you can't declare and get back your credit. So in most of the cases, what they will do is, in case of time expired goods, they will try to make that return by treating it as a fresh supply and giving a fresh invoice. So now when the invoice has been given by a registered person, not a composition dealer, he will give a tax invoice, and the manufacturer will be able to take the ITC. If the recipient is a registered person who is a composition dealer, he will give a bill of supply, but no ITC can be taken. If he is an unregistered person, he will give some commercial document, no ITC can be taken. And even after receiving the goods of time, after receiving time expired goods, if the goods are destroyed by the manufacturer, then he need to reverse the ITC. Which ITC he will reverse? Whatever ITC which is there in the invoice, in the fresh by treating it as fresh supply invoice has been given, no. So on that, whatever ITC is there, that you have to reverse, not the ITC which you have availed while manufacturing that time expired goods and all. Clear? So that I gave you examples to make you understand. So that's what the circular they have given it. Fraud cases, we can take the ITC. Only restriction is if in case if you have paid the GST because of section number 74 as a consequences of section number 74 up to financial year 23-24. After that you can avail input tax credit. Up to 23-24 there is a restriction. Even if you paid GST under section 129, 130 also, now that has been lifted, you can avail input tax credit. But anyhow, as I have told, this is not relevant for us. Why? Because 74, what is 129, what is 130, we don't have it as a part of our syllabus. That is something which we will learn it as a part of our CA final. Factory, reverse it in the next month. Whenever you are whenever your goods are stolen or destroyed, then what you should do is, when you are filing your GSTR1, you have to reverse your input tax credit. Okay, so that will be added. Simply have to add it to the output tax liability of that particular month, so automatically it will get reversed. Next one. So now we will try to talk about, so till now we haven't discussed anything new, just we have revised whatever content we have learned in our previous sessions. So now what we will try to do is, we will try to proceed further with the next section, section 18. It is going to talk about some special circumstances. So what special circumstances section number 18 is going to talk about is, it is going to talk about a few special cases where we will become eligible for availing input tax credit. It also talks about few circumstances where we will be required to reverse our input tax credit. It is going to talk about a few circumstances where, in a few circumstances, there are some special cases where we will become eligible for taking input tax credit. And also it is going to talk about those circumstances where our ITC we have to reverse it. Whatever ITC we have to reverse it. So we are going to talk about first those circumstances where you can avail input tax credit, and those circumstances where you have to reverse your input tax credit. So I will tell you about few cases. First I will tell you what are those circumstances where you become eligible to take the input tax credit. Let us say, for example, there is a business person. He became liable for registration. Let us say on some date he become liable for registration. On 1st of January 2026 he become liable for registration. Now let us say if he is making supply, if he has submitted an application, within 30 days, if he has submitted an application within 30 days, then what will happen? Then later on he will get the registration certificate, right? Now your registration will be effective from this date. Yes or no? Your registration will be effective from this date. Now what they are saying is, see, till the time you are not liable for registration, you might have purchased various goods, no? You might have received various input services, you might have received various capital goods and all, but you would not have availed GST till this point of time. Why you will not have availed GST? Because we are not registered. One of the essential conditions for taking input tax credit is what? You should be a registered person. So till the time you became liable for registration, you would not have got your registration certificate. You are not registered person, you would not have taken input tax credit. Now since you got the registration certificate, since from whichever date you became liable for registration, one day before that, whatever goods which are there in stock, that you determine, on that we will give you input tax credit. Quite logical, no? So in case if you become liable for registration, we are asking you to pay the GST from that date onwards. But from that date, whatever supplies you are making, for that you are using some goods, no, on which you have paid GST earlier, no, but which you have not paid which you have not availed ITC on that, because you don't have registration. So after you become liable for registration, whatever goods you are supplying, on that you will pay GST. On that goods, what you will do, you will use those goods which are there on stock, no? So you should be given an opportunity to avail the input tax credit or not. Yes, so that option has been given. That is one case. Or in some cases, second case where a person can avail input tax credit is, let us say you are not liable for registration, but you are coming forward and taking the voluntary registration. You're a good person, no? You are coming and saying, boss, I'm making an application for registration. They will grant you the registration certificate. So you have got your registration certificate here. From this date going forward, you will make the payment of the GST of output tax liability. So here also they have given an option, 1 day before whatever goods that you have in your stock, on that we will allow you to take the input tax credit. You have to calculate. So basically what will happen is, I will tell you procedural formalities and all, but just I am telling you a few cases. Similarly, let us say for example, there are few more cases where you have to pay, where you will be allowed to take the input tax credit. So let us say you are a composition dealer. You are a registered person, you have taken composition dealer. So if you are a composition dealer, you will be given an advantage. What advantage will be given? You have to pay the GST at a discounted rate of 1%, 5%, 6%, whatever it is. But as a compensation for that, they will not allow us to take input tax credit. Why? Because we are saying that we will pay a discounted rate. So that's why they will not allow you to take the input tax credit. Now, if my turnover exceeds that criteria, 1.5 crores or 75 lakhs, I have to migrate myself to new scheme, sorry, regular scheme, or I might voluntarily opt out of the regular scheme. Yes or no? So in case if from the composition scheme, if I am coming into regular scheme, if I have opted for regular scheme, so going forward, whatever supplies I will be making, I will be paying the GST on it. So here also they have told 1 day before that, whatever stock you have, determine the GST on that, we will allow you it as a input tax credit. And one more case where the department has allowed us to take the input tax credit is, in case if you are making exempt supply. If you are making exempt supplies, let us say for example, you are making exempt supplies. I told you that whatever goods which are exempted, and whatever inputs that you are using it for the purpose of that exempt goods, on that ITC will not be allowed. Why? Because there is no output tax liability. So you are manufacturing certain goods, that goods are exempted. So since output goods are exempted, even whatever inputs that you have consumed for that goods, on that you would have been restricted the ITC. You can't avail the input tax credit. Now, apportionment. In the apportionment point, I have told you this, right? In the case of apportionment, I have told, in case if you are using inputs exclusively for the exempt goods, on that fully ITC will not be available. Now let us say for example, these goods used to be exempted by way of a notification, but now the government amended the notification and they have made that goods taxable now. They have lifted that exemption. Previously they used to give exemption to one of the product, but in the recent times government has amended. They have brought up some amendments, some because of the GST council meeting, they have lifted that exemption. Now what will happen? Those exempted goods are going to become now taxable. That means going forward, after the effective date, whatever outward supplies you will make, on that you will be liable to pay the GST. So here also department told 1 day before, whatever goods you have in your stock, you determine either in the form of raw material, either in the form of finished goods, either in the form of semi-finished goods, whatever it is, determine that stock. On that you calculate what is the ITC attributable. That ITC we will give it to you as a input tax credit. Clear everybody? So this in very simple terms, but there are some nuances associated with that, so we'll try to talk about it in detail. So I've told you 4 circumstances where the department will allow you to take the input tax credit. What are they? Number 1, if you are a person liable for registration under section 22 or 24, within 30 days if you have made submitted an application for registration, then you have the right to enjoy the ITC on your stock. That's what I told. If in case if you don't submit an application within 30 days, you will lose that right to take the input tax credit. There is no such option. So if in case if you become liable for registration and if you want to avail, see, getting input tax credit is a privilege. No, it's an advantage actually. So if you don't submit an application within 30 days after you become liable for registration, then you can't enjoy the input tax credit. Similarly, if a person is coming forward and getting the voluntary registration. Third one, a person has been migrating from the composition dealer to regular dealer. Number 4, whatever supplies you are making, though they have become taxable from exempted. They have been converted from exempted category to taxable category. These are the 4 cases where the government, where the GST department will allow you to take the input tax credit. But as I have told, there are some nuances associated with it. So let us try to complete the provision now. So first one, entitlement of ITC at time of registration or voluntary registration or switching to regular tax paying status, or coming into tax paying status from exempted category. So these are the 4 cases where you become entitled to take the input tax credit, and these provisions are contained in section 18 subsection 1 and 18 subsection 2. Let us see. The credit on inputs held in stock contained in semi-finished goods or finished goods held in stock and capital goods at the time of registration or voluntary registration or coming into regular tax or tax paying status is available in the following manner. Sir, in what manner? Let us see. First case, person who has applied for registration within 30 days from the date on which he became liable to registration and he has been granted a registration certificate. That means you are a genuine person, you become liable for registration within 30 days, you submitted an application for registration. Now what will happen? Sir, you get a right to avail the input tax credit. On what I will get the input tax credit? Let us see what they are saying. Inputs means what? Goods, basically whatever you purchase, and that inputs which are held in the form of stock. Let us say, for example, I'm a garment manufacturer, ready-made garments manufacturer. So now I became liable for registration. I applied for registration. Now for being me as a ready-made manufacturer, ready-made garments manufacturer, what will be generally my inputs? When I say inputs, I'm only talking about goods, my dear students. Inputs means only goods. I told you at the beginning, input services, capital goods. I'm only talking about inputs. So if I'm a manufacturer of ready-made garments, my inputs could be cloth, fabric, buttons, thread. So these all will be my stock. So you need to determine what inputs which are there in the form of stock. That means I have not yet processed it. Or what inputs are contained in semi-finished goods. Let us say, for example, as on the date of registration, so I have some 50 shirts which are not fully complete, semi-finished. So in that 50 semi-finished goods also, this inputs will be there, cloth will be there, buttons will be there, thread will be there. Determine that inputs which are there in the form of semi-finished condition. Or even in my stock, what could be there? Finished goods could be there. What finished goods? A completely manufactured shirt will be there. So my inputs, whatever are in the as it is form, so inputs which are in stock, or whatever inputs which are contained in the form of semi-finished goods, or whatever finished goods are there. So in respect, determine all that stock, determine all that inputs. On that you calculate what is a proportionate ITC. Able to understand? So I will give you one example. Let us say, as on the date of and on what date you have to see? Day immediately preceding the date from which he became liable to pay the tax. That means one day before he became liable for registration. So let us say, for example, he became liable for registration on 30th of January. One day before that, day immediately preceding. That means as on 29th of January midnight. So I need to determine. Let us say, for example, I have some 100 meters of fabric, and I have some 500 boxes of buttons, and I have some 100 reels of thread. So these are my inputs which are in the form of stock. Then I have some 50 semi-finished shirts. Now in these 50 finished shirts, how much meters of cloth is there, how many buttons are there, how many reels of thread has been used, that also I will determine. Then I have completely finished goods. That means completely manufactured, some 500 shirts I have in stock. Now in these 500 shirts, how much quantity of raw material is in the form of either that could be in the form of cloth, or that could be in the form of buttons, or it could be in the form of thread reels. I have to determine. Now for these stock, how much ITC is attributable? What will be the proportionate input tax credit in respect of that stock? That figure also you have to calculate. Sir, how can I calculate that ITC, sir, in respect of the stock? How you can calculate that ITC is on the basis of the invoices. So let us say, for example, you have purchased recently, you have purchased total 500 meters of cloth. So you might have paid 100 rupees per 100 rupees for each meter. On that, let us say, for example, total 10,000 rupees of GST you have paid. But in that invoice is for how much quantity? Total 500 quantity. But out of that, how much I have only in stock? 100 meters I have in stock. So for 100 meters, proportionately you have to calculate. So 10,000 divided by 5. That's all, no? So 10,000 is for total 500 meters, but I have only 100 meters in stock. So if you calculate, it will come to 2,000 rupees. So 2,000 is the ITC attributable for inputs which are in stock. So like that, on the basis of the invoices, you have to calculate the proportionate amount of input tax credit. Sir, what if invoices are not available? What if invoices are not available? On the basis of market prices, you have to calculate. So to the extent possible, if invoices are there, on the basis of invoices you have to calculate. If invoices are not available, you have to determine that ITC attributable on the basis of prevailing market prices. So whatever it is, inputs which are held in stock and inputs which are contained in semi-finished or finished goods held in stock. When? As on which date? As on the day immediately preceding the date from which he became liable to pay the tax. On that day you have to determine that ITC, and that ITC you can enjoy it as input tax credit. Here you have to pay one close attention. They are allowing you to take input tax only on inputs. On input services you will not become eligible to take the input tax credit. Even on capital goods also you will not become eligible to take the input tax credit. The act has given you permission only to avail input tax credit in case of first case. In case if you are applying for registration within 30 days, then you become eligible to avail input tax credit only in respect of inputs which are in stock, not in respect of input services, not in respect of capital goods. So that you will not be eligible to avail it. Next, second case. If you come to the second case, one more case where you become entitled to avail the input tax credit is person who is not required to register but obtains voluntary registration. Here also this person, he will be able to enjoy input tax credit with respect to inputs held in stock, inputs contained in semi-finished or finished goods which are held in stock. Sir, as on what day, sir? Day immediately preceding the date of registration. So on that day, whatever stock is there, here also only you can enjoy input tax credit on inputs, not on capital goods, not even on input services. Clear, everybody? So that is the first two cases. But here also one small thing is they have told. So what they have told is ITC to be availed within 1 year from the date of issue of tax invoice by the supplier. So here what they are trying to say here is, let us say for example 31st of January 2026. This is the date when I become liable for registration. One day before 30th of January 2026, I will determine the stock. Let us say for example I have determined some 1000 quantity of fabric is there as on the stock. Now for this 1000 quantity I have to attribute the ITC, no? So for that I need to check invoice. When this invoice has been given by the supplier, I need to check. So let us say for example, if I purchase, let us say for example this 1000 quantity was from the entire purchase of 5000 quantity. I made a purchase of 5000 quantity. Out of that 4000 I have consumed. As on 30th of January I have in stock only how much quantity? 1000 quantity. Now I have to check what is the tax invoice date of that 5000 quantity. So supplier would have given me the tax invoice, no? So what is the date of that invoice? I have to check. If that from the tax invoice and from this date, if the duration is within 1 year, you can take the input tax credit. However, if the duration is more than 1 year, that means by the time whatever items which are there in your stock, by the time you have got the invoice, more than 1 year has already expired, then you can't enjoy the ITC of that, because it is a very old stock. No, might be really it is not lying. Customer might be cheating just to take the input tax credit. So that's why what they have told us, in case if the invoice is older than 1 year, don't take the ITC. Able to understand? Let us say for example this 5000 quantity was purchased on 1st of January 2024. So from the date of the invoice till the date you are claiming the input tax credit, more than 1 year has expired, so that you can't enjoy the ITC. Clear? Able to understand, everybody? So that's what they try to say here. ITC has to be availed within 1 year from the date of issue of the tax invoice by the supplier, which indirectly means that in case if 1 year has expired from the date of the purchase of that items which are there in your stock, from the date of invoice of that items in your stock, then you can't enjoy the ITC with respect to that inputs. Okay, next case, third one, registered person who ceases to pay composition tax and switches to regular scheme. Now he can also enjoy input tax credit on what? Inputs which are held in stock, inputs contained in semi-finished or finished goods held in stock, and even he can enjoy the ITC on capital goods also. For the first two cases, ITC is not allowed on capital goods, but in the third and fourth cases they will allow you to take the ITC on capital goods as well. So you can enjoy input tax credit on inputs, and also you can enjoy the input tax credit on capital goods. But here also, if you pay close attention, input services is not there. Input services anywhere you can't avail ITC. Okay. So now, sir, as on what date, sir? As on the day immediately preceding the date from which he becomes liable to pay tax under regular scheme. So day immediately preceding the date on which you are liable to pay the tax under regular scheme. On that date, how much quantity of inputs you have in the form of stock, in the form of semi-finished goods, in the form of finished goods, and also how many capital goods you have. That capital goods also you can determine on that. Whatever ITC is there, that ITC you can avail. But here also there is one more thing. I will come to the explanation one more point. So fourth point. So what is one more case where you become entitled to take the ITC? Registered person whose exempt supplies become taxable supplies. That person also, he can take inputs which are held in stock and inputs contained in semi-finished or finished goods which are held in stock, which are related to such exempt supply. Why? Because only on that exempt supply related inputs only ITC would have been blocked. So you determine whatever inputs which are held in stock and inputs contained in semi-finished or finished goods which are held in stock related to such exempt supply. And also you determine capital goods which are exclusively used for such exempt supply. That means here also they are giving you option to avail ITC on capital goods. Sir, as on which day? Day immediately preceding the date from which such a supply becomes taxable. Clear? See, here also when it comes to inputs, 1 year condition will remain common. 1 year condition is going to remain the common. That is only for inputs. Now when it comes to capital goods, they are saying that for capital goods I can take ITC. No, even if it is more than 1 year also you can take the ITC on capital goods. But here they say that complete ITC whatever you have paid on capital goods you can't avail it, and you have to take a reduced ITC. You become eligible to take reduced input tax credit. And how to calculate that reduced ITC, sir? Reduced by 5% per quarter of a year or part of the year from the date of the invoice. So from the date of the invoice you have to see how many quarters have been passed till that date you are claiming the registry, till that date you are claiming that ITC, and for each quarter 5% you have to reduce it. I will tell you. So let us say a person has been migrating from composition dealer to regular person. Let us say this person is migrating as on 25th of April 2026. One day before, which will fall on what? 24th of April 2026. Now, as on this date, whatever inputs which he is having in the form of stock, semi-finished goods, on that he can avail input tax rate. That will be calculated on the basis of invoice. At a 1 year condition also we will try to check. And since he can also avail ITC on capital goods, let us say for example as on this date he is already having a capital good. Let us say he purchased some plant and machinery worth 10 lakh rupees worth of plant and machinery he has purchased, on which he has paid 1,80,000 rupees of GST. So total 1,80,000 rupees of GST that he has paid on capital goods. Sir, can he avail input tax credit of complete 1,80,000? No. We have to determine what is the date of invoice of that capital good. Let us say for example the date of invoice is on 2nd of February 2024. 2nd of February 2024. See here 1 year condition will not become applicable. 1 year condition is for only inputs. So now you need to see from the date of invoice till this date you are claiming the ITC, how many quarters have been passed. Either for every quarter or part thereof. Even part of the quarter also will be considered as full quarter. So, and I have told in GST quarters are always fixed. What are they? If I start from Jan to March, April to June, July to September, October to December. So you have to determine how many quarters have been completed. So first it is forming part of, it was purchased in Jan 24. So Jan 24 to March 24, 1 quarter over. April to June, another quarter over. So 1 quarter, 2 quarter. Next, July to September, 3rd quarter. September to October to December, 4th quarter. So till here December 24. Similarly till December 25, another 4 quarters. Yes or no? So 4 plus 4, 8 quarters are over till 31st of December 2025. After that, Jan 2026 to March 2026, 1 quarter is over. And in April 25 days, April 24 days, part of the quarter will also be counted as full quarter. That means in the 2026 2 more quarters are over. So total how many quarters? 10 quarters. Now for each quarter 5%. If I calculate how much it will be? 50%. So from this 1,80,000 you have to reduce 50%. If I reduce 50%, how much you will get it? 90,000 you have to reduce. Balance 90,000 only you can avail it as input tax credit. You able to understand? Clear and comfortable? So that's what they try to say it here. So but you have to remember, ITC on capital goods can be availed only in 2 cases, not in all the 4 cases. Able to understand? First 2 cases is what? If you become liable for registration and if you are applying for registration within 30 days. In that, and also if you are taking voluntary registration, in those 2 cases you can avail ITC only on inputs. Whereas the remaining 2 cases, in case if you are converting from composition scheme to regular scheme, or if your taxable supplies are, or if your exempt supplies are becoming taxable supplies, then you can avail ITC on inputs as well as capital goods. Clear? So inputs, when it comes to inputs and all, ITC will calculate it on the basis of invoice, if not on the basis of market prices. And also when it comes to inputs, you have to avail the ITC within 1 year from the date of invoice. That means if more than 1 year has elapsed from the date of invoice of that inputs which are held in stock, then you can't avail the input tax credit. And in case where you can avail the input tax credit on capital goods, there you have to take the reduced input tax credit. And how to calculate the reduced ITC? You have to reduce that by 5% per quarter, or part of the quarter you have to calculate. For each quarter 5% you have to allocate, that portion you have to reduce it, and that much amount you can take it as input tax credit. Clear? Able to understand? Right. So let us proceed further. Some a few note points here. In the above cases, registered person must file an electronic declaration on common portal within 30 days, which can be extended by the commissioner or commissioner of the state of GST or UGST from the date he becomes eligible for ITC. Sir, how he has to claim the ITC, sir? What mechanism he has to follow? What mechanism, how it will practically work out is, this is the date when he is eligible to take ITC, no? So from this date, within 30 days, you are required to submit a GST ITC 01. There will be one statement called GST ITC 01. Within 30 days you are required to submit. So he must file an electronic declaration within 30 days from the date he becomes eligible for ITC. Sorry, from the date he becomes eligible means he will become eligible from here. On whatever date he is migrating, from that date he will become eligible. So from here we have to calculate 30 days. From that date, within that 30 days, what you are supposed to do? You are required to file one form, GST ITC 01. See, what details will be there in the GST ITC 01 is these details only. How much inputs are there in the form of stock, how much inputs you have in the form of semi-finished goods, how much inputs you have in the form of finished goods, like that one form will be there. And how much capital goods you have, how much ITC you have paid, like that one statement will be there. All that details you have to fill and electronically submit on the common portal only. Once you log in and you can submit it. Next, sir, if I am not submitting within 30 days, gone, you are not eligible to avail the input tax credit. So only within 30 days when you submit that GST ITC 01, then only you can avail input tax credit. Next one, if the total ITC claim, CGST, SGST, UGST or IGST put together, if the total is exceeding 2 lakhs, so either it is inputs or inputs and capital goods all put together, if in the GST ITC 01, if you are claiming ITC of more than 2 lakh rupees, in those cases just submitting the statement in GST ITC 01 alone will not be enough. Even that should be certified by a practicing chartered accountant or cost accountant also, because you are making a huge claim now. 2 lakh rupees of ITC you want to claim, more than 2 lakhs you want to claim by way of GST ITC 01. In those cases, department don't want to rely only on self-declaration. They will ask you to get a certificate from a chartered accountant or a cost accountant certifying that yes, they are really eligible for this much amount of input tax credit. They have calculated it correctly or not. So they need to get one certificate from the practicing chartered accountant or cost accountant. So here there is an opportunity for us to make some money from here. Clear? So this is what regarding cases where you become entitled to take input tax credit. So 4 special cases we have seen. See, when I have told these 4 cases, now automatically in opposite cases you will be required to reverse the ITC also. So in which cases you are required to reverse the ITC? First they will talk about 2 cases. 18 subsection 4 will talk about 2 cases. See, in case if you are converting from regular person to composition dealer, if you are converting from regular person to composition dealer, see, in case if you are into a regular person, you will be collecting output tax credit, you would have availed input tax credit. But suddenly if you are shifting to composition scheme, if you have opted for composition scheme, you will not be able to, you will not pay any output tax liability, no. That means whatever ITC which is lying 1 day before you have converted to composition scheme, that need to be reversed or not? Yes. Not just that, one more case. See, your supplies used to be taxable supply. Your supplies used to be taxable supply. But in case if your taxable supplies, government has released a notification and called and made in an exempt supply, then what will happen? So then also ITC should be reversed. Sir, what if the registration is cancelled? If the registration is cancelled, what amount you are liable to pay? That we have already discussed in the registration chapter. There I have already told you. On inputs you are required to pay the amount of GST. On capital goods also 5 years life you have to take. You have to consider life as 5 years. Exactly. So there whatever we have seen, all that provisions we have already seen here. So since we have already covered that in the registration chapter, we are not going to talk about it here. We are only going to talk about the remaining 2 cases. Right. So let us see what do they say. Reversal of ITC on switching to composition levy or exit from tax paying status. So if you read it here, reversal of ITC is required where registered person who availed ITC switches to composition levy or when his supplies get wholly exempted from tax. ITC on inputs should be reversed proportionately based on corresponding invoices. So there also you have to determine the stock and all as usual. On the basis of invoice you have to calculate the ITC, that you have to reverse it. Or in case if invoices are not available, market prices you have to take. Sir, in case if you are reversing the ITC on the basis of market prices, that must be certified by a practicing chartered accountant or cost accountant. Government is very cautious here. So in case if you are reversing on the basis of invoice, well and good, we accept. But in case if you are reversing, because government is getting the money here, so that's why they are very cautious. In case if you are reversing the ITC on inputs, not on the basis of invoice, but on the basis of market prices, we need certificate from a practicing chartered accountant or cost accountant. And in case of capital goods, ITC involved in remaining useful life of capital goods should be reversed on pro rata basis. Even capital goods also, same formula, whatever we have applied. So take the capital goods useful life as 5 years. To determine whatever is the useful life, and whatever useful life is there, for that proportion, whatever ITC you get, that ITC you have to reverse it. Let us say, for example, my capital goods I have some 1 lakh amount of ITC on it. And from the date of purchase of that ITC, I have already used that ITC for 4 years. 4 years I have already used. Now how I have to calculate the ITC to be reversed? So assume the useful life as 5 years. That means total 60. So out of that, how many years are over? 4 years are over. So 12 4s are 48. Total 1 lakh. So 1 lakh into 48 divided by 60. If you calculate that, you will get the figure. That amount you have to reverse it. When I say reversal, how should I reverse it? What do you mean by reversal here? If you have already input tax credit balance, that amount you will set it off. See, basically what will happen is this amount of inputs, ITC with respect to inputs, ITC with respect to capital goods, treat it as your output tax liability. If you have enough of input tax credit already lying in your ledger, that ITC you will adjust it. If you don't have enough of ITC, what you should do? Pay in cash. That balancing work you have to pay it in cash. So that's what they say. The registered person must debit reversal amount either to their electronic credit ledger. If you have enough of ITC, they will reverse the existing ITC balance. Or if there is no enough of ITC, then what will happen? Cash ledger for inputs and in capital goods on the day immediately preceding the date of switch or exemption. Here also, if you pay close attention, my dear students, even in case of reversal of ITC also, they are only asking you to reverse ITC on inputs and capital goods only, not on input services. You are not required to reverse any ITC on input services. Sir, sometimes what will happen is I will have excess ITC. But the amount which I am required to reverse is lower. When I calculated the attributable ITC and all, amount attributable is lower. Let us say, for example, I have 1 lakh rupees of ITC balance. But when I have calculated the amount which is required to be reversed, that came to only 80,000 rupees only. So 80,000 I will reverse. What will happen to the remaining 20,000 excess ITC? That will lapse. Nothing, you can't do anything about it. That will automatically lapse. However, if there is a shortfall, let us say, for example, ITC is 50,000 only, but amount has come to 80,000, which I am required to reverse. That balance 30,000 you have to pay cash. There also you can't say lapse, not lapse. There you have to pay cash. But in case if excess ITC is left out after reversal, that excess ITC will automatically lapse. You can't do anything with that. So balance of ITC, if any, lying in the electronic credit ledger, lapses. And when it comes to cancellation and all, that we have already covered, just here we have given difference. Cancellation of registration also requires reversal of ITC on inputs and capital goods on day immediately preceding the cancellation. Amount to be received is higher of amount computed as per 18 subsection 4 and 6, and also output tax payable. This we have already covered in the registration chapter. No, they will be deemed to have been supplied. Once again, clause C of schedule 2 of part schedule 2. Yes or no? So the same thing here, just a reference. So I will simply write it here, refer registration chapter. Okay. See, these are not that important. Don't get into that reversal, availment, how much component and all. They will not ask a question from you. Even at CFNL level, they are not asking the question. Even why? Because even in the practicality also, this is a very complicated matter. Even when we are practicing also, when registration cancels, this conversion happens, it is going to create a lot of mess actually. So this is little bit professionally also, it will take a lot of time. Even in exam perspective also, they will not ask this question. But I have explained my part. I have made you examples, I have given you examples and made you understand. Section 18, keep it as last priority. Section 18, you keep it as last priority. Next, amount payable on supply of capital goods or plant and machinery on which ITC has been taken. Let us say, for example, you have purchased a capital good. On that capital good, you have availed input tax credit. Later, if you are selling that input tax credit, later when you are selling that capital goods, will that also be considered as supply? If you have purchased a plant and machinery on which you have taken input tax credit, later if you are selling it, will that be considered as supply? Yes. If it is with consideration, 7 subsection 1 clause A. If it is without consideration, 7 subsection 1 clause B. Permanent transfer or disposal of a business asset on which ITC is availed. Part 1 schedule 1. Yes or no? Right. So yeah, section 7 subsection 1 clause C, sorry. So that will also become supply. So if you have taken any input tax credit on the capital goods, later if you are selling of that capital goods, that will become a supply. On that also you are required to pay the GST. No, sir, how much amount of GST I am required to pay? How much amount of GST I am required to pay? So they say that if capital goods or plant and machinery on which ITC has been taken or supplied outward by the registered person, he must pay an amount that is higher of the following. What is higher of the following? Which figure he has to pay? ITC as reduced by 5% or part thereof per quarter, or tax on transaction value. That means you are selling that plant and machinery. No, on that you will have the value. No, on that applicable rate of GST will be there. No, whichever is higher, that much amount of GST you are required to pay. See, here I have given you one point. This you ignore it. This is a bit confusing. See, when it comes to reversal of ITC, at some places they have given reduced, consider it as 5 years. In some cases they have told you to reduce it by 5% per quarter. Yes or no? So that's why I told it is quite confusing. Even in practicality also there was a dispute. It is still a point of debate. See, I will tell you where, what and all they have given. Once again I am telling you, not important for the examination perspective, just I am clearing out. See, if registration cancelled, if registration is cancelled, then you are required to reverse ITC on your what? Capital goods. Similarly, I have told one more thing now. What is the one more thing which we have seen now? Sale of not sale of capital goods. Switching from composition levy. Switching from composition levy to regular person, or your taxable becomes exempted. So in these cases, you are required to reverse the ITC. Yes or no? In these cases, you are required to reverse the ITC. How much amount I am required to reverse? How much I am required to reverse? On capital goods, you have to reduce the, reverse the reduced input tax credit. How to calculate that reduced input tax credit? Take useful life as 5 years. Take useful life as 5 years. Determine balance life. Determine balance life generally in months. Then you have to calculate proportionate amount for the balance life, and that much amount you have to reverse. Okay. In case if you are making sale of capital goods, then also you are required to pay the GST. Here not reversal, you are required to pay the GST. In these cases, how much amount you will pay? Reduced ITC or output tax payable, whichever is higher. But here how to calculate reduced ITC? Here they say you have to calculate by way of reducing 5% per quarter or part thereof. Here you have to follow this for the purpose of reduction. Same like availing ITC. So very confusing. So at two places, in case if your registration is getting cancelled, or if you are migrating from composition scheme to regular person, or your taxable goods are becoming exempted. In those cases, you have to reverse your ITC on the capital goods, not complete ITC, reduced ITC. How to calculate that reduced ITC? By taking the useful life as 5 years. In case if you are selling the capital goods, then you are required to pay the amount of GST, but there you have to pay the amount which is reduced ITC or output tax payable on that transaction value, whichever is higher. And in this case, how to calculate the reduced ITC? 5% per quarter or part thereof from the date of the invoice. Able to understand? So no need to remember once again, just I am giving you the reference here. Okay, right. So ITC pertaining to remaining useful life of capital goods should be computed separately for CGST, SGST and IGST. Nothing but for under ITC, under each head you have to calculate separately. How much ITC for IGST component, how much is reduced ITC. For CGST component, how much is the reduced ITC. In case if it is SGST, how much is the reduced ITC. For each component you have to calculate separately. Next, if the remaining ITC exceeds the tax payable on the transaction value, excess amount must be paid and added to the output tax liability, obviously. So whichever is higher, we will determine that amount you are required to pay. You can pay it either by debiting your electronic credit ledger or by electronic cash ledger. If the amount is falling short, that amount you have to compensate in the form of cash payment. Next, if in case of refabricatory bricks, molds and dies, jigs and fixtures are supplied as scrap, the taxable person may pay tax on transaction value. See, once again, if it is a normal capital good, when you are selling it, you are required to pay what? Reduced ITC or output tax payable on the transaction value, whichever is higher. One exception is there. See, what is that exception is? Refractory bricks, molds and dies, and also jigs and fixtures which are used as scrap. See, certain kind of capital goods they have told. Let us say, for example, if I have to tell you molds, have you heard? Mold is what? It is actually a shape. Let us say, for example, I want to get one utensil. I want to get one bowl. I want to make steel bowl. You will have a mold. So in that, some melted metal will be poured, and that will take the shape of that mold. These molds are also capital goods. No, they will keep on using it. Now, what will generally happen to these molds is, even if one small hairline scratch also comes in the mold, then on every utensil whatever they are making out of it, that scratch will become available. So that's why in case of this molds, refractory bricks or dies and all, these are such capital goods where even they can't sell it at higher values. For example, if my plant and machinery I want to sell, I can sell it at they can fetch a reasonable value. But when I am selling these kind of items which are refractory bricks, molds and dies, jigs and fixtures, these are such capital goods which will be generally capitalized. But for example, if I have to take that mold which is having a hairline kind of crack or something, if I have to go and sell it in the market, no one will buy it as a capital asset. They will buy it as a scrap only. They are capital goods, agreed, on which you have availed ITC, agreed, but you can't sell them as a item. You have to sell it as what? Scrap, because it will not be useful for anybody. See, for those kind of capital goods also, if I say when you are selling it, reduce a proportionate amount of ITC or determine output tax payable, whichever is higher, obviously what will happen? Reduced ITC figure only will always be very large, but they will not be able to fetch with that much value for these small capital goods. They will be generally able to sell it as scrap only. They will not fetch any value. And if we ask them to go by the normal rule of reduced ITC or output tax payable, whichever is higher, it will be a unnecessary trouble for them. So that's why what they have told in these kind of capital goods, ignore the first point, reduced ITC, you ignore it. Whatever value you are fetching for that scrap, on that whatever is the applicable rate of GST, that much if you pay, it will be enough. No need to do the comparison. Understood? Able to get the point? So that's what they're trying to say here. So if refractory bricks, molds and dies, jigs and fixtures, if they are getting supplied as scrap, these are also capital goods only, but they will not be sold as capital goods when they want to sell it. They have to sell it as scrap only. In those cases, the taxable person has to pay the GST on the transaction value. No need to compare it with the reduced ITC figure. Okay, next. Then ITC, transfer of ITC on account of change in constitution of registered person. So sometimes what will happen is the constitution of the registered person can change. How it will change? Sale can happen, a person can sell his business to the new entity. Amalgamation can happen, two entities can be merged into a single entity. Demerger can happen, where a single entity will get divided into new entities. Sir, in case of sale, like sale as a big going concern, or in case of amalgamation, or in case of demerger, or other kind of business organizations, if you take sale, let us say I am a registered person, I am selling my business to another registered person as a going concern. Sir, what about my ITC? I will sell. ITC is also my asset or not? It is also a kind of asset in the balance sheet. Sir, will I have to transfer that ITC also in the case of going concern? Yes. But just book transfer alone will not be enough. ITC is something which is lying in my electronic credit ledger, which is maintained in my GSTIN number with the GST department. So now what you should do? You should submit one statement and request that whatever GST I have, that ITC I am transferring it to another person, to the buyer. His GSTIN number you have to mention, and if you furnish one statement, then from your electronic credit ledger it will get transferred to the electronic credit ledger of the transferee. Similarly, amalgamation is happening. A Limited, B Limited, both are getting amalgamated into AB Limited. Now these two entities will no longer exist. Sir, what about ITC? Whatever they are having, will it go waste? No, it will not go waste. What they can do, once again, they can file a form and they can transfer the ITC to the newly formed company. They can continue to enjoy that ITC. Same in the case of demerger. Let us say some XY Limited is getting demerged into X Limited and Y Limited. Sir, in case if the demerger is happening, this company will no longer exist. Sir, will its ITC go waste? No. What this entity can do, it can transfer its input tax liability to the resulting entities. To the resulting entities it can transfer. So like that, whenever there's a change in constitution of the business is happening, ITC can be transferred. So that's what this provision says, 18 subsection 3. Simple, that's all, nothing much is left out here, just we have to read and finish it. In case of what? Sale, merger, demerger, amalgamation, lease, transfer or change in ownership of the business, etc., ITC remaining unutilized, which is lying in your electronic credit ledger, can be transferred to new entity, provided there is a provision for transfer of liabilities also. That means it must be transferred as a going concern. So when we consider transfer as a going concern, even when the liabilities are also transferred, then only we treat it as going concern. So here what indirectly they try to say here is ITC can be transferred only when the entire business along with assets along with the liabilities, it is getting transferred as a going concern, then only ITC can be transferred. Transfer of change in ownership includes changes due to death of a sole proprietor. If the sole proprietor expired, his business is carried on by legal hires, then also they have to take new registration. Sir, what about the expired person's ITC? No issue. You can submit as a legal hire, you can submit the statement on behalf of your expired family member, and they will transfer the ITC to the newly registered person. Next. Now here a doubt should come. Sir, amalgamation okay, sale okay, in demerger, one single entity is having ITC, but that is required to be transferred to two entities. In what ratio, sir? In what proportion, sir? They will say in proportion of value of assets. You will divide the single entity into two entities. Now resulting entity will have their value of assets, right? So you have to determine the ratio of the value of the assets. In that ratio, you have to distribute the ITC. So that's what they say here. In case of demerger, ITC will be apportioned in ratio of value of assets of new units as specified in the demerger scheme. Said formula for apportionment of ITC shall be applicable for all forms of business reorganization that results in partial transfer of business assets along with liabilities, not just demerger. Every other kind of scheme where one entity is getting divided into multiple entities, there we will determine what is the value of the assets. In that value of the assets ratio we will calculate. In that ratio we will transfer the ITC. And here when I say value of the assets, value of assets means value of entire business assets irrespective of whether ITC has been availed or not. Now you will get a doubt, sir, 100 crores, let us say for example 2 crores assets are transferred here, 1 crore assets are transferred here. Sir, in this 2 crore asset, one vehicle of 50 lakhs is also transferred. On vehicle, motor vehicle ITC is blocked, no. Sir, should I exclude it while calculating the value of assets ratio? No, you should not exclude it. Value of assets, when I say, it includes value of all assets. Whether you have availed ITC or not doesn't matter. Take the full value of assets. In that value of the assets, you calculate the ratio. In that ratio, you distribute it. Next one. Registered person must submit changes in constitution in GST ITC 02. when you want to avail input tax credit, you will file GST ITC 01. No. In case if you want to transfer the ITC, you have to submit one statement. Which statement? GST ITC 02 on the portal along with the transferee. Sorry, on portal along with a certificate from a practicing chartered accountant or cost accountant, irrespective of the amount, my dear students. So in case of availing ITC, only when the amount you are claiming is more than 2 lakh rupees, then only you are required to submit a statement from practicing chartered accountant. But in case of transfer of ITC, irrespective of the amount, that statement has to be certified by a practicing chartered accountant, cost accountant. So once you submit the form, at the time of transferring the ITC, even you will mention recipient's GST also, no. So that will get reflected. Once you submit it, upon acceptance by the transferee, unutilized ITC is credited to their electronic credit ledger, and they must record all the transferred inputs and capital goods also in their books. So if I am a transferor, I submit GST ITC 02. Now it will be shown, it will, when the recipient, when the transferee logs into his common portal, it will show him there, you have been transferred them ITC. Now he has to approve it. If he has to accept it, if he accepts it, that ITC will get automatically transferred to his electronic credit ledger. Now just getting the ITC alone will not be enough. Even that capital goods inputs in respect of which you are availing input tax credit, even that should also be recorded in your books of accounts. Why? Because only when assets are transferring, then only ITC will be transferred. No. So you have to make sure that ITC and inputs and capital goods are also getting recorded in the books of accounts of the transferee. Next one. One more last case, Rule 41A. Transfer of ITC on obtaining separate registration for multiple places of business within a state or union territory. So once again, distinct persons. Let us say, for example, I am a registered person. I am having a place of business in Karnataka. Previously, I used to have 2 units. Let us say, for example, I am having a unit in Bangalore. I am having a unit in Mysore. I am operating multiple places of business within the same state under single registration. I can do it now. But now what I have done is, for Mysore place of business, I want a separate registration. I took what? Separate registration. Sir, earlier both of the registrations used to operate under single registration. Now you would have one corpus of ITC which is applicable for both units. Now if for Mysore unit, if you are taking separate registration, sir, what about ITC to that, sir? No issue, you can transfer, you can bifurcate in case if you are taking multiple registrations within a same state or union territory. If it is multiple states, definitely you would have already taken separate registration. There the question will not come. Here the question will come. Right. So if you see it, under section 25, taxpayer can obtain separate registration for multiple places of business within a state or union territory and transfer unutilized ITC to newly registered places of business. Once again, in what ratio, sir? Value of assets once again. So you will determine when that registration you are separately taking for both units, what is the value of the assets you have to determine. In that value of assets, you have to bifurcate it. Here also, when I say value of assets, it means value of entire assets irrespective of whether ITC has been availed or not. And registered person should furnish all the prescribed details on the common portal within a period of 30 days from obtaining such separate registration. Same logic. So once you have obtained separate registration within 30 days, that old registration will submit one form. Upon acceptance of such details by the newly registered person on the common portal, unutilized ITC gets credited to his electronic credit ledger. Able to understand? That's all. So this is what regarding section number 18. So where we have covered, so what and all we have covered: few cases where you become entitled to take the input tax credit, few cases where you are required to reverse the ITC. In case if you have sold the capital goods, how much amount of ITC you are required to pay. Thereafter we have seen transfer, if there is change in constitution, how to transfer the ITC. Or if you are a distinct person, if you are becoming a distinct person within the same state, you are taking separate registration, then also you can transfer the ITC. So all that procedural formalities we have covered. Understood? So now we have a few things like how ITC is utilized, and also we have some 2 rules like Rule 86A, Rule 86B we have. This is something which I will be able to cover it when we take up the discussion of payment of taxes, which we are going to do it immediately after doing the question bank of this chapter. So we'll try to do the question bank of this chapter. After that, we will try to do payment of taxes. Along with the payment of the taxes, I will try to cover these points also. Okay, so just go through the quickly once the chapter for 5 minutes. We'll try to do the question bank. So now what we will try to do is we'll try to do the questions from MTPs, RTPs and past exam papers. We'll try to do. Let us see. Veda Limited procured the following goods in the month of January 2024. Goods which are used in constructing an additional floor of office building. The cost of construction of additional floor has been capitalized. GST paid is 92,000. Tell me. 15 subsection, is it blocked or available? Blocked. Not works contract, no. That is 17 subsection 5 clause C. But even though it is not works contract, if you are buying goods or services separately for carrying out the construction on your own account, then also ITC will be blocked. So under 17 subsection 5 clause 2, this ITC will be blocked. Trucks used for transportation of inputs in the factory, they can avail it. Inputs used in trail runs, they can avail it, no issue, no problem. Next. Confectionery items for consumption of employees within the factory, no, not available unless it has been paid under some statutory obligation. They did not say anything here. Content used for making foundation and structural support to plant and machinery. It will be a plant and machinery. I have told in the plant and machinery definition, even that structural and foundational support also will get included. So this I can avail it as input tax credit. So 11,000, 8,350, 9,550. Next. Muscat Motors Private Limited, herein referred to as MMPL, a dealer of motor vehicles registered in Udaipur, Rajasthan, has given an ex-works contract to Ganesh Traders registered in Ahmedabad, Gujarat, for manufacturing 10 units of pickup vans. Ex-works contract means what? This manufacturer, after he has manufactured, he will make the goods available at the factory gate. At that point of time itself, taking it is the recipient's responsibility, which is Muscat Motors. Ganesh Traders manufactured the vans and handed them over to the transporter on behalf of the MMPL. On which date? On 29th of April only. At the factory gate, they are handed over for transportation. And delivery on its part is complete at its factory gate in Ahmedabad. Further, it raised the invoice for all 10 pickup vans even on the same day. MMPL has recorded the invoice in its books of accounts also on the same day. Price of the vans ex factory was 10 lakh rupees each, excluding GST at the rate of 28%. Okay. However, the vans were physically delivered by MMPL at its showroom in Udaipur, Rajasthan on 2nd of May. When they are handed over for transportation, 29th of April. But when the actual receipt has happened, 2nd of May. And payment was also made on the same day. After the payment, 2 vans got damaged. First of all, when he would have availed ITC, would he has availed the ITC on 29th? Will he become eligible to avail ITC on 29th of April or 2nd of May? Not 2nd of May. It was he will be eligible to avail it on 29th of April only. Ex-works contract. We have raised one circular. No, in case of ex-works contract, when the goods are handed over to the transporter, at that point of time it would have been deemed to be received, so he becomes eligible. He would have taken full ITC on 29th of April itself. But later invoice was also given on the same day. They have told it in the question, right? Invoice is also given on the same day. Okay, initially he would have claimed the full ITC. Thereafter, what happened? After the payment, 2 vans got damaged completely in a fire in the showroom in the first week of May, and thereafter they were written off in the books in the month of recipient. Now it has to be reversed. Initially you have claimed ITC, but later if the goods are stolen, lost, destroyed, even ITC is also gone. Why? Because you are not going to get any GST on that. Output tax, since there is no output tax liability, there will be no ITC. Discuss the availability of ITC on the pickup vans to MMPL with reference to the provisions under the GST law. In which month MMPL is eligible to avail ITC on the purchase of vans, and how much ITC is available in respect of the vans. So first they would have availed ITC on all. So 10 lakhs each, right? So 10 lakhs into 28%, 2.8 lakhs into 10 vehicles, total 28 lakhs they would have claimed. But out of that, 2 vehicles they have to reverse. So 2.8 lakhs into 2, how much it will come to? 5.6 lakhs they have to reverse it. So we will read this answer slowly. Section 16 subsection 2 clause 2. Section 16 subsection 2 clause B provides that registered person shall be entitled to take the credit of any ITC or both unless he has received the goods or services. However, there is an explanation which has been added which says that bill to ship to transaction. One explanation will talk about bill to ship to transaction. Further, it has also been clarified by way of circular that in case of X works contracts, the property in the goods will be passed to the dealer upon handing over the said goods to the transporter at his factory gate, meaning that the goods can be considered to have been received to the registered person through the transporter by the supplier at his factory gate, and the supply of the goods can be considered to have been fructified at the factory gate, has been finalized at the factory gate. So he can claim the ITC. In the given case, since the contract between Ganesh Traders and MMPL is X works, pickup vans are considered to be received by MMPL on 29th of April itself. That is the date on which the vans are handed over to the transporter, even though they are physically received in the month of May. So initially on 29th of April, full ITC of how much? 28 lakhs can be availed while filing the return for the month of April. Subsequently, after the receipt of vans in the showroom, 2 vans were destroyed due to fire and written off in the books. So ITC in respect of such vans which was already availed has to be reversed while filing the return of the next month. That is, while you are filing the return for May month, then you have to reverse it. Since ITC on the goods which are destroyed is not available in accordance with the section 17 subsection 5. So amount of ITC which has to be reversed 5.6 lakh. Total ITC which have been originally availed 28 lakhs. So from the 28 lakhs, if you take out the 5.6 lakhs, the net amount is something which you have availed. Next, Purvi Limited, a registered supplier of various goods and services, provided the following information pertaining to GST paid on inward supplies for the month of August 2024. Purchased goods which are used for activities relating to his obligation under corporate social responsibility referred in section 135. Can she avail ITC on that? No, ITC is blocked on that. Purchased raw material worth 5,90,000 including GST in 5 lots. 3 lots of raw materials worth 3 lakh excluding GST received in the current month, and remaining lots will be received in the month of September. Only when you receive the last lot. Company paid for outdoor catering expenses for the lunch at its factory employees during the lunch hours as per the policy of the company. There is no legal obligation to provide such lunch facility. As per company policy they are doing it, but not as per statutory obligation. So ITC is blocked. Purchased goods from home traders. All goods and invoices were received by the company in August 2024. But one invoice out of this have not been furnished by the supplier in the statement of outward supplies or using IFF. The GST paid on the invoice was not furnished as 50,000 rupees. So net 1,50,000 you can avail it. Why? Because 150,000 invoice was not declared in the GSTR1. Purchased raw material to manufacture finished goods. Such finished goods to be sold to potential customers under scheme of buy one get one free. In case of buy one get one free, any restriction on ITC? No restriction on ITC. You can avail full ITC. Why? Because you are not giving anything free. You are selling 2 at a price of 1. Full ITC you can avail it. And so compute the net ITC available to Purvi Limited for the month of August with necessary explanation and treatment of all items and all. Okay. Yeah, 3 lakh rupees they can avail it. Next one. Veer Trading Private Limited is a registered entity under GST in Jaipur, Rajasthan. It is engaged in wholesale trading of various sports items. VTPL furnishes the following information regarding its inward supplies during the month of February. As per the policy of the company, the managing director of the company has taken membership of local sports club on behalf of the company. The company paid fees monthly. Applicable rate of GST is 6%. Can they avail ITC? No, they can't avail ITC. Why? Because membership of a club, unless membership of a club or health or fitness center, unless it is a statutory obligation. They did not mention anything regarding statutory obligation, so they can't avail ITC on this. Next one. Purchased equipment from original equipment manufacturer on X works contract basis on 26th of February 2025. As per the terms of the contract, the goods are to be delivered by the OEM to the transporter on behalf of the recipient at supplier's place of business. The OEM handed over the equipment to the transporter on 28th of February 2025, but equipment physically received by VTPL on 2nd of March. Applicable rate of GST is 6%, each of CGST and SGST. So tell me, so it was handed over for transportation on 28th of February, but they were physically received on 28th of March. In which month I have to avail ITC? In February only. Even they are asking us to calculate the ITC for the month of February only. So 10 lakh rupees is the total value. So on that 6% CGST, 6% SGST. So which will come to 1,20,000, 60,000 and 60,000. 1,20,000 total. Next. On 5th year of its incorporation, VTPL arranged an event from Mr. Daksh Event Company for customers meet. Daksh event company charges single price of event as 2,50,000, which is inclusive of food charges of 40,000 as per the general trend followed by the industry. Applicable rate of CGST and SGST is 9% each for event and 14% each for food supply. No, that is not what they are talking about. If they are engaged in the same kind of supply. But here we are talking from the perspective of a company. Company is the recipient of the service. So they are receiving the event management services. And in the event management services also, ITC is blocked on what? 17 subsection 5 clause B, food and beverages, catering, beauty, it is. But your total event management charges are what? 2,50,000. But in that event management, what is also included? 40,000 rupees of food is also included. Food is also included. So, but here there comes a twist here. So now you will get a doubt. So where is that point which I want to explain? Okay. Right. So let us see. So they have arranged an event for customers meet. Daksh event company charges single price of event charge of 2,50,000, which is inclusive of food charges as per the general trend followed by the industry. Applicable rate of CGST and SGST at the rate of 9% each for event and 14% each for food supply. So now they have received services. Okay, for the purpose of customers meet, they are conducting an event management which includes food also. On food, ITC is blocked, but they have charged a single price. No, 2,50,000, a single price they have charged. So are we able to bifurcate it? We are not able to bifurcate it. They have told it as a general trend. General trend is 40, but they did not give the bifurcation here. No. So here the what will be the prominent supply, predominant supply? Event management services you can take it, but here food they are saying. Just 1 minute. Food is only 40,000. They did not add any point here, right? So that means they have blocked the ITC on that. So on the 2,50,000 ITC they have blocked altogether. So might be their contention is when you are conducting a business meet and all, so they might have felt that the need is for food is the primary. Food could be the predominant nature. So treating that as predominant nature, it will be treated as supply of food only. So outdoor catering services you can call it. So considering that as a predominant nature, what they have done on this entire ITC, they have blocked it. Okay, so this is where they have given in the past exam question they have given. Okay, next. So on this ITC they have blocked it. So but once again this point is very vague here actually. So if you ask me, as I could have told, event management is altogether a different broad category of services. It is altogether a different broad category. Event management means which contains so many things. So event management itself is a different category of service. On that ITC should have been allowed according to me. If you ask me, it should have been allowed. But once again, here they should have given an explanation also. It is a point of debate. That's why in the suggested answer they have skipped the explanation also. They don't have any valid reason to give. No, so that's what they have done. They have skipped this part altogether from the suggested answer because they are unable to give the explanation here. If you consider event management as a principal supply, then you can avail the ITC. Food, yeah, so they're all naturally bundled. It is all a part of event management. No, so the restriction is there on food and catering, but it is not there on event management. Like that event management specifically they have not mentioned it, right? That's why. Yeah, you can avail on entire 2,50,000. You could have availed the ITC, but yeah, this is anyhow like this. Sometimes I will try to play the games with you, right? Purchase a truck for transport of goods. Rate of CGST and rate of SGST is 14% each. Can I avail ITC? Transportation of goods, yes, but something they're trying to say, claimed 2,10,000, that is claimed that GST component as a depreciation under the Income Tax Act. So if the depreciation has already been claimed, can I avail ITC? No. Yeah, what is this 15%? Okay, so only some component they have availed. Paid on truck is available. It is since depreciation has not been claimed. Claimed 2,10,000 rupees. Okay, 14 lakh is the total value, right? Depreciation is how much? Rate of GST means how much? 14 and 14. That means 28%. Yeah, 14 lakhs is excluding of taxes. at the, no, first let us calculate the GST. Rate of CGST and SGST at the rate of 14% each. 14 and 14, 28. So how much it will come to? 3,92,000 rupees is the total amount of input tax credit. But what they are saying, they have claimed 2,10,000, that is 14 lakh rupees at the rate of 15% as a depreciation under Income Tax Act. So which component they are saying here actually? Only the value part they have taken. So total value is how much? 14 lakhs no here. So they claimed 2,10,000 rupees as depreciation under the Income Tax Act. Only on, okay, only on value they are saying. Fine. Okay, on 14 lakhs 15%. On the cost they have claimed the depreciation. That's what they meant here. Very good. So on the cost itself they have considered the depreciation. That means on ITC component they have not charged any depreciation. So that means full ITC I can avail it. 1,96,000, 1,90,000, 1,96,000 full ITC I can avail it. So if I do the calculation, total 2,78,500 is going to be my depreciation. But as I've told, this point is highly debatable here. Event management services, this is highly debatable point. That's why even they have skipped the explanation from the suggested answer as well. Right. Next one. Rule 86B. Rule 86B I did not discuss it yet. I have yet to explain the rule 86B. That anyhow we will try to say it in the payment of taxes chapter. Now this is same like illustration number 1. Total 100 invoices are there. Out of that 80 invoices are only submitted. So same like a question which we have already covered earlier in the first illustration. So that's all for this. With this section 18 only the question. Theory questions. There are only theory questions from section 8, as I've told you. No, so that is a highly complicated issue. At CA final itself they don't ask the question on how much component you have to reverse it, how much you have to do it. That all reversal related questions they will not ask you even at the CA final level. It will be too much if they ask you for CA inter level, but still on a safer side we have explained all the concept. So whether they will ask the question or not, it's up to their choice. Even if they ask the question also, we are all equipped. We can write the answer. Right. That's all.